everything's working. It looks like it is. It says I'm live. It says I'm live in GoToWebinar and in YouTube. So welcome to the show, everybody. It's good to have you. I'm sure you look fantastic today. My name is Jacquie, as you probably know after 5 days of just hanging out with me. Thanks for being part of the session. If you're just joining us for the first time now, welcome. This is the Metastock Traders Conference. It's good to see you. I'm going to start with a little bit of a legal disclaimer, just some general instructions and all that kind of stuff. So today's demonstration is designed to instruct you on using Metastock and its accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information today should be considered as investment advice or the solicitation to buy a security. All right, very cool. As we get started today, I want to encourage you to ask any questions you've got. If you're watching us in GoToWebinar, there's a little questions box. You click on it and you just type your question, and boom, we see it. We'll do our best to answer it. If you're watching us on YouTube, just chat in the thing. Feel free to, if you have any questions, comments, all that kind of stuff, let us know. If you are watching us on YouTube, there's a couple things I want to point out. One, like and subscribe. It helps a great deal, and you'll be able to see all these events that we do. We do them quite frequently. Two, I will be, in just a second, pinning a link to the thing. Throughout the day today, we will be giving away prizes, free books, software, services, all kinds of stuff. If you're registered, you'll be entered to win the prizes. So I think that covers everything. I want to say thank you to Stocks and Commodities magazine. I've talked about them all week. I could talk about them for another week. They're a great magazine. They've been publishing since 1982. If you get a subscription to Stocks and Commodities magazine, you'll get 17,000 trading articles. They have a whole archive of all of the articles, or 17,000 of them at least. That's part of your subscription, which is about $90 a year. Last time I checked, that might be different. So check them out at traders.com. A big thank you to all of the work they've done over the years to support the forum and the conferences, all that kind of stuff. Great partners. I do also want to invite you to join the Traders Forum. You can do that at thetradersforum.com. It's a community of traders designed to help traders, all that kind of good stuff. It's a free resource, thetradersforum.com. It's growing. We've got about 1,600 members. We'd love to have you there. We chat about the markets. We have special guests on. We do indicator lessons. And the whole idea is to learn and grow as a community, and it's been a lot of fun. So we are Metastock. I'm going to talk a little bit more about Metastock all day. I've talked about it all week. I could talk about it for another week too. It's a great software. It's been rated #1 in its price category for 33 years in a row. The offer that we're doing for Metastock is if you buy a month, we'll give you a second and third month for free. That makes pricing about $25 a month if you go with our DC option. Metastock.com/conf promo. If you have questions, if you want more information, 800-882-3040 or metastock.com/sales chat. So with all of that, all of the kind of prep work is out of the way. Our first guest today is Jacqueline Munro. Jacqueline is somebody that's given quite a number of different presentations over the years with us. I think she's on number 3, so not a huge amount, but I always love having her on. And this morning, she described her presentation as quirky. So I'll use her words. It's going to be great. You're going to enjoy it. You're going to learn something, and it's going to be quirky. Jacqueline, let's go ahead and get you started. How are you doing?
I'm really well. Thanks, Jeff. Really good.
I am excited about this quirky presentation. So I just sent the screen share to you.
Okay.
And look how fast and easy that was. So I can see if you hit full screen. If we do get questions, I'll let you know. Do you want me to? We'll handle them all at the end. I think that's probably
can I just minimize you now? Minimize this?
Yeah. Mm-hmm.
Yeah. So I'm good to go.
Right
here.
Yep. Go ahead and click on that, and we should be able to see. Yeah, I can see a big road ahead that's paved in commodities.
Yeah, great. Fantastic.
All right. I'm going to get out of the way. It's your turn.
Okay, lovely. Thanks, Jeff, for the invitation and the team that puts together this fantastic conference. It's always really well done, and I'm sure everyone learns a whole heap of knowledge from it. Thank you, everyone, for joining from wherever you're from. It's midnight here in Australia, so I hope you're well wherever you are. So I'm going to talk about the road ahead is paved with commodities. I'm actually not going to talk about or try and sell you a system, a program, a book, or anything like that. I'm going to take a slightly different angle today. So let's get going. So why commodities? The AI boom may look immaterial, sort of invisible, but it is built on commodities. So the history of AI is also a history of energy, metals, mining, and infrastructure. Fiction imagined the intelligence, industry assembled the material base. AI and popular culture. The AI revolution did not arrive unimagined. Popular culture and literature had already mapped its emotional and political terrain decades earlier. On one side, we have the Jetsons, a cheerful vision of automated domestic life, smart machines, labour-saving devices, frictionless convenience, and a future in which technology dissolves everyday effort. If you don't know about the Jetsons, I will get you up to date in a few minutes. On the other side was George Orwell's 1984, which imagined not convenience but control, a world where technology intensified surveillance, centralizes power, and narrows human freedom. So we have automation as liberation and technology as domination. What fiction grasped early was not the precise form AI would take, but the social logic surrounding it: dependence, efficiency, monitoring, and power. So the Jetsons. The Jetsons was an animated sitcom first aired in 1962. It follows a family who live in Skyad apartments in Orbit City. They inhabit a gadget-filled vision of the future, set in the year 2062. There were flying cars, robotic helpers, and push-button conveniences are the norm. The show predicted real-world tech like video calls, 3D printed food, smart homes, automated vacuums, and smart watches. So the modern commodity boom reflects the physical reality of building a Jetsons world. The push for green energy and artificial intelligence creates surging demand for the very metals that power these innovations. The novel 1984 by George Orwell was published in 1949. It explores themes of totalitarianism, surveillance, and individual freedom. The main themes of 1984 include government control, loss of privacy, manipulation of truth, and the dangers of totalitarianism. It is still relevant today as it offers a warning about the potential dangers of oppressive governments, the manipulation of truth, censorship, and the importance of privacy. So here we are, the bull markets in commodities, and this is where we are round about here. So we can see the next 20 years, or at least the next 25 years, we're going to be in a super cycle of commodities, and we are just early on in this super cycle. So my advice would be to start positioning yourself right now for this really long bull run in this sector. Not only will gold rally, not only will silver rally, but also platinum, palladium, oil, natural gas, copper, etc., and all these precious minerals. And you can see where this happens, this super cycle happens, that it always corresponds with conflicts. We had the Cold War here, post-World War I, the US Civil War, Napoleonic Wars. And so we're coming out of this quite recessionary period and going on into this commodity bull super cycle with corresponding conflicts as we go. So Orwell's vision has been realized. So let's think about what that actually looks like and how basically we have invited what Orwell talked about into our lives, and we're actually supporting the commodity super cycle. So I'm going to play you this. It's about 2 minutes long, but I thought it might be very interesting.
Imagine waking up in Oceania. The telescreen hums in the corner of your bedroom, its unblinking eye fixed on you. Every movement is monitored, every word recorded, every thought, if spoken aloud, catalogued and judged. This is the world George Orwell gave us in 1984, a vision of totalitarian horror where Big Brother watches, always watches, and the price of surveillance is your soul. Now imagine waking up today. Your phone sits on the nightstand. It knows where you slept. It tracked your heart rate through the night. Your smart speaker heard you murmur in your dreams. Your browser, before you've even opened your eyes, has already predicted the anxieties you'll feel today, the products you'll want, the thoughts you'll think you chose freely. Here's the paradox Orwell couldn't have imagined. His citizens feared Big Brother. They were terrorized into compliance, broken by torture, destroyed by the machinery of the state. We pay for ours. We carry it willingly in our pockets. We invite it into our homes. We call it convenience. 1984 didn't overestimate the future. I underestimated it. Not because surveillance became more invasive, but because it became invisible, seductive, and voluntary. The cage was rebuilt, not with bars, but with apps. The telescreen was reimagined, not as a tool of oppression, but as a portal to connection, to knowledge, to everything you've ever wanted. And so the question we must ask ourselves is this: what happens when the cage is so comfortable we forget we're inside it? When the jailer isn't a man in a uniform, but an algorithm that knows you better than you know yourself? This isn't a story about technology as a tool. It's about technology as a new form of power, one that doesn't announce itself with jackboots and flags, but with notifications and recommendations. A power that doesn't break you, it shapes you, and it does so with your permission.
Okay, so I'm just going to get out of here. Here. Oops, now I've lost my screen. How do I get back here? Oh, I'm fine again. Okay, so that shows that we've actually brought this technology into our home and we're willingly using it. So we were actually supporting the commodity boom. So surveillance, Amazon knows what we buy. Google knows what we like, our interests, how we think, listens to us. Our tech and our cars know where we have been, how far we have driven. Our Apple Watch or any other watch, smart watch you wear, knows about everything about us, our health, our activity, etc., etc. Okay. So let's go straight to the commodities, and specifically we'll start with gold. We are actually here when we look at the gold super cycle. This was the accumulation phase starting in around 2020 up to about here, and this is where we are now, and this is how far we have got to go. So up to around end of 2028, and then we'll have a rest. We'll have a distribution phase. So even JP Morgan sees the gold price soaring past 4,000. I mean, we've already passed 4,000. So I predict we'd be up to close to 10,000 even by 2030. Here's the gold weekly chart, and you can see this huge accumulation period from here going back to 2023, and then we have this enormous run up here from 2025 right up to this period here to 5,600, and now we've had this digestion phase after this huge run up. So we'll still have more digestion, we'll still have more toing and froing here, and we could even come down further to around 4,000 before we run up to make a new high again. And similarly with silver, we had an enormous accumulation phase here before this huge run up here and spike up to 120. And it's a similar story here. We're in this digestion phase here after that huge run. And we could even come down to the 60 or 50 zone here before we start to run up again. And we also have to be aware of if interest rates are raised in America, because that could have a negative effect on gold and silver. So we'll have to watch that. Predictions for gold, we've surpassed them, easily surpassed them. And we're in 2026 now, and the predictions here were 4,721. So 2030 is around 9,000, and I'm predicting we easily get to 10,000 or so by 2030. Central bank purchases. You can see since the post-GFC period, central banks started buying gold very seriously. And even in these last few years, the central banks have increased their gold reserves by more than 1,000 tons each year. Here we can see China has taken out top position for purchases of gold. And it's really interesting to note that Poland has made significant purchases too. You can see they're in second place. And the purchases of gold are showing a growing distrust of the existing Western financial system and the gradual increase in the economic importance of emerging markets. And here is the Economic Policy Uncertainty Index, and it's actually become a new normal of turbulence. The index shows that uncertainty has spiked to a historic year. It would probably be up around here with what's been going on geopolitically. Trust in the US government from 1958 to 2025. Oops, sorry. You can see 73% of Americans trusted the government to do the right thing. That was in 1958, almost most of the time. By 2025, just 17% of Americans now say they trust the government in Washington to do what is right. Just about always 2%, or most of the time 15%. But now the trust in the government has been at a very low period now. And at the current measure, it's one of the lowest it's seen in nearly 7 decades, at 17% as of September 2025. So actually, if you measured it this year, sort of where we are now, nearly June 2026, it would probably actually be lower than that. So here's a quote from George Orwell's book, 1984. Power is in tearing human minds to pieces and putting them together again in new shapes of your own choosing. To gain this power, the party uses people as a tool to act on their behalf. So manipulation through technology is the modern form of control. So here's the gold versus US Treasuries, and we can see US debt concerns and geopolitical risks have weakened confidence in the US dollar. So now US Treasury holdings as a percentage of international reserves, more gold is being held than US Treasuries. And that's for the first time since 1996. And here's the gold supply, total below ground gold stock supply and the total above ground gold stock supply, and against the White House. So that's an interesting comparison there. So basically, we've been like squirrels stashing away gold instead of acorns. But gold isn't the only commodity that is popular in this commodity supercycle. We also can look to industrial metals for the digital infrastructure that's been building out. So the digital infrastructure includes essential components such as data centers, network hardware, and cloud services that enable digital operations. And these emerging technologies like 5G, Internet of Things, and edge computing are shaping the evolution of digital infrastructure for greater efficiency and scalability. So the digital infrastructure requirements, we need hardware like data centers, software like security and operating systems, a very good secure power supply, security like cybersecurity, and staffing for maintenance. And there's a huge reliance on very good power. And that's where we turn to here, the data centers and the power that they need. So we have about, in the US, 3,960 data centers, and that represents about 37% of the global total. In Australia, we have about 268, and they power much of the Asia-Pacific region. And here we have the AI power center demand is expected to increase around 165% by 2030. And these are the stocks you absolutely should be looking at for the next, at least the next decade. So what is in data centers? What is needed in data centers? We need gold, we need silver, we need platinum, we need palladium, we need copper, we need aluminium or aluminum, and rare earth metals, and they are essential in data centers. Okay, so that brings us back to the Jetsons' life in Orbit City. Notice they live above the ground, up above the clouds. And notice here on the right that in about 20 years' time, that we could be living something like this, similar to the Jetsons. And by that time, we'll definitely have flying cars, flying taxis, etc. But when you think about this, why are they up in the air above the clouds? Is it because of something on the ground, or the air is not, this air is so polluted? It actually brings to mind a resource we take for granted, and that's land. The digital economy, requires immense space for data centers, server farms, and energy production. Land remains a critical finite asset. So if you're looking at the stocks in the stock market, and you want to buy commodity stocks up, you could also look at land as a really good idea to invest in as well. And there's also talk about putting a data and server farms into space. So there's already a conversation around that at the moment. The future of copper. Now, copper is a critical, if I can get to it. Oops, I'm not going to be able to get to it. Copper is a critical commodity in the AI revolution. The rapid adoption of copper-intensive technologies will drive high future demand. The copper demand will grow by around 70% to over 50 million tonnes a year by 2050. And that demand for copper will outstrip supply within the next decade. Growth rate is expected to jump to 2.6 annually from 2035. And the themes forging this growth are traditional economic demand, energy transition, and the digital revolution, primarily data centers. So here is a chart of copper, and you can see down here, way back in 2020, we were actually below 200. Now we're up around over 600, and this will just gently keep rising. So where demand will come from? It will come from, the green energy revolution here and the digital revolution of 5G, Internet of Things, artificial intelligence, and blockchain. Stocks to play the copper growth: Freeport-McMoRan, Ivanhoe Electric, Rio Tinto, and Broken Hill. BHP. So this is a chart of Freeport-McMoRan. If you look back here in 2020, it was down under $10. Now it's up nearly at $70. So this has been a really good example of where copper has taken off and where it will keep going in the future. I mean, this will just keep rising gradually up towards $100 and beyond. BHP is also, you can see also here, it was down around $10 in 2020 and is now up over $60 now. And I recommended this to my subscribers on June 5th, 2026, when it was $46.55. And I have, in my personal portfolio, I've owned BHP since around the early 1990s, and I just keep scaling in. So heavy machinery in the commodities boom. Heavy equipment like excavators, cranes, and drilling rigs facilitate the extraction and transportation of commodities. So heavy machinery is essential to boost productivity, support infrastructure development, and the fueling the economic growth during commodity booms. So we actually have to think about the machinery that's going to help this commodity boom. And the stocks I would be looking at here would be Caterpillar and Deere & Co. And here is the Caterpillar chart, right back to 2018. And I recommended this to my people in August 2025 when it was $416. It's now over $900, and we also did a great bull call spread on it, which expired at max profit earlier this year. So the wave of demand for commodities, we are in the sixth wave of an innovation cycle. So listed here, this is the sixth wave, and it will go for about 25 years. The focus will be on AI, Internet of Things, robots and drones, and clean technology. And commodities, as I've said, will be the foundation for this innovation wave. So to the war in the Middle East, it's basically a great power struggle. And we are in the middle of the war cycle, which often goes from 80 to 100 years. So every 80 to 100 years, we have a conflict and a war cycle. And this goes back, if you go back 180 to 100 years, you will see it in World War II, the American Civil War, the American Revolution. So this is what's happening at the moment. And we can see by what Trump's been doing with Venezuela, with Greenland, with Iran, and now with possibly Cuba. We can see what's been happening in the conflict around the world. So understanding war cycles, they're driven by recurring patterns of conflict and driven by political, economic, and social tensions that periodically escalate and subside. And they affect societies, economies, and security. And they're caused by resource competition. I mean, you could think of, when you think of Venezuela, Iran, and those places, is Mr. Trump after the oil? And we think of power struggles. He'd like to take control of that oil. So we could wrap that up in that argument there. US government spending. Well, we know that the debt in the US is quite extreme, and we know that wars and conflicts are very expensive. So that will be exacerbating an already excessive debt in the US. And interestingly, I looked at, did some research, and I saw that 51% of all expenditure in February in 2025 was debt financed. And by 2050, interestingly, by age 30, everybody will owe over 200,000, and that will be far more after we finish all the conflicts that are going on at the moment. So drivers of investor demand for gold, it's certainly uncertainty drives investors to purchase gold, but it's also for performance, long-term investment, protection against financial crises, inflation protection, which is important at the moment, diversification, wealth accumulation, and protection against geopolitical crises. So it's no wonder that people are hoarding their gold like the squirrels are hoarding acorns. So the gold and silver stocks to buy, GLD, which tracks the price of gold, is a very good stock to buy. Not quite yet, but soon. I would start scaling in actually now. We scaled in. We actually bought on June 21st, 2024, when it was 215. And at the time, I also recommended 2-year leaps, 260, 270 out of the money leaps, and they actually expire next month. So they would have done very well. Also, really good stock to buy is SLV. I recommended it to my subscribers on February 2nd, 2024, when it was $20.70. And we also did a couple call spreads, and they expired at max profit at the end of 2025. Wheaton Precious Metals is also another great stock to own, and we went in there at February 2015, 2025, when it was $35 down here. Barrick Gold, Barrick Mining is another great one, which we bought on February 7th, 2025, when it was $15.09. Now, there is actually no single market secret to discover. There's no holy grail. There's no single correct way to trade the markets. You really have to build your own philosophy. But one thing that really is important is your mindset. You need to build resilience, you need to build patience, and you need to have focus. Many of us are controlled by FOMO, fear of missing out, or FOMM, fear of making mistakes. We rush in or play follow the leader. The supremacy of temperament, and this is paramount. Buffett famously said, the most important quality for an investor is temperament, not intellect. He believes that once you have an ordinary, reasonable level of intelligence, your emotional control and discipline dictate your success. So you develop your knowledge, and then your behavior and discipline control whether you're going to be successful or not. So it's a really good idea to understand market structure and patterns so you can identify opportunities and take advantage of them. That education will arm you with knowledge that will enable you to take advantage of setups in all market sectors. That knowledge will set you up for life as you can apply it to any sector. Best of all, you are in control of your funds and not tied to any program for years on end. So let's take a look at market structure as an example. We have accumulation, then a 1/3, 2/3 pullback. We have trend or public participation. Then we have another 1/3, 2/3 pullback. Then we have excess and distribution. And this is what that looks like. This is the accumulation phase. And this is where it looks like nothing is really happening. And this is where the institutions buy because everything is really cheap. And the retailers, like the mum and dad investors, don't take any notice of it because it looks really boring because nothing's happening. Then we have the public participation phase where, the stock starts to take off and it starts to look interesting. And the public pile in and think, this is great. Oh, the market's going up. Then we have this 1/3, 2/3 pullback. And then more and more people pile in and think this is going to keep going up forever. But what happens at the top here is this. We have the distribution phase, okay? And this is where people get stuck, especially if they're short-term holders of stocks or short-term traders. If you're a long-term investor, you usually don't worry about this. You just take it in your stride. But people who are short-term usually get stuck at this situation here. So when you learn about this structure of the market and you learn about some technical analysis to look for this sort of thing here, where the momentum is decreasing, then you can see that it's time to get out. So identifying patterns and analyzing charts is also very handy. A really good thing to know is chart patterns. So the head and shoulders pattern, we have a shoulder, head and shoulder, and a neckline. If you can identify that, often what happens is the stock turns over and turns to the downside. It doesn't always mean that that will happen, but often it does. We have the double top, and the same thing here. We have the neckline. So basically you could put an order here for a sell, and that would take in your sell order, and you would be able to have a great trade here. The flag pattern. This is what the flag pattern looks like, just like a flag, and this is the flag pole. Notice how the price continues in the direction of the original trend once the flag breaks out. Here it breaks out of this flag pattern. So you'd have your entry order here. 2 points makes a third. Okay, and this is a similar story here with the neckline here. You would put your entry order here, and this is, if you measure from here to the top, this is your target here. So this is also one of my favorite patterns to look for in the market. Also, Japanese candlesticks in trading are a really great asset when you're looking at markets. You have the evening star and the morning star. This is an example of the morning star pattern, and it's usually seen at the base of a trading pattern here. And it also has the potential, mostly has the potential to see a bullish move. You see this pattern. And here I've given an example of the hammer candle. This is actually a 12-month chart. So every candle here represents 12 months or 1 year. So this is a hammer candle, or what I call a pin bar. And this is at the base of a range. And it has the potential to be very bullish. So, and actually we can now see that this potential has played out very, very nicely. This candlestick here is called a doji, and it's beside the hammer, and it also signifies indecision and also a change of direction. So if you see these two together, it's a very good potential to see that this would be what would happen, that you would get a bullish move. So are you a trader or an investor? What's your philosophy? We know that traders, 80% quit within the first 2 years, 7% remain after 5 years. If you are an investor, you have a much better chance of being successful in the long run. This is the stock market returns over the past 90 years. And you can see the median annual return is around 14.32%, which is really not bad at all. So really what I'm saying here, it's time in the market rather than timing the market. So could the S&P rally to 14,000? Well, I've heard already analysts talking about 9,000 within the next year. So that is certainly possible, and especially with the commodity super cycle that we are now in. If the current cycle generates a similar rally of 2,000 plus, the S&P can move toward 14,000 by 2034, which is when we expect the current 16 to 18-year secular bull cycle to peak. Oops. And what's going to bring us to 14,000 will be this commodity super cycle, which is underpinned, and technology will bring us there. It will supercharge everything in all sectors: health, finance, transport, agriculture, housing, retail, everything. We'll looking at flying vehicles, 4D printing, DNA computing, quantum internet, space mining. As I said, we could see data centers out in space, hyperloop. Advances in medicine will be incredible. We could see supersonic flight. We could see anti-aging drugs and miniature AI. So a little bit about me. I've worked in a mental health unit and alcohol and drug unit for well over a decade, probably 15 years. Before that, I worked in the outback Australia as a jillaroo or a cowgirl, and I basically did everything out there. I was riding, mustering cattle. I helped cook in the kitchen. I tutored children. So I did fencing. I did a bit of everything. So then I came back and worked inside in the mental health unit. Then I studied for 10 years while I was actually working. I finished with an MBA. I've run my own fund, and I've worked for the Mad Hedge Fund Trader for many years. My passion is education. I sent my son Alex to a private prep boarding school in Wokingham, Berkshire in the UK. This is his first day when he was 8. This is his last day when he was 13. And this is the school, Ludgrove. So how do you benefit from my product? You get comments on the markets, 3 newsletters a week. The economy, comments on the economy in different countries, comments on the geopolitical situation, different sectors, social issues, and individual stocks. I summarize John's webinar, which he does once a fortnight, and send it out in a post. I also send out trade alerts, and they're also embedded in my newsletters that I send out. I don't send them out separately. And these were just some of the trades in 2025, and all of these were very, very successful. I use different vehicles when I'm sending out trades. I use stock, options, sleeps, and ETFs. So say I wanted to buy gold or silver. I could buy a small parcel of GLD, the stock that tracks the price of gold. I could purchase options. I could purchase GDX, the ETF. So I could do any number of those things and multiply my returns. Or I could just do one. So as I said, the philosophy of people when they're investing is completely different. I mean, some people even focus on just one sector. Some people even focus on just one stock. So one sector, you just could focus on bonds. A single stock could be Tesla, for example. I have a Zoom monthly meeting each month. It'll be at the end of the month or the beginning of the next. And I give a presentation of what's been happening in the markets and what could be happening going forward. I discuss each section, the NASDAQ, the S&P. I discuss the gold market, bonds, every single sector. I share trade ideas and I allow people to ask questions and put forward their opinions about the economies. Also, when I finish the presentation, I turn off the recording and then I allow people to speak and discuss ideas and share ideas. So it's free speech and not recorded. And usually, the last one I had, people stayed for an hour and a half speaking after my presentation. So they obviously really enjoy it. Testimonials, I've got quite a few here. I won't read them all out. She generously researches and answers esoteric financial questions, a rare resource, very consistent with accurate analysis, clear communication, thorough research, provides real value to help understand the market. This is Mike from Seattle. He's been with my service from the beginning. It's been a real success from the start. Your insights on the markets and your timely picks have been gold. I'm looking forward to continued success in the month and the years to come. And another one from Marie in Melbourne. Her guidance is clear, data-driven, and delivered with precision, right down to specific dates and numbers. The monthly reviews and open discussions provide real-time learning and valuable support. She's generally committed to helping us grow, not just our portfolios, but our understanding. Highly recommend. So what you receive with Jackie's post: 3 newsletters a week, a summary of John's webinar presentation sent out once per fortnight. Trade investment ideas will be shared when the risk reward is in your favor. And we have the monthly Zooms to educate, share ideas, experiences, and ask questions. So the price in the store is $5.97. So your price today, for today only, is $3.97 for 6 months. That's a saving of $200. And you're actually going to get options trading for beginners, option trading for beginners, a video series. There are limited place available, so click on the link in the chat box on your right. But you're also going to get a free trade alert, and this is your mystery chart. Do you know what this chart is? Is it a buy or is it a sell? If you purchase my product today, you will receive this trade alert direct to your inbox. So opportunity is calling. Take a chance and change your life. Join for 6 months and see what the product is like. Invest in yourself and grow your knowledge. $3.97 6 months. It's a bargain. Click on the link in the chat box on the right. Warren Buffett say about the best investment is an investment in yourself. The more you learn, the more you will earn. Never truer words said. So I wish you all a great day. Thank you for listening. I really hope you got a lot out of it, and I would suggest you start looking at the stocks I recommended and start scaling into them. Thank you so much.
Jacqueline, thanks a lot. Thank you so much. You did a great job too. I enjoyed the 1984 and the Jetsons references.
Yeah,
You're right.
Sorry. That was my quirky bit, Jeff.
Oh, there you go. Yeah. It was enjoyable. I do have. Let's see. There is a question in the chat. Let me take a look here at what it is. Okay, Reginald wants to know is there going to be a large cement demand and or steel? Is coal underrated commodity? I'll let you go there.
Coal, yeah, coal is underrated, but I would be looking at not only coal, but also uranium. Uranium is where you want to be looking.
What do you think of the Alberta oil sands? John was very negative on that a while ago.
Yeah, I wouldn't be touching that.
Okay. All right.
No.
Very good. Thank you very much for joining us. I appreciate it. I've got the link in the chats, both for YouTube and GoToWebinar. Thanks for being here again.
Okay. Thank you. Thank you.
All right. No
Bye.
problem.
Yes.
Let's go ahead and switch over real quick. Do a couple of changes here. Do want to say thanks again to Stocks and Commodities Magazine for sponsoring the event. Really appreciate all the work they've done over the years. It's important, I think, as a trader, and in most areas of your life, that you're doing better, right? Like you're improving your skills, you're working on kind of improvement. And I love Stocks and Commodities Magazine, not only because they've been great sponsors of MetaStock over the years, but it's a great way to make sure you're getting the latest information on stocks and commodities, or on technical analysis when it comes to trading. And so if you go to traders.com, you can get a subscription. They'll mail you a magazine here in the US and I think in Canada. Otherwise, you can get a digital version. They've got 17,000 articles that are in their archive that you get as just being a subscriber. They have 1.3 million subscribers. But I want to say thank you to Stocks and Commodities. They've been great. They've supported us for so many years, and they've just done a great job. So I also want to say thank you to, I want to say, if you haven't yet, join the Traders Forum. You can join the Traders Forum if you go to thetradersforum.com. There's tons of really good information up there about trading the market. You can chat with other traders. We do lessons on different indicators. We'll bring in special guests and talk about the market. And all of that stuff is free. So if you go to thetradersforum.com, I don't have a site up here right now. Yeah, I do. If you go to thetradersforum.com, you can actually become a member, join us. We've got about 1,600 members there, and I think we're going to make that a lot larger. So everything we're talking about in terms of the MetaStock offers and the MetaStock specials this week, for the most part, you can get at our conference page. It's metastock.com/conf promo. You can give us a call at 800-882-3040. You can also go to metastock.com/saleschat. So we've talked a lot about, some of the different add-ons and some of the products, and there's been a lot of really good. So if there's something that you're interested in or you have questions about, feel free to reach out to us. We'd love to help you. If you haven't had a chance yet to try the software that's been rated the best in its price category for 33 years in a row, I need to fix this. I will for the next conference, but for 33 years in a row, if you buy a month, we'll give you the second and third month for free. That brings your pricing for the Metastock kit, as Zaheer calls it, down to $25 a month. So you can do that at metastock.com/conf-promo. Oops. You can give us a call at 800. I'm trying to do two things at once, which is never a good idea. You can give us a call 800-882-3040 or go to metastock.com/saleschat. Looks like we're running just a little bit early today, so Zaheer, I'm going to ask you to give me a hand if you're available. So here's our next speaker. He's the one that likes to call Metastock a good-looking piece of kit, which I appreciate.
Hi, Jeff.
Hey, Zaheer, how are you?
I'm good, thanks. You?
All right. I'm looking forward to having you talk. Since we have a couple more minutes, I wonder if I can enlist your help.
Yeah, absolutely.
Okay. What we're going to do is we're going to give away a prize. Now, the prize that we're going to give away is this book. It's called Candlestick Profits: Eliminating Emotions. I have it on good authority. This is one of Steve Bigelow's best books. Excellent. It's a physical version, as you can see right here.
Nice hardback as well.
Right. Never go wrong. So what I need from you, if you're watching this on YouTube today, hi. If you haven't registered yet, there's a pinned link. It's right above the comments. If you click on that link, you can register. You put in your name, your email address, and your phone number if you want to. Your phone number is optional. But if you do that, you'll be entered to win. So I've got a big list here, as I hear, of people that are registered to win. What I need you to do is I need you to use your random number generating skills.
Mm-hmm.
I'd like you to come up with a number between 2 and 5,459.
Let's go for the one just below that.
Okay. By just below, do you mean 5,458?
Yes.
Oh, okay. 5,458. This person probably registered. I don't know which direction the list is sorted. So they probably just registered or they registered really early. One of the two. Name is Mark D. Mark D has a Gmail account. It is here in the US. I'm going to drop you an email, Mark, in just a few minutes.
Fantastic.
Send me your address, and I'll be making a special trip to the post office next week because we don't ship anything out of this office anymore. Everything's gone digital, but I do have books I can send. So, okay, let me give you a fair introduction. Zaheer is somebody I consider a really good friend of mine. I like the way that he looks at markets. It jives really well with the way I like to look at markets and stocks. Zaheer, the way I would describe the way he likes to look at the markets is find where the money's going and go there. And I think that's the best way to look at it. So Zaheer, we're going to start you just a minute early. Let's go ahead and get you going.
Fantastic.
What do you want to? Is there anything in particular you'd like to say about yourself as we get you going?
Is that you? No, that's me. Look, I guess what I would like viewers to take away from today is how this system has been created for everyday investors. You know, my background I haven't worked for a bank or an institution or a hedge fund. I have a hedge fund now, but that's not how I started. I've evolved into that. So, you know, this is a system that's been created for everyday people with demanding lifestyles. What we want is to be able to continue living life, but ultimately have smart processes working in the background, compounding our money. That takes a few minutes of management each day and each week. So that's really the main takeaway.
Perfect. You should be able to share your screen now.
Okay. Yep. Let's go for this one.
All right.
Does that work?
Yeah, it looks great. I can hear you too. You sound great. So
fantastic.
I am going to get out of the way. It's your turn. Go for it.
Excellent. Okay, guys, so let's dive straight in. Today, we're going to be looking at consistently identifying high-performing stocks and assets, a rules-based process for finding strength, managing risk, and compounding winners. Just move that over there. Most investors are drowning in opinions. This is everywhere. It's a huge problem online. Market calls, day trading setup, top calls, market crashes, bottom calls. Ultimately, there's just a lot of noise out there, which is sort of marketed and dressed up as insight. And we really want to move away from that. This session is about edge, not opinions. We want to use MetaStock and the market edge technology, the add-on that we've created, which we'll call the MET going forward, to identify high-performing stocks and assets with a repeatable process. Now, in this presentation, I'm going to be focusing predominantly on stocks, but we've applied it to gold, we've applied it to silver, we've applied it to live cattle, different commodities, currency pairs. So it isn't just unique to the stock market. It is something that you can apply across the board, and that will help with diversification. No day trading, something that I try and get people away from. It's just very difficult to generate any sort of consistent returns. We certainly don't want to get into the habit of calling tops and market crashes. You've probably learned over the years how that doesn't work, and the stock market keeps on going up and up and up. We certainly don't want to predict what happens next. We want to ultimately let the market dictate and then react accordingly. So it's very much a rules-based process for finding strength, managing risk, and letting winners compound. And that's really the secret sauce to making significant returns. My goal and our goal here at Sublime Trading has always been to put trend following back where it belongs. While most investors jump between value investing, value traps, swing trades, day trading, and market predictions, we focus on trend following, which has been the strategy that has built serious wealth for decades. If you look at performance tables, you will always find trend followers at the top of those performance tables. Value investors tend to be more mid-table. So you have to question, how come value investors get so much media attention, trend followers don't get as much? And you know, that didn't sit well with me in the beginning, which is why I went down that journey of studying trend following, looking at the greats like Richard Dennis and the turtle traders. And what I realized is it's far simpler for a lot more profit. So the MET ultimately was born from frustration. This is where it all began. I was tired of shiny object syndrome, weak returns, conflicting opinions, and strategies that looked clever but failed to compound capital properly. So we built this toolkit, the MET toolkit, which I wish I had when I started back in 2007. So this is really something that wasn't around at the time, and through my journey and through my experience, I've learned to I've developed this. And you know, coming across softwares like MetaStock was a complete game changer for me. So who built the MET? My name is Zaheer Anwari. I've been a trend follower since 2007. I actually have a degree in software engineering, which is where my love for technology came in, and why platforms like MetaStock sit so well with me. These professional platforms that give you so much control and flexibility. I didn't actually pursue a degree in software engineering. I worked for a year for Oracle, didn't enjoy it. I quit. I then became a TEFL teacher, teaching English as a foreign language. I did that for 10 years. I lived in Taiwan, Japan, Philippines for a number of years teaching English. I taught English here in London, which is my hometown. And what I got from that, I mean, teaching was great, but there's no money in it. But what it really helped me was shape me into the mentor that I am today, and be able to transition from teaching English to helping people put their portfolios together. And personally, I started building wealth when I got into photography. So alongside being an English teacher, I was actually working in photography, and we had a lot of high-end clients like Coca-Cola, Whirlpool, Audi, Tatler, Vogue. We did some really, really good work. This was back in the early 2000s after I graduated. And that's really where I started making money. And when I started making money, I then wanted to learn what to do with that. And that's why I went down the route of investing in the stock markets. Now, as you guys probably know, something that you're kind of funneled down when you start earning money in your 20s is property, right? Your parents are always trying to get you to buy a house, and it's something that you want. And that just didn't sit well with me. Having a mortgage that didn't seem to really grow at any particular rate didn't sit well with me, which is why I went down the stock market route. You know, it was something that was foreign and mysterious, yet, you know, you always heard about how much money people could make. And so that's really where, that's the journey that I went down. And then in 2018, I co-founded Sublime Trading, and then 2023, I co-founded the Reversy Fund. So it's a journey where now I'm actually managing 8 figures. It's a small fund, of course, when you think about Citadel and BlackRock, how these guys have got billions and trillions potentially under management. You know, we're a small fund, 8 figures under management. But as I said, if you look at my background and where I've come from, you know, it's an achievement in itself. And we're growing. We'll have 9 figures, 10 figures under management. That's all part of the journey. Now, we built the MET to turn a professional trend following process into usable technology. Technology has completely changed the game. We don't want to be investing like our grandfathers and even our fathers. We want to be investing with the tech that's available to us today. And so you want to be embracing technology like Metastock, because it's a complete game changer in terms of the assets that you can find, how you manage them, and ultimately the returns that you can achieve. Now, I've been blessed over the years. I've been trusted by these platforms, events, publications across trading, investing, and the financial markets to be able to share my message about trend following. You know, when I go to these events and when I'm a speaker, I'm usually the only one really talking about trend following. You tend to have everyone talking about day trading. You tend to have a lot of people talking about Warren Buffett and value investing. Trend following, as I said, gets forgotten about. And I've been blessed now to be able to share my message across all these platforms. Of course, a lovely relationship with Metastock. Most recently, Wall Street Journal. Now I started featuring my work, which is massive. And then Khaleej Times as well in the UAE, which is, you know, a massive publication out there. So, you know, the message is really starting to get out there. Now, we apply this process in 2 ways. Sublime Trading, which is our education, portfolio training, and copy service support. And then Reversy Fund, which is the fund management service, also built around the same trend following philosophy. The MET, the market edge technology, the toolkit that we're going to go through today, sits at the foundation of both. If I didn't have the MET, there is no way I would have achieved what I've achieved today. So what I'm showing you in this presentation is the heartbeat of everything. So today I'm going to show you why most investors struggle to outperform the market average, how the MET scans reduce thousands of assets into a focused short list, how the MET charting tools help identify the highest quality opportunities, how a rules-based trend following strategy turns analysis into portfolio execution. Now, the MET is not just a trading toolkit. It is a repeatable investment process that you can use, refine, and eventually pass on. And I think this is something really, really important, because the schooling system that we all go through is designed to build careers. Now, ultimately, whichever career we end up in, we all end up with the same problem, which is what do we do with our money once we start earning it? And so it's upon us to learn how to manage and invest our money and then pass it down to our kids and loved ones. Because if we don't do that, then we will remain in that financial illiteracy loop that the system ultimately is designed to keep us in. So this system is designed for building wealth with rules, not opinions, designed to turn ordinary portfolios into extraordinary legacy portfolios. So let's just do a little comparison here. Average returns versus superior returns. Same starting capital, same time period, just different return profile. So let's say you put $20,000 in an S&P 500 tracker fund, and then $20,000 in a portfolio designed to cherry pick and invest in very, very good stocks. You've got that 20-year time horizon. You add $100 a month in each pot for the next 20 years. Average returns, let's be generous, let's say 11% a year over the next 20 years. Individual stocks, 30% a year. Now, going back to what I mentioned about the hedge fund that we have an audited track record going back to 2016, where our portfolio returns come in at over 30% a year. So this isn't fiction. This isn't back tested. This is based on evidence. This is real performance. We average 30% a year, and we've done that for over a decade. Now, if you look at the numbers, guys, if you just leave your money in a tracker fund and get the average, you're looking at around $250,000, which in isolation is not a bad return, 20K to $250,000, but it's not a lot of money if you look at it in terms of how much time you may be retired. $250,000 over 10 years, 15 years is not a lot of money. But if you look at that number there in the bottom right corner, $4.5 million. Now that is true wealth creation. And that's the difference between investing in the average and investing in stocks that outperform the average. We're looking at large 7 figures. And so the more money you put in, that's a 20K starting amount. The more you put in and the more you compound, the larger those returns will be over a shorter year time period. And here's the thing, the difference is not just activity. We're not just, being useful. It's all down to a different process. It's down to asset selection, and it's down to compounding. So there's a real process here that we have to tap into. Now, we have a copy service in Sublime Trading, which allows people to actually copy our portfolio. And that's based on a $20,000, £20,000 starting amount. The reason why we say 20K is because that's really the very minimum our community members start with. If you've got less than that, we generally say, hey, you're not ready. So we require people with the right capital to get involved. Since the start of 2023, which is when this copy service came to fruition, when we started putting it out there, it has grown by almost 278%. So your 20K starting amount would now be at almost 60K. So that's almost a 300% return in 3 years. So this is the power of picking stocks, good stocks, holding and compounding them. Far superior returns than just willy-nilly picking stocks or just leaving your money in an index fund, and certainly outperforms short-term strategies. There's so much. What we're doing here, guys, as I said at the very beginning, we want to do as little work to make as much money as possible. We want to be able to get on with life, do what we do day to day, and then have these smart processes compounding our money in the background. So why most investors never build real wealth from the markets? It's not a lack of information. We're very much in the information age, right? It's not like before the internet, when we had to go to the library. We had to walk to the library to find information. That's not a problem anymore. Information is on our mobile phone. So it's not a lack of information. It's a lack of a repeatable process that survives noise, emotion, and changing market conditions. Ultimately, it's execution of a proper process that people fall short on. And again, just to add to that, it's not ability as well. Oftentimes you may look in the mirror and question yourself. It's not down to your ability. If I can do it, looking at my background and how I've got to where I am, I bet you there's people on here who are far more intelligent than I am. But ultimately, I found and developed and refined a process that I've stuck to and that works, that's got to where I am. And that's really the difference between where I am and where you potentially are. It's not ability, it's process. We all have the ability to do this. First mistake, they chase tips instead of tracking strength. A tip gives you a name. You go online, everyone's got damn tips, right? But strength gives you evidence. Evidence can be scanned, it can be ranked, and it can be filtered, and it can be acted on. Mistake 2, they react to headlines instead of following evidence. Headlines explain what has already happened. And ultimately, a lot of times it's just opinions. Again, price action and the chart show where capital is moving to, and that's where we want to be. As Jeff alluded to in the beginning, we want to go where the institutional money is, where the smart money is, and we want them to provide the momentum and the liquidity. We want to be able to jump on their back and piggyback the ride. Mistake 3, they confuse activity with progress. They look at more charts, they want more alerts, they take more trades. Over trading, I mean, it's just a killer of portfolios. They want more opinions. Finfluencer A says this, let me see what Finfluencer B says, Finfluencer C. Ultimately, it all boils down to the fact that there is still no edge after all of that information. It just becomes a case of analysis paralysis. They buy weakness and sell strength. This is the other thing. We've been told time and time again that you should hunt for bargains, cheap stocks, discounted stocks, undervalued stocks, but the market often rewards the opposite. Strength that keeps getting stronger. Buy strength, sell when strength fails. So you don't want to be looking at the logic of buy low, sell high. That is not what you want to be doing. You want to buy high and sell higher. Warren Buffett has underperformed the S&P 500 for the last 3 years. He's been hoarding cash. But if you look at what the S&P 500 has done, it's climbed over 100%. Stocks have climbed up even further than that. We'll look at Seagate Technologies. That's climbed 600% in the same time. So you have to look away from these idols. Yes, we have to admire what they've achieved. No one's taking away what Warren Buffett has done. That cannot be disputed. But what he has done in the last 3 years has to be questioned, particularly for us, because we have to generate and grow wealth. Warren Buffett now is at, he's retired. So we can't look at Warren Buffett anymore and go, yeah, I'll have to copy him. You have to question and then put in processes the right techniques that are right for you. Right, the crowd wants certainty, the market rewards alignment. We want strong market conditions, strong sectors, strong stocks, strong trends. We want clear rules, and we want to nonchalantly follow this system. And what I mean by that is you just want to do it. Just like you brush your teeth, just like you get up and change your clothes in the morning and have breakfast and get on with the day-to-day routine. This is what you want in a system. It's just something that you do. Most investors start with a ticker. That is the mistake. A ticker without market sector and trend context is just a name on a chart. And we want to get away from that. We don't want just a ticker. We want a ticker with intent, with real purpose. So our edge starts before the stock pick. We want to look at the index because the index dictates market conditions. We then want to narrow down to the sectors, because there's 11 sectors. If you go online, all you ever hear about is IT and tech. Tech is everywhere. AI is everywhere. And we tend to forget about the 10 other sectors. So we want to look at the sectors and we want to focus on the strongest sectors. We then want to look at the strongest stocks in the strongest sectors. What you should be understanding here, guys, is how we're consistently developing the odds, stacking the odds in our favor, starting with the index, right? Market conditions, looking at the strongest sectors, then narrowing down to the strongest stocks in the strongest sectors, then looking at the setup of the strongest stocks, then finding the optimal entry point, then the right stop loss, then adding then the risk allocation. Then once it's in play, we want to think about compounding and accelerating returns, and then ultimately exiting when the trend ends. So there's this process that we have to go through. The goal is not to predict the next move. The goal is to build a portfolio around strength and manage it with rules. And this is where meta stock becomes powerful. As you know, as you've heard over the last week, meta stock is undisputed when it comes to the best in its category for the last 40 odd years. So this is not just a playground for indicators. It is powerful as a filtering, ranking, and decision support engine for serious investors. So let me show you this inside MetaStock. This is where the philosophy becomes practical. MetaStock gives us the platform. The MET, the add-on that we have developed at Sublime Trading, gives us the process. So what I'm going to show you in the software is how we move from the index to sectors and stocks, how the MET scans reduce the market into candidates, how candidates become a serious shortlist, and then how we review setup quality, entry, stop loss risk, and exit management. Okay, so let's switch over to MetaStock. So just bear with me a second. I just want to make sure I'm doing this correctly. Okay. Jeff, if you don't mind, could you just confirm that you can see MetaStock?
Yes, sir. We can see MetaStock.
Okay, brilliant. Okay, so for people who already got MetaStock, you'll be familiar with this. For the guys who haven't got MetaStock, you absolutely want to jump on that trial and test it out at the very least. When you first open MetaStock, this is what you're faced with. And, you know, it seems quite unassuming in the beginning. But believe me, behind this, there is some real power. And it all starts with these menus on the left-hand side. Now, MetaStock, we're now using MetaStock 19. So there's been an upgrade in the way it looks and feels. Is absolutely fantastic. So looking at these functions on the left-hand side, the first function we're going to look at is the Explore function. Now, we have developed a number of explorers. What MetaStock call explorers, we call ultimately known as scanners. MetaStock calls them explorers. We have developed two particular scanners, explorers, for long positions and short positions. So you've got a scanner for large cap markets. So for example, the US market, anything with a volume typically over 1 million for stocks, we want to have a scanner for that. And then we've got another scanner here, which is for the small to medium cap market. So in Sublime Trading, we focus on US stocks as our main market simply because of its age and maturity and the options available. The US market simply cannot be beaten. Oftentimes we can be 100% in US stocks, but the way we diversify is across the sectors. Sometimes when we have other opportunities, you know, over the last 2 years, we've had gold, we've had silver, We've had precious metals ultimately, and some really, really good UK stocks as well. We've been around 70-80% in US stocks, and the remaining 20-30% we've diversified across metals and UK stocks. So US market is always the primary market. And so we use this scanner. And as we are in a bull market, we use this scanner here for long setups for the US market. We then use this scanner here for the UK market. And then we've also got Indian members in the community, and we've got members around the globe in the Middle East, etc., which are more sort of small to medium cap markets. With this MetaStock add-on, they would use this scanner here for long setups. Now we've also got the opposite, where we can scan for shorting opportunities. Now, a question I'm going to answer here is, do I short the market? Yes, I absolutely do short the market, but you only want to short the market when a bear market has been confirmed. And the last time a bear market was confirmed was in 2008. And so 2008 was the last time I shorted the stock market. Since 2009 and the recovery, and since since the stock market has just been going up and up and up, we've only been in a bull market. And so I've only taken long positions, and I've rebalanced during periods of corrections. So buy, rebalance, buy, rebalance, buy, rebalance. That has been my process. I've taken no short positions. Yes, we've had individual stocks like PayPal, Nordisk, some stocks, Fiserv, some stocks that have really, really gone on and tanked. But I mean, they are few and far between. I would rather put my money into strong bullish stocks in a bull market. And the thing about shorting in a bull market is that these stocks can quickly whip around. So even though they may decline quite rapidly, they may find support and then whip around against you. So I would rather focus on bull stocks, bullish stocks, long stocks in a bull market. So that there are the scanners. And so what you would simply do is, where are we? Let me just move this up right here. If we go down to, I've checked them here for you. If I was to scan the US market, so typically what I do, guys, is I wait for the US market to close, because I wait for end of day prices. I'm not interested in intraday prices. I want the market to do whatever it does during the day. I get on with my life. Once the market closes, which is at 9 p.m. UK time, I give it about half an hour, let the prices confirm, get to the exchange. I then settle down and I do my scanning. So the US scan is this one at the top. I will then select this US stocks here. And you can see that I'm scanning almost 8,000 stocks. So MetaStock gives you an unbelievable list of stocks to scan and find. And this is really a key point here. When you start scanning, you want to start with a global list of opportunities. You want everything available to you, and you want to go to where the money is. The analogy I like to use is, think of it like a falcon. When a falcon wants to feed, it soars above in the sky, it looks down, and then as soon as it sees its prey, which is likely a rabbit or another bird, it will then come down at unbelievable speed, feed, and then go back up again and do what it needs to do again. It repeats. It won't hang around in barren terrain. It will, if it hovers around and it can't see anything to eat, it will move on. It will move on. It will move on. Traders, unfortunately, they do exactly the opposite of what needs to be done. They hang around in barren environments where there's no money to be made. And because they're hanging around in barren environments, they ultimately struggle. And so they're forcing trades and they're forcing to make money. What you want is to go to where the money is. So use that analogy. Be a falcon and have everything on your watch list: US stocks, UK stocks, commodities, currencies, depending on which country you're in, Australian stocks, Middle Eastern stocks, African stocks, South American stocks. You can apply this philosophy across the board, but you want to ultimately have a large global list. And with that, you also want a good broker that gives you access to a large global list. And then you want to find where the money is, build a portfolio, have your feed. And once that feed dries up, go back up, find the next set of stocks. That's your feed, come down, have feed. And that's your philosophy. Time and time again, repeat and repeat. So you can see with US stocks, we're looking at 7,815. With UK stocks, you're looking at just under 1,000. So you can see there's quite a difference, right? This is why I don't just focus on UK stocks. I mean, I'm here in the UK. You think UK would be my main market, but it isn't. The difference in opportunities is vast. And if I had to focus on one market for the rest of my life, it would be US stocks. Simple as that. Okay, then what I would do is pick the market and the appropriate explorer. And then let me see if I can do it just for demonstration purposes. In fact, let me just do the UK stock market just because it's quicker. So you guys get a feel for what it actually looks like when Meta stock is going through the scanners. So, oops, excuse me, I'm using a tracker pad here. I haven't got my mouse with me. Let me get rid of that. Okay, so now what you can see is that we're going to scan 987 stocks that are going to meet a particular criteria that we have programmed. We will look at some of that criteria. Ultimately, guys, every asset that makes it into my portfolio meets a 16-point checklist system. There's 6 indicators on the monthly, 4 indicators on the weekly, 6 indicators on the daily time frame. I'm a trend follower, so I'm looking for those big moves on the higher time frames. Part of that 16-point checklist has been programmed into the scanners, and the other part of it is then done through manual analysis and the tools that we have developed. So let's just focus on the UK market. I've chosen the UK scanner, and if I click set start exploration, there you go, boom. You can see that it's literally going through almost 1,000 stocks. And voila, it has given me a set of stocks that meet my criteria. So those are what, 1, 2, 3, 4, 5, 6, 7, less than 10 stocks. So you can imagine if you had to do that on a manual, on a daily basis, try and find those 10 stocks out of the 1,000. That's an impossible task. So this is the beauty of Meta stock and the MET. We within seconds we can find the stocks that are starting to display that edge. Ultimately, these are right now the strongest stocks in the strongest sectors. So beautifully done. So then what we would do is we would save that list. So I have a way of saving lists, all the Indian stocks, UK stocks, US stocks, and then with the date, I would then save that list. I've already done this scan, so I'm not going to save it again. And then we go to charts. Okay, and then what we would do is we would go to the list that we've saved, and we would pick the first stock in that list. In fact, let me do the most recent one. So this is UK. I would pick the first stock in that list, and then I would click open chart, and this would then open up the tools and the charting system that we have developed. Oh, yeah, there we go. Taking a bit of time. I think that may be my internet. Okay, so what we have is a 4-screen.
Hey, Zaheer.
Hi, Jeff.
Hey, I'm just having an issue with your screen share a little bit. It doesn't appear that it's working properly. So I think what I'd like to do is just reset it a bit. We're seeing parts of your Metastock platform, but not the whole thing. So what I would like to do is actually just I'm gonna take the presentation screen for a second.
Okay.
We're gonna go ahead and click on share. And now you can see my screen. Now I'm gonna send it back to you, but this time when you share it, I want you to share the entire screen. And so
okay,
there should be a screens button.
Yeah, good.
And I'll just make sure that we can see it properly. It's been a little confusing because some of it's coming through and some of it's not coming through, and it took me a minute to figure out that I don't think the share is set up right.
Okay. Have you sent through the instructions?
Here, let me say, I did make you the presenter, but let me do it again. When I make you the presenter, it should just ask you if you want to share your screen.
Yeah, I'm not getting that message at the moment. Hang on, let me just see. I've got 3 screens here, so it might be just popping up somewhere else. Bear with me 1 second. Oh, here we go. Okay, right. Let me do this. Let me just make sure that's open first. Okay, so I'm sharing my whole screen now.
Okay.
All right, so where I was I opened this chart here, and you should now hopefully be able to see the 4-screen setup.
Yep, it's coming through now. And it is taking a minute to load for
Yeah,
you.
I think when you share the window, it probably was just sharing the Metastock window and not the charts when I was opening them.
Yeah. Yeah, I do see the charts loading in. They're a little bit, they're taking, there they are. Okay. I think we're okay. My apologies. I should have caught that a little earlier, but we can see
No
everything.
problem. I guess they missed the scanning and might not been able to see the scanning that we went through.
Weird part about it, because when you scanned, I could see it. I could see
Okay.
you running the scan and stuff like that. So I'm like, is it not
Brilliant.
working? Is it working? That's why I was confused. But we can see everything now.
All right, brilliant. Okay, excellent. So, quick recap: we run the scans. We went through 1,000 UK stocks. Within seconds, it gave us 10 stocks that meet part of that 16-point checklist. I saved that list of ultimately what are the strongest stocks in the strongest sectors, and I'm now going to manually analyze those stocks using this 4-screen setup. So the remaining part of that 16-point checklist, I'm now going to do manually. Now, what we've got here is the top. In the top left is the monthly, in the top right is the weekly, and then we've got 2 daily charts, bottom left and bottom right. Now, before we actually go into the actual individual stocks, I'm just going to close this, and the first thing I want to look at, excuse me guys, the first thing I want to look at is actually the S&P 500, because in that order, what I said previously, the first thing we really want to look at is market conditions. So let's have a look at the S&P 500. So I'm going to open up the SPY. In Metastock, it's called the SPY. So I'm going to open that up. Okay, here we go. And we'll be able to do quite a lot of analysis on the S&P 500, which will make it easier when we look at the remaining stocks. So same setup, monthly in the top left, weekly in the top right, daily in the bottom left, daily in the bottom right. Now, monthly, weekly, and daily bottom left, these are our analysis timeframes. This is where the remaining part of that 18-point checklist system are. The daily in the bottom right, this is our strategy time frame. So this is where you'll find the entry points, the stop losses, the risk management, the compound levels, the breakout bars. All of that will be in the daily in the bottom right. So we're going to park the daily in the bottom right for a second, and we're just going to focus on the monthly, weekly, and the daily in the bottom left. Now, what we're looking for is really the S&P to be bullish. If the S&P 500 is bullish, we know the market overall is bullish. What is the S&P 500 doing now? It's setting record highs. A marker that I have is this green line here. This is the highest point of the previous calendar year. So this is the highest point of 2025. Any asset that is trading above the highest point of last year has a bullish bias. Assets that are trading inside the annual levels of last year, so the high and the low, this red line here is the low of last year, is a consolidating asset. And if anything is trading below the low of last year, that's a bearish bias. So you can see straight away how you can use the monthly time frame to get a lot of information. So with the S&P, what we want is a bull market. If we go back to March of this year, what did we see in March of this year? We saw the internet going mad because apparently the market was going to crash because of the unfortunate situation in the Middle East. The media narrative was the market is going to crash, 1930 all over again, yada, 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 yada. If you go to my socials, what I told people on my socials was remain calm, apply patience, because all we're seeing is a seasonal correction. Now, typically at the start of the year, there is a pullback in the market. Historically, February is one of the weakest months of the year. If you go back and analyze February over the last 30, 40, 50 years in the S&P, it's typically one of the weakest months of the year. Now, a correction doesn't have to happen in February. It could happen in January. It could happen in March. This year, it happened in March. And what I told people was apply patience. All you need to do in this period is cut out of the weaker stocks. So any stocks that are hitting your stop losses, cut out of them. But a lot of stocks will just hold well inside very tight ranges. And other stocks will start breaking out and leading the way. And that's all we did during April is we rebalanced the portfolio and that, in March. And then in April, a complete turnaround. How many people were caught on the wrong side of the market listening to that internet narrative? Many would have sold off their portfolios. Many would still be in cash waiting for a crash, right? Ultimately, all of that information was wrong and misleading. And now the stock market is setting record highs. And if you look at this month, that has continued. What we have here are certain indicators at the bottom. These are some of the features within Metastock. You can see this green ribbon. It's telling us that the monthly time frame is bullish. If we go to the weekly time frame, the weekly time frame is also bullish. We let that open up. We have a trend filter that's green. So if you look, there's periods of gray, periods of red, and periods of green. When the trend filter is green, that means we're in a bull market. And the trend filter has been green since the week of 17th of April. Above the 50, above the 200 simple moving averages, above all key levels of support and resistance. And the ribbon here at the bottom says bullish, confirming that we are in a bull market. And then if we go down to the daily time frame, what we want is the same setup. Monthly is moving up. We look at the weekly. If the weekly is moving up, we then look at the daily. And if you look at the daily, the trend filter is green, above the 20, the 50, the 200 simple moving averages. And we've got a ribbon here that's green, that's telling us bullish. So what do we have, guys? What we have is multi-time frame alignment. Monthly, weekly, daily, all bullish, all aligned. That's strength upon strength upon strength. It's just stacked. And what I like about Metastock, another really cool feature, is that when we have that alignment between the monthly, the weekly, and the daily in the bottom right, the bars turn blue. So you can see that the bars have been blue since the start of April, telling us that we're very much in a bull market. And so that is all we need to know, that we're in a bull market. Everything else is just noise. And again, as I said, this is where people tend to go wrong. Everything else is just noise. They now go on the internet to see what so-and-so is saying, and they often are giving the wrong information by saying the market's going to crash. You need to start selling your positions. This is a time to be buying stocks. This is a time to be holding the strongest stocks and compounding. And remember, if a market correction comes in, what's the point of risk and exit management? That's the purpose. Their purpose is to protect your downside. So the logic is to side with the bulls, but protect yourself from the bears. This way you're profiting and simultaneously protected. This is the hallmark of a good investor. So we've identified market conditions. We've looked at the S&P. Everything is fine. Everything is bullish. We now want to start looking at individual stocks. So let's have a look at some of the US stocks that were picked up by the scanner, and some of the processes that we have, the tools and the checklist system that we have. This is STX, guys, Seagate Technologies. Now, the S&P 500 has climbed 100% since 2022. If you look at Seagate Technologies, guys, since 2025, this has climbed 600%. So this is what I mean by stocks outperforming the index. We want stocks that move up further and quicker than the average. Think of it like this. Most people invest in ETFs, and an ETF is a basket of stocks. Let's say a basket of 10 stocks. And because you've got a basket of 10 stocks, all of them are performing differently. What the MET and what Metastock will help you do is to go into those 10 stocks, analyze each stock differently, analyze each stock individually, and then cherry pick the very best. So instead of settling for an average of the ETF, I can pick the 1 or 2 stocks that are outperforming the ETF and just invest and hold and compound those. So this is the process that you want to be looking at. This is what technology can now do for us. So if you have a look at the S&P 500, looking at the monthly, the S&P 500 broke above the highest point of last month. This actually broke above the highest point of last year in January. So this is a stock leading the index. So when we can start seeing stocks breaking above the highest point of last year, we can start buying these early and not have to wait for the index. We're waiting for the index to catch up, and then that would push all of these stocks further and further up. These are the early leaders. So monthly is bullish. Weekly in the right is bullish. Again, the trend filter is green above the moving averages. Look at the ribbon, guys. This bullish ribbon is going all the way back to May of 2025. And then if you go down to the daily, we can see that the ribbon is bullish as well. So we have that multi-time frame alignment. We have monthly, weekly, daily telling us strength. And regardless of what's going out there on the big bad world of the internet, this stock is one that should have been in your portfolio months ago. Now, once it's starting to set up and you want to take a position, this is where the daily in the bottom right comes in. First of all, the bars start turning blue. The bars turn blue, telling us that we have that alignment. Monthly, weekly, daily are all moving up and outperforming the index. We then want entry points. So see these little green diamonds? These are entry points. So that each time the market breaks out, it will tell you that this is a breakout. These are entry points. Now, again, what we want to filter is the weak breakouts. We really want to focus on breakouts like this, where it's a strong bar. These sort of indecision candles, these can tend to cause reversals where it could hit your stop loss. We want the strong breakout bars. And these are the ones we want to enter in on. And that's what this histogram at the bottom will tell you. It will tell you which are the strong breakouts by having a green histogram. Anything that's a gray or a red histogram, you may still want to enter, but then you can adjust your risk. So on the strong breakouts, you may want to enter on 2%. On the weaker breakouts, you could enter on 1% or 0.5%. Now, with each breakout, so this is the most recent breakout, you will have an entry, you will have a stop loss, and you'll have a compound level. So if you look to the right-hand side, the entry is 846, stop loss is 628, compound level is 1064. This is an expensive stock, so we've got those levels. Ultimately, there's formulas and algorithms that go into this, which is all explained very nicely in the expert commentary. This is a beautiful feature within Metastock. Not only is everything explained in a detailed manual, so this isn't a black box system, all the formulas and algorithms are fully explained, so you know exactly what's going on, but there's also a commentary that goes in with this, so you understand what is happening bar by bar. So if you have a look, there's an upside down triangle on the current bar. If I move it along to the next bar, that triangle has moved along to the next bar, and then the commentary will change for that particular bar. So there's a beautiful feature within Metastock, which is that commentary. It's almost like a little friend on your shoulder telling you what to do. So once we put in our entry, once we put in our stop loss, all we need to do then is take a position and put that into our broker account. Once it's triggered, we let the forces on the market take over. We want it to move to this level. Once it moves to this level, we then consider buying more. So that's that compounding process. If it triggers us in and stops us out, well, that's failed. That's part and parcel of the process. What we want to focus on is not how many winners, but we want to focus on large winners. So what you'll tend to have is lots of small winners lots of small losers that will stop out at 0.5%, 1%, but you will have very, very large winners that return you 10, 20, 30%. And if you've got a portfolio of these large winners, that is how you compound your returns over many, many years. So let's have a look at another stock. That's STX. Another example is Amphenol. Amphenol has actually been in my portfolio since 2023, and you can see that this has been bullish really since 2023. That ribbon has been telling us that we've been in a bull market. Currently, it's inside a consolidation, and that's fine. And the reason for that is because there was such a big move that it's currently consolidating. If it breaks through the bottom of that consolidation, I will potentially exit, but now I'm holding. Excuse me. And as the overall market is bullish, the breakout to the upside is very likely. So we're just waiting for that next breakout. On the weekly, overall, it's bullish. Currently, the trend filter is gray, confirming that we're in a sideways market. But look at where it's finding support at the 50 simple moving average. This is a proven support level. And if you go to the daily, again, it's a flat market. So this is a market now that you can stand aside on, because we're looking at other stocks that are breaking out and leading the index. This is one of those stocks that's underperforming against the index right now. It was outperforming the index, but this is where that sector rotation has come in that I was speaking about at the very beginning. You want to always be looking at the strongest stocks in the strongest sectors. Amphenol had its time between 23 and 2025. Now it's settled into a sideways market. So while it's settled into a sideways market, we want to start adding the other strong stocks, because I have no risk on this stock anymore. It's all just profit. So I can take 1% of that risk, that profit, and I can apply it to another stock. So let's have a look at another stock that I have got in my portfolio. Okay, CBOE Global Markets. Now, this is a stock that has begun its next uptrend phase. I've been holding CBOE since 2023. It's performed very, very well. You can see now, as of this month, it's broken out. It's setting record highs. It's above the highest point of last year. The ribbon is bullish. If you go to the weekly, nice clean trend in play. You can see this upturn where the momentum has come in. above the weekly, above the 200. The ribbon's been green. Look at the bullish ribbons, guys, all going all the way back to 2023. This has had numerous bullish phases. And then the daily time frame is confirming a current bull market as well. So if you look at the daily has blue bars. It has the entry. So the entry was triggered on this entry here, telling us that this was a good entry point. We have the stop loss and we have the compound level. So all we're waiting for now is momentum towards that risk-free level. So you can see now how all of that guesswork has been removed, and we now have a process in place. Let's have a look at a couple of other stocks. Let me just conscious of time. Curtis Wright. This is a stock that's been in our portfolio for a while as well. Look at the movement to the upside. Strong performance in place. Bullish ribbon on the weekly, bullish ribbons on the daily. Currently, it's a bit flat, but if it breaks out and starts moving, that's a stock that you absolutely want to consider. And once you've considered it, you've got your entry, your stop losses all in play. Now, this is a stock that must be in your portfolio. eBay. This is a new stock that I've just added, and you can see why. It's only just started its new uptrend phase. You can see the ribbon has just turned green. We got green on the weekly. We got green on the daily. The bars have only recently turned blue, and we've got a new entry point right here from 3 days ago. Here's your entry. Here is the stop loss. Here is the compound level. This position has been placed into my broker account. So I'm now just going to allow this to do its thing. It'll take a few days to get to that compound level or hit the stop loss level. With the market moving up, it's more likely to move up than move down. Once it moves up, I'll then start compounding. So this is the system, guys. I hope you got a really nice insight into how that works. So what I'm going to do now is just move back to the slides and just bring this all to a nice end. So just bear with me 1 second. I just need to share the slides. Give me a second. Right there. Boom. Okay, brilliant. Okay, excuse me. That's a lot of moving parts here. Okay. Yeah. All right, good. Jeff, could I just get a thumbs up that you can see my slides?
You could get a verbal yes.
Yeah, absolutely. Yeah, thank you. Okay, so what you just saw. You saw how the MET turns a noisy market into a structured workflow. We focused on index. We then looked at the sectors. We found the strongest stocks in the strongest sectors. Once we had the stocks, we then looked at the setup, made sure that it met that 16-point checklist, looked for that the ribbon, the bullish ribbon on the monthly, the weekly, the daily, the blue bars. Once that all displayed, then we went to the entry, the stop loss, the risk, and then we had the compound levels. And then we have a trailing stop loss, which actually manages and follows, so you know precisely where you're going to exit once the market reverses and stops you out. In fact, I should quickly go back to, I'm hoping that I could actually do that. I am actually going to quickly do that. 1 second. Where are we? We are here. I do actually really want to show you this because this is really important. So the stop loss. So if we go to, what should we look at? CBOE. So we go to CBOE, Global Markets. And if I just compress the charts, there you have it, guys. You can see below the charts, can you see the lines there, the trailing stop loss? See how well it manages the position. It allows the trend to develop. Even during these normal pullbacks and volatility where everyone's panicking, I have the stop loss in place. And only when it hits that stop loss do I exit my position. And so this is the real advantage to having a mechanical process. It removes all of that guesswork. Everything is already there on the charts for us. Okay, now let me quickly switch back to this. Okay, so the exits, market direction, sector strength, stock selection, setup quality, entry, stop loss, risk, compounding, exit management. That is the process that you want to be going through. That is the difference. Most investors are looking for tips and shortcuts. The MET gives you a repeatable process for identifying strength, managing risk, and compounding winners. A stock is never analyzed in isolation, never. A strong stock in a weak market is vulnerable, but a strong stock in a strong sector has fuel. And those are the ones we always want to be narrowing down to. Market. So step one, market direction. This is a recap of everything that we've just looked at. Step one, market direction. Before we care about any stock, we ask, is the market giving us the green light? And that's where the S&P 500 and the all-time highs come into play. Step two, we want sector strength. The strongest stocks usually come from the strongest sectors. This is where institutional capital is flowing. Step three, relative strength. We don't want cheap stocks. We don't want popular stocks. We don't want opinions. We only want leaders outperforming the index. Step four. Now, this is the phase 4 sequence method that every stock I invest in goes through. First of all, when I do that manual analysis, ultimately, what I'm looking at is making sure that the stock has a proven performance history. Think of it like a flight of steps. I want stocks that move up, flatten out, move up, flatten out, move up, flatten out. Every time it moves up, I buy. Every time it flattens out, I either sell or I hold on, depending on how deep that flattening out phase is. But ultimately, we want stocks with a proven performance history, at least 12 months. And I want stocks with at least 5 to 10 years of history so that I can analyze that. So that's why I'm not interested in IPOs. I know a lot of people are getting excited with Anthropic and SpaceX and all of these IPOs, but ultimately IPOs have a history of tanking and then going sideways, and you're just going to have your capital tied up. So I'm not interested in the hype. I'm interested in proven stocks. Phase 2 is then a consolidation base. I want at least 3 to 6 months of a sideways market. This is where it resets. And then phase 3 is that breakout from that consolidation base. And then phase 4 is where I enter and I buy. And typically phase 4 lasts about 12 to 18 months. So all the strongest stocks in the strongest sectors follow this process. This is where the scanning and the analysis comes in. It's always finding these stocks. And every stock in my portfolio is basically a phase 4 stock. Setup quality. Not every breakout deserves your money. We want the strongest stocks breaking out from the cleanest setups. Again, that's where that breakout analysis tool comes in. We always want to be cherry picking the very best. Stop loss placement. Before we care about how much we can make, we need to know exactly where the setup fails, because that's under our control. We always want to protect our downside. No stop, no trade. You do not want to enter the market without a stop loss. What you want is a wide stop loss, well placed. And good stop losses are based on the volatility of each asset, because each asset has its own unique volatility. Step 7, risk allocation. We want enough size to matter without enough risk to become emotional. A good setup with poor risk is still a poor trade. So risk allocation is extremely important. I mentioned typically 1%, 0.5%. We've got skin in the game without being emotionally attached. Losers get removed quickly. Small losses are the cost of admission. It's just the cost of doing business. Large losses usually come from hope, hesitation, and ego. We don't want that. Hope is not risk management. And then step 8, compounding winners. The real money is not made from being right once. It is made from adding strategically to proven winners and letting trends do the heavy lifting. We add to strength because the market is already proving the idea right. Compounding is an absolute must. Exit management. This is where most investors fail. They buy well, then butcher the exit. We use a trailing stop loss, as I just showed you, to the assets. You match to the asset's volatility. The exit protects the compounding. So this is how a portfolio compounds. Find strength, enter with structure, define the stop, cut weakness, protect capital, add to winners. Let trends do the work. Knowing what works is not enough, guys. Most investors do not fail because they lack information. They fail because they lack a repeatable execution process. Information is everywhere. Execution is rare. The real problem is consistency. Can you scan consistently? Can you filter objectively? Can you avoid weak assets? Can you hold winners? Can you exit without emotion? These are the questions that need to be answered. This is where most investors break down. They start with good intentions, headlines get noisy, markets pull back, confidence drops, rules get ignored, profits get butchered. Without a clear strategy, behavior becomes the problem. The weekly routine is this: check the index, do that daily, check sector strength, run the MET scans, review the shortlist, confirm setups, manage entry, stop loss, winners, and exits. We do this every day. But at the very least, you want to do this once a week, which is at the weekend, because the markets are closed and you have the weekend to settle down and do your analysis. But you want to be doing this every day, once a week. But this is the process that you want. Simple enough to follow, strong enough to matter. And that's the key. So the outcome, a cleaner watch list, better timing, more confidence, no noise, a stronger portfolio process. Confidence comes from the process. So what happens next? You can either keep trying to piece the market together yourself, and believe me, guys, I know from my early days that I figured this out. You can absolutely figure this out, but it's going to take you a lot of time and a lot of money. And at this stage in your life, you probably don't have that. What you have is the money from all the work and the savings and all the career time and effort you put in. What you want is to put that to hard work as quickly as possible. And so this is really where our system comes in. It will save you the time and effort to figure this out. It's already working. It's already proven. You've just got to make it work for you. The wheel's already in process, guys. Use a structured system, or you can use this structured system built to identify strength, manage risk, and compound winners. The MET for Metastock, a professional grade trend following add-on designed to help investors identify high performing stocks and assets with a repeatable process, built for investors who want process, not predictions. What you will get: 4 explorations, 16 expert advisors, 11 bespoke indicators, 1 breakout template, that 4-screen setup I showed you, full training manual, everything explained, everything. It's excellent manual put together by the team at Metastock. William at Metastock's done an excellent job. Support from Metastock, support from Sublime Trading. The one thing, guys, that I love about Metastock is that their support is only as good as our support, and I can tell you that there is not a lot of good support out there. So that is part and parcel of why we love working with Metastock. So the MET typically is $1,497. That's a one-time offer. The event price is $997. So again, one-time offer. Jeff will send you a link and some information about how to get this available for Metastock event attendees. We're throwing in some wonderful bonuses: one-to-one onboarding call with myself. You'll have a private community where you can discuss all the setups and make sure that you get the help and the training that you need within the community. And then you'll also get training access, a live bootcamp recording, which is in the back end, the members area. It's a 3-hour recording on how to use the MET properly. And then any future sessions that we do, you can attend that at no additional cost. So bonuses totaling $3,100. You get that absolutely for free. So the complete stack and the MET add-on and the event bonuses at $997. The point is not just the discount. The point is having the system, tools, and support to apply the process properly. So here's what the MET actually does. It turns decades of market experience into a repeatable process. It saves hours of manual scanning and filtering, helps you avoid weak markets, weak sectors, and weak stocks, uses the same process behind our professional portfolio and hedge fund, gives you a system you can use, refine, and eventually pass on to your kids and loved ones. And it turns ordinary portfolios into extraordinary legacy ones. No noise, more process, better decisions. This is not just software. Software gives you the tools. The MET gives you a process. This is the difference. Tools are useful. Process is what compounds. So who's this for? Investors who want structure, investors who want to stop guessing, investors who want to use Metastock properly, investors who want to build serious long-term wealth and a portfolio, serious investors, serious process. This is not for day traders, top callers, bottom guessers, signal chasers, anyone looking for a magic button. This is not entertainment, guys. This is a process. The MET gives you the edge investors are missing, not because it predicts the market, because it gives you a repeatable way to find strength, manage risk, and compound winners. Edge is not a feeling, it is a defined process. The truth is, the simple, proven process creates the biggest long-term impact on your financial success and stability. Now, it may sound boring until you see what discipline compounding can do. There's nothing boring about wealth building through compounding. The exciting part is not the signal. It's about having a process you can repeat for years. This is how portfolios become legacy portfolios. So here is some of the stuff that our community members have to say. You can go to our Trustpilot to see all of this. I'm not going to go through it now, but you'll see returns of 100% all over our Trustpilot, something that we are extremely proud of. So I'll leave that there for you when you want to watch the recording. So once again, $997 is the price for the add-on. That's a one-time offer for life. Over to you, Jeff.
Yeah, one question for you.
Yes, please.
The question that we had, I should have pulled it up. Does your strategy mostly involve buying ETFs, or do you work with single stocks as well?
Well, maybe the gentleman or the lady who's asking the question jumped on a little bit later.
It was
I
early.
explained at the beginning how this system is about individual stocks, and I gave the example of how actually if you look at an ETF is an average. So if you invest in an ETF, you're only going to get an average performance, let's say 5% off a basket of 10 stocks, 5% a year. But within that basket of stocks, there'll be 2 stocks or 3 stocks that are moving up at 10%. So we want to be able to break up that basket and just narrow down to best stocks. And so this is what that system does for us.
Yeah, I think that was a question that was asked very, very early on. You also do a lot of work in international markets as well.
Absolutely.
What are your favorite markets, and does it work on any market?
Yeah, absolutely. We've got members in India, so this works for the Indian stock market. We've got people in the UAE. We've got people throughout Europe who use it in their market. We've got people in Australia. So ultimately, if MetaStock has the market to scan, then this system can be used for that market. And I don't think there are many markets that MetaStock don't have.
You did a very, very good job of kind of showing everything too as well. Much appreciated. Great job today. I do want to talk a little bit about how to get the offer and where you can get started today with. So the community you've put together is amazing. It's awesome. The pet indicator does include all of the indicators, the experts, the scans that are part of it. We did record a instantly available boot camp that's 2.5 hours, whereas Zaheer is very, very, what is the word I'm looking for?
Thorough.
Thorough. Yeah, a very thorough demonstration on how to use everything, how to take advantage of everything, something to help you get off of this line.
Absolutely.
Can you stick around and help me with adjectives for the rest of the day? I'd appreciate it.
You're doing a good job, Jeff. You've done a great job for the whole week. It's Friday.
Yeah.
I get
we'll give you a free trial to MetaStock if you haven't tried it already. You can also do the extended trial. We'll give you unlimited access to support, all of that kind of stuff. So generally with Market Edge technology, what you're going to get is the normal cost on it is $14.95. We are running a special on that, $9.97. In addition, we're going to throw in the bootcamp. In addition, we're going to give you the money back guarantee. You can try it out. You can see how well it works for you. I don't think we've really even literally taken a return on this. People love it. So give it a go. You can do it at metastock.com/conf-promo, which I've put in the chat. You can give us a call if you have questions and you want to talk to us about it, 800-882-3040. And you can go to metastock.com/saleschat. So, Zaheer, thanks for being here. Thanks for being part of it.
Thank you, Jeff.
Appreciate it.
Always.
Okay.
Yeah, thank you.
All right. Cool. Oh, and then you can also go to metastock.com/sublimemet. But just go to metastock.com/conf-promo. I didn't notice that was hid under there. All right. Talking a little bit about communities, I want to make sure you get a chance to join the tradersforum.com. It's a great place where you can go chat with other traders. It's a growing community. We've got about 1,500 or 1,600 members right now. We do a lot of fun stuff up there. You can chat with other traders. We do podcasts where we bring in a trader and we just talk about the markets and life and stuff. We do a workshop every week where we focus on different techniques to looking at the market. We've done everything from like CanSlim to patterns and candles to, just about anything. MACD, Ichimoku. Anything you can think of, we've actually done, and we're adding lessons all the time. We did a whole options course up there. So you can join. All of that stuff is available. We provide it for free. It's at thetradersforum.com. So very, very good resource for you. We have been rated, MetaStock has been rated #1 in its price category for 32 years in a row. All of the specials we're talking about, including the Sublime, you can find at metastock.com/conf-promo. You go to metastock.com/saleschat. You can also give us a call, 800-882-3040. It's time for another good friend of mine. Seems like I have a lot of friends during these conferences. Rob Booker is very unique in his presentation style and his abilities. I love having him on here because I love to get a different take on the markets. And Rob certainly provides a very good, informative take. Usually when he talks, I go, oh, that makes a lot of sense. So, Rob, are you ready?
I'm ready. Well, actually, to be completely honest, can you hear me okay, first of all?
I can hear you great. You
Okay,
sound like an angel.
First of all, no, I'm not ready. That was the big mess today. But I'm ready to talk, and I'm ready to present some cool stuff. I just, my camera that's plugged in that worked last time perfectly doesn't work anymore. My Metastock charts fell down. And then, Jeffrey, I realized why they have not been able to open the Straits of Hormuz. It's because it requires you to remember your Windows login and authentication. They must just be missing the Microsoft Authenticator app. And if they just had that, they could open up the Strait. Because I just had 9 million problems. I am ready to present, but I just want to apologize. First of all, Jeffrey, you've been so good to me, and we love you here at my organization. We just think the world of you. You're our favorite person that we work with.
Ooh, go on.
I don't have my Metastock charts up and running, and it annoys me. It's embarrassing, and I want to apologize to you and everybody else here. I'm going to use some other lesser charts today because everything crashed. I restarted my Windows computer, and I lost it all. And I have to just re-log into Windows, and it's just been a mess. So I just want to apologize and say I'm so happy to be here, but I'm not going to be using the Metastock.
You're far more stressed about it than I am, Rob. Let's not worry about it. But I do have something that might be a little bit fun for you. It might help kind of ease the anxiety I'm feeling from you.
Yes.
Do you want to help me give away this book? This one is called High Profit Candlestick Patterns, written by Steve Bigelow, a good friend of Metastock. We love Steve.
Yeah.
And so I'm actually, I'm going to have you give me a number. The number that you're going to give me is going to be anywhere between 2 and 5,459.
4,900.
5,459.
Okay, and the number I'm going to give you is 4,999.
Okay, you were too fast. That's why I thought you had heard me wrong. We've got a, I'm sure I'm not supposed to say somebody's first and last name, but in this case, I'm going to break protocol. The person that won this book is in the U.S. and their name is Royal Trading.
Wow.
Congratulations, Royal. I'm going to send
Mr.
you.
and Mrs. Trading must be so proud. Must be so proud of Royale with. Is his middle name Royale, and is his middle name with cheese? Because that's what I need to know.
I'm pretty sure we get a lot of registrations where it's like Trader or something like that.
Trader.
His real name, but he just won a prize. We'll give it to him anyway. All right. I just sent the screen share to you. Let's take a deep breath. Let's make sure everything works really well. I'm really excited to have you on here.
I'm so happy to be here. Thank you so much. Okay, here we go. I'm going to do, let's see here. First of all, I think we've got this. So first of all, I just joined.
Oh, hey, welcome to the forum.
Yeah, I'm going to just go nuts in here. I love this kind of stuff. Everybody, go to the tradersforum.com. This is there's not a lot of good places for good, honest traders to talk. So I'm really excited about this. I think that's great. Thank you.
I wonder what number you are. I'll find out in a second. Actually,
well, probably, yeah. I mean, probably 4,999. No, I don't know. That's great. Thank you. I'm so excited.
Okay. Yeah. Post in there a lot. We like to have smart people in the forum because it helps us all.
Well, I'll try to recruit some smart people to join me. That sounds great. This is excellent. So you can see my screen now. I just want to check. Can you see a chart now when I switch?
Yes.
Okay, great. Perfect.
And this is my cue to get out of the way. I'm here if you need me, but we're starting a little bit late. I don't want you to be too worried about it. Just try to not go too far over.
I have until about what do we say? If I went for about 45 minutes, we'd be good, right?
Yeah. You feel free to go just a little bit long. We're on Friday. It's
okay.
45 minutes to 55 minutes would be perfect.
Okay, that's great. Now I don't know if I can see questions in chat, but I am going to ask for a little bit of input, see if I can hear from people that are here.
I just turned on chat for you so you can see them. So you're now an organizer.
Oh, there
that comes with some responsibility. Just when you leave the room, either let me excuse you or do not click the button that shuts down the room.
Okay.
One of those things.
Yeah, I'll let Jeffrey kick me out. I just
Okay, sounds good.
then I can hold it against him because I have nothing to hold against him ever. All right, everybody, thank you so much for being here. First of all, I'm going to tell you what I've been looking at. I'm going to share with you what's been on my mind lately, and I think it's probably the most important market position I've had for over a year. And I'm going to explain why that is. And it's not going to surprise you, but it may spark some debate, and I'd be interested in that. And I want to hear your opinions, whether they agree or not. We're going to look at some of my favorite stocks right now. We're also going to look at what I call correlations and pairs trading, which we don't talk about a lot. And Jeffrey, I'm very interested in speaking to someone and paying someone who does development for Metastock to build a pairs trading indicator or setup for Metastock. And we could talk more about that as I go through there. And then because of everything that I'm going to share in the presentation today, I'm going to share with you a strategy that has become my primary strategy, which many of you know about. And at the end of this presentation, I'm going to invite you to a free webinar series that I'm doing that will be recorded and that I strongly encourage you to sign up for because it's absolutely free. Most of what I do is free. And let's get started. So NVIDIA has been on my mind a lot. And I know that just sounds very cliche because it's been on basically everybody's mind. But I want to repeat this question several times, whether or not I get a bunch of answers or not. I want to repeat this question several times and give you the chance to respond because it's important for me to be here and serve you. I'm not here to sell you anything today, although I'm sure there's been great presentations on that. I love what Zaheer just was sharing. I'd love that. But today's really more about me sharing a market perspective without any kind of commercial stuff mixed in today. Because I think this is important enough that we need to stop and we need to really think through what's going on, because there's never really been a time like this. And it's important for us to stop for a moment and not get caught up in nonsense and noise and focus on what's really, really important right now. And NVIDIA is at the front of the pack. It's been over a year. It's in fact probably been 2 years now that folks have been saying on television, business television, and blogs, and Michael Burry on his Substack, that the market is at extreme levels and there is a bubble related to AI. And yet, at the same time, Mr. Wonderful Kevin O'Leary, also who happens to, I guess, from the movie Marty Supreme, be a ping pong coach or a whatever, also is building a 40,000 acre data farm, AI data center in Utah. And I'm not sure what Jeffrey and others think about that or what any of you think about that. And, you know, it's what we think about it is not as relevant right now as the fact that it's happening. And there is an enormous amount of money being spent on it, more money being concentrated in one area than I think I've ever seen in my market and trading lifetime. And the reason I bring that up is that NVIDIA, I'm guessing, didn't see the earnings report. Okay, they beat earnings. I was guessing that they beat earnings. NVIDIA is now, as of the moment that we're looking, a $5.26 trillion company. But it's not going up today. So I'm interested, and I'm wondering if anyone else besides me thinks that this is particularly interesting or concerning. And I'm going to show you the bigger picture on NVIDIA, and then I'm going to show you the bigger picture on semiconductors. Then I'm going to show you my market perspective on that. Then I'm going to show you a trade idea that I believe very much in, a second trade idea that I believe very much in, and then a strategy that I think you have to know. And whether you agree with me or not is totally okay. We're all friends here, and I'm here just to present stuff, like I said, and I'm here just to share it. And I had something that I thought about selling today, but I thought it would get in the way and that you would think that I was talking about this stuff just for the purpose of then selling you something. So I'm not going to do that today, because this is an important enough message that I think if I take this trade and if you take this trade, we're going to make money. So I'm going to make money from the trade. And then we can talk some other time about cool stuff that I've got for you. And boy, do I have cool stuff for you. But first, I want to earn your trust. And I want to share with you a few things about NVIDIA and semiconductors in general. First of all, it's impossible for me to imagine any scenario except the one where we call this a bubble. 25 years ago, when we had the tech bubble, stocks were priced at about 100% of GDP, essentially, the gross domestic product of the United States. It's at 200% now. So we're double the extreme that we were at 25 years ago. I think it's triple the extreme that we were at before the COVID crash. So we are in uncharted, insane territory. If you've ever watched any of those movies where some crazy guy says he wants to free climb El Capitan in Yosemite, where he doesn't use any ropes and stuff, and he just literally climbs up the face of the mountain. If you've ever seen anything like that, you look at that guy and you go, that guy's nuts. That's how I feel about anybody who is week to week buying calls on or continuing to go long NVIDIA in an aggressive way. So if you've ever heard of the podcast and the show Dumb Money with Chris, forgot his name, Camilo, right? You probably heard him say last year that he was long Bloom Energy. He was a big fan, and for week to week, he was buying enormous numbers of weekly expiration calls on NVIDIA, and he was crushing it. But he would go to bed at night and he would be so scared and worried and concerned. Now, I think he's probably stopped doing that, and I think that's probably a smart thing. In fact, I heard him a few months ago say that that was insane, and he's not doing that anymore, and that was in December. But I don't know if he picked back up on that and started doing it again. But I think that right now we're on a knife's edge. And if you look at NVIDIA, I've got a bunch of trades here on a bunch of stuff that I've done. I want to focus on a trend line here. And this is a trend line that I drew back in September of last year. Underneath the candles, because what I wanted to see was, that's the thickest I can make that line. Okay, well, we'll just double this. See, Metastock is better. I had it all set up. Okay, so I drew this trend line and I said, well, this is the trend, and if it breaks the trend, it's possibly going to fall a great deal. And I was wrong. I was absolutely wrong. It fell below that trend line. It retested it, fell below it, retested it, fell below it, retested it a bit, went back above it. And then it has just been riding this thing and retesting it over and over. And I just saw this a few days ago. I was like, wait a minute. This trend line has become the balance of power. This trend line has become, as they would say 2,000 years ago, the Rubicon. When Caesar crossed the Rubicon, Pompey knew that he was screwed, right? The Rubicon was the river, and once you crossed that river, there was no going back. And I think that that's why NVIDIA is hesitating here. There's no going back. Once this line is crossed and it stays above this level, we're going for a $10 trillion valuation. Certainly possible, especially given the enthusiasm that there is in the market right now. Certainly possible, but probably less likely than a drop. And I'm not a perma bear. I am a short seller. I do buy stocks also. I'm not a perma bear. I'm not the guy that you say, Rob Booker has correctly predicted 15 of the last 2 bear markets, right? I'm not that guy. I don't incessantly say it's time to short everything and it's build a bunker so that you and Mark Zuckerberg can hide from whatever is going to happen. I'm not that person. Now, I do tend to lean towards bearishness, because when you call a bear market successfully, you get rich really fast. Theoretically speaking, you make more money more quickly in a bear market than you do in a bull market. A bull market, you make money over time and you can follow the trend and it's pretty cool. A bear market will rip people's accounts apart very quickly, within a day, in fact. The period. I have a friend or two with a pretty significant overall bullish market position, who I have on many occasions said, you are going to be in a lot of trouble really quickly. And during the deep seek sell-off, what was it, a year ago or 2 years ago, or whatever it was, they got a margin call. They got a multi-$100,000 margin call that turned into $1 million margin call, and it was a disaster. And I think we're headed for something similar again. And I'm going to share with you why that is. And in order to do that, I'm going to need to show you another chart, and then I'm going to help plan a trade that I am, in fact, going to take again today. And of course, all trading involves a substantial risk of loss, and this is not an offer to buy or sell any securities. This is purely for educational purposes, but I am a trader. I do make money from trading. I do make my money from trading, and I want to share this with you. And so what I'm going to do is share with you the following chart. This is a pairs trading chart. Pairs trading is a subject that rarely gets talked about, although I probably have a book right here to my left on the bookshelf called Pairs Trading, and it's terrible. It doesn't tell you anything. I couldn't understand a word of it. So I'm going to try to describe this in a much simpler fashion, and hopefully it will open your eyes to something very odd that is going on. On the chart in front of you right now, you have NVIDIA on the bottom, displayed with just normal candlesticks. Above it, with blue bars, you'll see AMD. Below both of those, you'll see a red histogram-looking situation, and this is the correlation. In times where AMD and NVIDIA are highly correlated and their movements mirror each other, you will see good, big, thick areas below. At times where it becomes uncorrelated, you will see it dip underneath. Now, why do I say that? Why do I need all of this on my chart? The answer is because they're both chip companies, and most of the time, the situation looks like this. They track each other. They follow each other. They sniff around on each other. What one does, the other one does. And it makes a lot of sense. They're in the same industry. They're benefiting from the same kinds of news. And so it makes sense that they're correlated. What doesn't make sense, at least initially, is when that correlation breaks down. Two things that should be following each other, maybe one takes the lead sometimes and the other one takes the lead other times, but they should track each other's movements. These two sets of bars and candles should be next to each other. They should do similar things to each other. The reason is there's not so much that's different between these two stocks. Now, there are differences. Maybe one gets a huge contract. Maybe the other loses a big contract. But between the two of these companies, which one is the certifiable, gigantic winner of all time? It's NVIDIA. NVIDIA is the most successful stock ever. It's the largest market cap of all time. It's the biggest story in stock market history. We will look back on this and we will say this is the craziest thing that ever happened in the stock market. A $5 trillion company. Even adjusted for inflation and even adjusted for the economy as a whole, no stock has ever had a run like NVIDIA has had. Never. It's never happened. Let's take a look at AMD's chart. So the guy that's building out and doing all the landscaping at my house, he told me the other day that his dad, a few weeks ago, heard me on a webinar and bought 1,000 shares of AMD. Bought 1,000 shares of AMD at $219 a share. 219,000. I guess that's what I guess that's the kind of money that boomers have, right? So bought 1,000 shares of this. He called me, and his dad was freaking out because he'd made $200,000 a month later. Now I'm going to ask you a very simple question, and it's a rhetorical question. So, you know, I'll just act like I'm hearing it, but I really do care. If you want to post something in the chat, you can, or the questions. Did something happen with AMD over the course of the last month and a half that would justify a greater than 100% move in a stock that already had made multiple 100% moves? No, this is pure speculation. The difference between speculation and underlying fundamentals is the following. Speculation is when someone who buys the stock today is expecting to get their money back because somebody will buy the stock from them after they've had their fun. Speculation is when you don't care what the fundamentals are. You're simply chasing a trend, which is fine. I'm all for it, actually. You're chasing a trend, and your ability to win on the trade depends on someone else coming along and buying it from you because they're excited also. And so you're just banking on the fact that someone's going to continue being so excited about AMD that you'll be able to get rid of your shares. You don't have to worry about the consequences of buying something this far overbought because someone's going to buy it from you. Okay, fair enough. Fair enough. Does anyone here think that the reason people are buying AMD over the course of the last week is that they think AMD in some way, shape, or form from a month ago is somehow going to be able to sell 100% more chips, and they will be able to earn the same or better profit margins on those chips, and that they will be able to do it long enough and soon enough that it will justify not just where the stock is now, but a further appreciation in the stock to $500 and beyond. In other words, when you buy a share of AMD, you are, as Warren Buffett would say, buying an entitlement to a share of their earnings in the future, their future earnings. Okay, but so did everybody else that came before you. So there's a whole line of people that bought it a month ago that don't need AMD to go anywhere right now. They don't need AMD to move $1 higher, and they are the happiest people on earth. And if AMD falls below 393, they're out because they already made their money. But the people who bought here are screwed. The later you buy it, the better you need the company to operate fundamentally. And B, if they can't operate fundamentally better, you need someone else to be equally excited. But in order for people to be equally excited about AMD, we need good news. We need good news about AMD. We need good news about NVIDIA. We need chips in general to do well. But we have a problem. NVIDIA did have good news today. They beat earnings. And NVIDIA didn't go up. The reason is NVIDIA already went up. Earnings are already priced into NVIDIA. So if you have Metastock, which I hope you do, you can have a better version of this divergence indicator that you see reflected in these red lines. That's called Knoxville divergence. I was in a coffee shop in Knoxville, Tennessee 14 years ago, and I coded Knoxville divergence, and it shows the disagreement between price, which is going up, and an oscillator, which is at the same time going down. And what it does is it shows you there's an early warning sign that things are overbought, and there's an early warning sign, but not a guarantee that things are going to start going down. What I'm trying to say here, in a very long-winded, and I apologize for how long it took me to say this, is there's something absolutely terribly wrong with the AMD chart. There is something incredibly wrong with the Intel chart. Okay, is Intel worth 3 times what it was worth a month and a half ago. Well, it is. It is. Why? Fundamentals? Did I miss something where we found out that Intel has actually received money for enough business that it's now worth triple what it was worth before? Now, they have had news. And of course, you and I, as Americans, theoretically own a piece of Intel now because Donald Trump bought 10% of it, I guess, or whatever, which is the most horrifying thing ever when the government starts buying stocks privately. But okay, we got that, but that's not enough. That's not enough. That's not America investing in Intel isn't enough to boost it 300% after already that happened. So that's not it. And it's not fundamentals because Intel hasn't announced something that will value the company 300% higher than what it was a month and a half ago. And you do not have to go that far back in time. And Intel was at $17 a share and close to bankruptcy. How much has really changed, except they're not going to go bankrupt? Intel's no longer going to go bankrupt. They can sell stock now. They have lines of credit now, so they're not going bankrupt anymore. But it's the same company. And they might have more contracts, but do they have 10 times the ability to make money? No, they do not. Now, Intel could do really well. Really well would be doubling a stock price over the course of the last year. But 10 times? The answer is all of the activity that you see in semiconductors going up, all of it is speculation. All of it. Some portion of it can be attributed to fundamentals. Fundamentally speaking, maybe all these companies are going to sell more chips. Okay, great. Fundamentally speaking, yes, they're going to sell more chips. Great. Then answer me this. Why isn't NVIDIA going up also? You might say, well, everybody's just catching up to NVIDIA now. And I can prove to you that that's not true. They're outpacing NVIDIA. 2 stocks that are generally correlated have fallen out of correlation because AMD, somehow, investors are thinking that AMD and Intel and other chip manufacturers somehow are suddenly worth more than NVIDIA. Not worth more in a market cap sense. They're just better companies than NVIDIA. So they're going up and NVIDIA's basically staying sideways. Just for a moment, just live with me in the world of reality. If NVIDIA is the #1 chip manufacturer in the world, is the only company that can develop the kinds of chips that are needed for training artificial intelligence right now. Maybe these other companies can do it later, but they're years away from providing all the chips. How is it AMD can't compete with NVIDIA? Not on AI chips, not on anything, not to the degree that it jumped 100% at a time when NVIDIA went sideways. Something is wrong here. And the something that is wrong is speculation. And you are never going to be upset when you stop and you take some advice from Charlie Munger and Warren Buffett and you say, when other people are greedy, I'm going to be fearful. It is time to implement that advice. You have every possible indication that you could possibly ever have that this is a monumental moment in financial markets history. This is a moment that everyone will remember, and they will talk about it in the same way that they talk about pets.com and WebMD and Webvan from the 2000s. In fact, I might buy a little pets.com here. It's looking pretty good. There's no more pets.com because those companies got into speculative territory. And you heard the same things then that you're hearing now. Well, there's a reason. They're going to be bigger. They're going to do more. They're going to grow a lot. And there's these news releases that show that they've had this much improvement in their business. What happened in the 2000s was all of those companies, if they had grown more slowly and not raised as much money, they would have been just fine. But the speculators turned it into a feeding frenzy. And that's what's happening again. It's not happening again, I think. It's happening again very obviously because the #1 chip manufacturer in the world that powers everything that everyone seems to care about right now is NVIDIA. And NVIDIA isn't moving. What you also see at the same time, and I'm building a case here, is you see Jensen Huang. I can't pronounce his last name correctly, and I apologize. You see him appearing on podcast after podcast after podcast, and interview after interview after interview, when he was not doing that a year ago. He's been on Lex Friedman, and he's been on a bunch of podcasts that I've never heard of. I think he went on Joe Rogan. Why is this individual who is running a company that doesn't need anybody's help and is selling all the chips, why is this person appearing everywhere talking about how awesome everything is? Why is NVIDIA, if it's such a bargain, not buying back its own stock? There's something wrong here, my friends. And so I'm going to talk to you about what you do when correlations disappear. And we're not just going to use NVIDIA and AMD, but we're going to start there. When two stocks that have been highly correlated in the past diverge in their correlations, and one launches upward and another one goes sideways or down, you have a breaking of the correlation and an opportunity to sell one of them and buy the other. In this case, you can short AMD, $1,000 worth of it, and now you can short on Robinhood. So you could short this just about everywhere. You could short $1,000 worth of AMD, and you could buy $1,000 worth of NVIDIA. Now, why don't I call it shares of? Well, because each of these stocks has a different share price. So you want to buy the same dollar amount of the stock and short the same dollar amount of the stock, and it will represent a different number of shares. Now, you could do the same with options. You could buy $1,000 worth of puts and buy $1,000 worth of calls, but the problem is you can't make the dollar value of your trade exactly similar as you can with shares of the stock. So I prefer shares of the stock for this kind of a trade. But yes, you could buy one call on NVIDIA and one put or two puts on AMD, and you could approximate a similar kind of thing as long as you're putting the same dollar value into both trades. What will historically happen in these instances is AMD will fall and NVIDIA will rise, or AMD will go sideways and NVIDIA will rise, or some combination of AMD and NVIDIA coming closer together, and your trade will be profitable. When I used to be a currency trader, which I did for 13 years and managed $8 million in a small commodities trading advisor fund, I did pairs trading. I did pairs trading because currencies like the Australian dollar and the Canadian dollar are highly correlated, and they match this pattern all the time, and it leads to some spectacular trades. This is number one. This is a trade that I had this week. I closed it with a profit, and now I'm going to reopen it today. I'm going to buy probably this time around $10,000 worth of NVIDIA and short $10,000 worth of AMD. These correlations matter. When the correlations diverge, when things go wrong, so to speak, you get a gap in between, and eventually one will fall and the other one will basically stay sideways or go up a bit. And they merge. They come back into correlation. They, generally speaking, they match each other perfectly all the time. But sometimes there is a slight deviation, and sometimes there's a major one. When there's a slight one or a major one will fall and the other one will go sideways or go up. Typically what happens is AMD outpaces NVIDIA and it needs to fall to correct it. But sometimes you get the opposite. Sometimes you have correlation disagreement that lasts for long periods of time. Sometimes you get massive disagreements in correlation, but we're at a really good one right now. And it is extraordinarily likely that AMD will come down and that NVIDIA will go sideways or rise a bit. Why do I say NVIDIA will go sideways or rise a little bit? Now we come full circle back to my trend line. AMD is basically stuck at the trend line, and it is likely to stay around here and fluctuate around it for a while. It might go down with AMD. It might. And that does happen from time to time. But in a pairs trading scenario, what typically happens is the one that's been out of control, screaming upwards, needs to come back down. And boy, oh boy, oh boy, does AMD ever need to come back down. Now, you could just do the following. If you really think that most of the gains that you could get are going to come from a short AMD, you could just buy an out of the money put. And here's the put that I would buy. If I were going to do such a thing, I would buy an out of the money put, like a $350 strike. No, I wouldn't go 350. I'd go 360. And I would go with a mid-July expiration. I would buy enough time to let this play out. And why am I doing this once again? Because people like my friend's dad who bought AMD over here, they've never seen this much money this quickly in their entire lives. And when it breaks below this support level, marked by this candle, when it breaks below that candle, it will have done an upside down bowl shape. So think of a bowl sitting on your countertop upside down. When that is broken, people like my friend's dad are going to say, I've had enough of that. I'm taking my money. They're not going to ride it forever. Some people will ride it forever. Some people will ride a stock all the way into the ground. My target for AMD before the end of the year is 305. Now, I might be wrong. I might be terrible. I might be a bad person. I might not be going to heaven or whatever. Okay, I could be wrong. And that's why I'm not going to risk my entire career or all of my money on this. But I am confident. If you're not as confident as me, but you want to see how that trade might go, you could do something like a spread. You could do an option spread. You could buy the, I would even, if you're going to do that, I would buy the $390 put. And yeah, I think I would buy the $390 put. Yeah, I'm going to build a spread trade. It's going to take me a minute here. I might do it the other way. I might use calls instead, but you could do a spread trade. And I'm going to take a second here and think through my favorite strikes for that trade. Yeah, I'll think of it. Yeah, I'll be building that trade before the end of the webinar because I think I'm having some ideas for a few of those. Moving on. Every week from here until probably the end of June, I'm going to do the following, something else that most people would never do. I'm going to buy a call on SOXS. SOXS is an ETF that is a 3x leveraged ETF that benefits from semiconductor stocks correcting and going down. This SOXS ETF goes up when semiconductor stocks go down. So I would buy an out of the money with a weekly expiration. For example, this week I would buy the, I'll tell you why, $14 strike and the May 29th expiration because we're already at the end of the week. I bet you this is almost, it's so inexpensive, I bet it costs almost nothing. I bet this option is in the pennies. I would buy this because 14 is about halfway the distance to this monthly pivot. Monthly pivot is last month's high, low, and close added together and divided by 3, thus giving you an average. So this pivot at $22 is created from last month's high, low, and close added together and divided by 3. So that monthly pivot is a magnet for price. On most months where a pivot was created, it is touched by price, many times in fact, but sometimes it gets missed completely and not touched by price. My favorite television show growing up was Touched by an Angel, starring Angela Lansbury, which the remake is going to be called Touched by a Pivot. You don't hear much from Angela Lansbury anymore. I wonder what she's doing. And so missed pivots are usually touched. Pivots don't last long sitting out here in outer space like this. A monthly pivot is typically going to be touched by price. And if it's not going to be touched by price, the stock will usually go at least halfway the distance to it. Most weeks you will lose pennies. Most weeks you will lose 5 cents, 10 cents, whatever. You're going to lose a very, very small amount of money. You probably lose every single week. But in times like this, where market valuations are out of control, and a stock like AMD has gone up 135% in 1 month, you're going to get a correction. And the correction takes much less time than the rise. So AMD, for example, took a month and a half to go up 135%. It will take 2 days to lose half of that. Bear markets, as we all know, go way faster and fall much harder than they rose. Rising stocks do a stair-stepping pattern that's very organized. It's almost like they had a committee that kept it going up and up and up on a very clear, steep stair-stepping trajectory, almost as if there's an invisible staircase. And she's buying her, okay, whatever. And you can see that staircase to heaven. And one day the staircase just collapses. And you start listening to the album backwards, and you realize there was something going on behind the scenes, and AMD drops much faster than it rose. I think it's incredibly important for you to have an out-of-the-money, dirt-cheap, Nassim Taleb, black swan, anti-fragile type trade going on that will cost you almost nothing and lose most of the time, but when it wins, it will be remarkable. Now, Jeffrey gave away a book, so I would love to give away a book. So, Jeffrey, you can just pass on a name of someone here later on, and my team will send someone a copy of this book. This is The Tao of Capital by Mark Spitznagel. Mark Spitznagel made a gajillion dollars during every crash that you've seen in your lifetime. He actually was investing partner with Nassim Taleb, and Nassim Taleb is still an advisor to Universa Investments. People think that Nassim Taleb owns Universa Investments based in Miami. He does not. He is an advisor. Mark Spitznagel was Nassim Taleb's student at the New York University School of Business, and they eventually partnered together to run a hedge fund, and then they did not run it together, and blah, 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 blah. This is a book about the strategy that they used. Now, it's 10 chapters of a story about a guy who grows trees and 2 chapters about the strategy. And I'm going to tell you the strategy right now. Buy calls and puts that benefit from market crashes and lose most of the time. When the market crashes, they make billions of dollars and they buy stocks. So Nassim Taleb, you can find them on YouTube. For those of you that are technical and mathematical, that's super mathematical. For those of you that are mathematical, you can watch Nassim Taleb actually talk about this. And he actually says, no one can mimic the strategy because we buy hundreds and hundreds and hundreds of butterflies, not actual living insect butterflies, but butterfly options every day. And it's an impossible strategy to replicate. And Mark Spitznagel will tell you the same thing in his book, but this is what they do. They buy calls and puts that are dirt cheap, and they buy daily expirations on options created for them by banks. So they buy options that expire every day. So they're buying insurance on a crash that expires every single day. There is an apocryphal anecdotal story about Nassim Taleb where he supposedly said that he would lose $100,000 a day on options that expired worthless. And then in the crash of, I can't remember which crash it was. It might have been the COVID crash. It was a $4 billion day for them. So there you go. That's the strategy. Now you can't replicate that with hundreds of butterfly options that expire every day. But what you can do is you can wait for valuations to get absolutely insane. And it doesn't take a genius to see that that's the case right now, and lose very small amounts of money being wrong. And then you wake up one day, 2 months from now, and the whole market has gone crazy, and your option that you bought for 5 cents is worth $25. Now, in case you think that I'm full of it, which of course I am, you know, like I don't think I'm the greatest trader in the world. I've made a bunch of money, but in case you're wondering if I have an ounce of humility whatsoever, or if I'm just here to scream and yell about market stuff that's going to crash, I will tell you a story. I do this trade pretty often, and there's a bunch of examples of it on this chart, but I want to go back to the COVID crash. And I want to show you what happens to the VIX during a crash. During the crash, the VIX went from looking like it's never going up again and bottoming out to rising hundreds and hundreds and hundreds of percents. Now, this is all split adjusted, but I did this trade with my friend Jeffrey, not Jeffrey Gibby. Although, Jeffrey, you could do this trade. I did this trade with my friend, Jeffrey Turnmeyer. He did $800,000. I think he maybe had done $1 million on this trade. I put $1,000 into it and made $29,000 on that trade. I do this trade. I don't do it all the time. I don't run it every single day, and I don't run it every single week. I do this trade maybe a couple of times a year. And then once every 10 years or so, I say something like, this is totally, absolutely crazy insane. The chart is looking like the chart that I just showed you from a while back. So what I do is I buy a UVXY call option. I buy a strike that's so far out of the money that people think I'm insane, and I just keep buying it week by week by week. Now, you might ask, why don't I buy more time? Because I don't need to buy a lot of time, because if the market crashes, that option is going to become enormously valuable, and I don't need to buy that much time. So I could buy a month of time and pay for time I don't need. In fact, it's a kind of a liberty kind of thing. Only pay for what you need. So this is another trade that I have going on every week from the expiration on May 15th all the way through mid-June. I will do this trade. I literally lose about $100 a week on this trade. In a week where the market crashes, the UVXY will blow through the strike, and it will go, and I'm not talking like it'll go to 42. It'll go to like 242, and I will have spent $100 on something that is suddenly worth $4,800. It's not a lottery ticket. Lottery ticket is completely based on luck. This is, I've done my analysis, I've done my research, I've done my thing, and now what I want to do is I want to buy insurance against a market crash that seems like it's kind of more likely than it has been for a while. And if I'm wrong, over the course of about a month, I lose $500 total. Now you can literally do this trade for $5 or $10 because the options are so cheap. You can just buy one contract. And yes, if your broker doesn't allow you to buy call options on UVXY, you can use VXX, or you could just buy the shares of it yourself. This is not a trade alert. It's not a trade recommendation. It's just a warning that we've seen some stuff that we haven't seen for a long time. Last of all, I didn't get into pairs trading as much as I would like to do, but I didn't get into shorting or making money when things get crazy. So I have a 4-day webinar series starting tomorrow that's free. Every day is repeated. So it's 4 days, same webinar. So if you can't make it Saturday, come Sunday. If you can't make it Sunday, you come Monday. If you can't make it Monday, you come Tuesday. We'll make the best recording that I did into a recording you can watch, but you have to register for it. It's absolutely free. There will be something for sale on the webinar. But I teach you everything on the webinar, whether you buy anything or not, as you could probably figure out by now. So there's going to be a link that gets dropped inside of the chat in the next few minutes, and it will take you to a page, a beautiful page, where you can register for those sessions. Like I said, they're free. I'm not going to spam you. I'm not going to turn you into, the recipient of 10 million messages you don't want. It will take you to a page that looks like this, and I will teach you the secrets of short selling. I've been a successful short seller now for quite some time. I've made a whole lot of money doing it. I've made every mistake that you can possibly think of. I'll show you my account. I'll show you the trades. I'll show you how to do it. I'll teach you the system. I'll show you how to set up your metastock charts, everything. And it starts tomorrow. It's repeated each day in its entirety. So if you miss Saturday, you can't come on Saturday, come on Sunday, but you'll automatically be registered for all 4 sessions. You only need to come to one. Most people come to every single one of them. And you'll join about 1,000 other people who are there to learn. And on that webinar, there will be a couple hundred of my friends who also do short selling with me to tell you what their experience has been like. There's no censorship. There's no moderation of that chat. You're going to hear the good, the bad, the ugly, and everything else. We've already filled all 500 seats, so we opened up more. So Liz, I know you're here. It's like, wow, we got to change that. We blew through 500 registrations a few days ago. Thank you, Jeffrey, for your patience and everything with me. I truly didn't deserve it. I wasn't ready with my metastock charts. I broke them, and I apologize so much. I really love being here, and I love working together with you. And Jeffrey, you'll be getting an update on how we do tomorrow on this. And
Rob, I can never find the mute button when I need it. I need to leave it live and just hit the mute button on the mic. Great job. I enjoyed that. I thought you did a great job.
Thank you. I appreciate it. No, it's great to be here. Were there any questions I could answer really quickly before we move on to the next speaker, which I'm sure is amazing?
We did have a question, but I think you answered it fairly thoroughly. If you used options on the AMD NVDA, what time frame would you use? And I think you pretty much spelled that through.
Yeah, I would go a month out. Yeah, super.
Perfect.
Thank you for having me. I appreciate it.
Good to have you, as always. Thank you for coming in and spending some time with us.
Who's coming up next?
Sonny Harris.
Woo! Sweet. Sweet. That's awesome. And that book, that Jeff Bigelow, the Stephen Bigelow book, the candlestick book that you gave away, that book is pure gold. That is a really nice idea to give that one away.
Yeah. We have a few of them here. And
he's so smart. He's so smart. I'm always jealous of him. All right.
We do have one question for you. Elizabeth wants to know if you have any opinions on QCOM.
Same kind of story. If the chart looks bullish, I mean, I can answer it pretty quickly, probably. Yeah, we have the same problem. We have the same separation when pairs trading. Oh my goodness. Is Qualcomm worth 90% more than it was a month and a half ago? It's hard to imagine why. Like, what did they do? Did they discover cold fusion? What did they do? Somebody explain to me why this is based in fundamentals, and they can't. What they will say is over the next 75 years, they'll sell more chips, but it just doesn't make any sense to me.
All right. That's the end of the questions. Rob, great job. Thanks for coming in again.
Thanks, Jeffrey. You can just kick me out so I don't blow anything up more than I've already blown up today.
Yeah. You're being excused. Thanks for coming.
Okay, see you later.
All right. Okay. Let me go ahead and do this real quick. I'm going to share my screen first, I guess. Share screen. And then we'll turn on the camera and we'll get this all rolling. Want to say thank you to Stocks and Commodities magazine. They've been great supporters of the MetaStock shows that we've done, the conferences, the summits, all of those kind of things. It's a great magazine too, www.traders.com. You can become one of their mini subscribers. They've been publishing since 1982. And when you do that, you will get access to their 17,000 trading article archive. That's just rolled off the tongue. Any of the specials that we're talking about, not like the offers with Rob Booker and those kind of things, but any of the MetaStock offers we've consolidated here into one spot. So if you want to get anything that's available from MetaStock, you can go to metastock.com/conf promo. You can give us a call, 800-882-3040. And you can also go to metastock.com/sales chat. So our very next guest, as we kind of mentioned, was Sunny Harris. Sunny wrote the book on easy language. In fact, she wrote a few books on easy language. It wasn't as easy as you thought, and it needed a few. But Sunny is one of the smartest traders I've had the pleasure of knowing. I remember meeting Sunny very early on in my career. I remember she had a little bit of a handbag that had a dog in it. And I was always just really impressed with how bright and how sharp she's been. And that certainly hasn't changed over the years. Sunny, how are you doing?
I'm doing great, Jeff. Thank you.
Do you want to help me give away a prize?
Sure.
Okay.
332.
Oh, okay. Well, let's see who that is real quick. B332. That's Ken J. in the USA. Ken, I'm going to give you a course that was put together by TechnoTrader. Actually, you won it. I didn't give it to you. TechnoTrader provided a course that's a $400 or $500 value. I'm going to send the information over to TechnoTrader and have them help you get it set up. Sunny, I'm going to get you set up too. Let me go ahead and make you the presenter. That way we can start seeing your screen. And I'll let you know as soon as we can see it. Do you also want to have your camera on?
If you want me to, I can do that.
It's up to you.
Let's see.
Let's get your screen share worked out first.
Yeah, let's get that to work first. Also share the tab audio. Share, cancel.
Yeah, don't hit the share the tab audio button. Just click on the tab you want to, or the screen you want to share, and that should work.
Okay, let's see. This one. How about that?
Perfect. First try. I actually really like the design of this side. This is a little bit. This looks like this.
This is different than I've been using.
Yeah, it looks great. Let me. Okay. Now it's up to you. I don't care one way or the other. But do you want me to help you turn on your camera?
Yes.
Okay. Let me ask you to turn on your camera.
Couldn't access your camera. Make sure another app isn't using it.
Let's not worry about it then.
All right.
Let me go ahead and get out of the way, Sunny. It's all yours. Thank you for joining.
Now, Jeff, we're going to do a little different today.
Okay.
I would like for people to ask questions while I'm presenting. I like to be informal.
Okay.
So if they can ask questions and you can tell me what they said, because I don't know how to find it.
No problem. I'll be watching the questions and I'll let you know whatever comes in.
You just interrupt me wherever I am.
Okay, will do.
All right, Jeff. Thank you.
You've been warned. You asked for this.
I did. So we're going to talk about system trading with Sunny Bands, which is my flagship indicator. And it's also known as Is That All There Is? Because there's only 3 rules to start trading Sunny Bands. And I'm going to show you those 3 rules. Come on, there we go. My passion, besides trading, of course, because I love trading. I've been doing it for 45 years. But my other passion is in helping traders. I love to help new people and people who have been struggling and people who have not yet become wildly successful. I've had returns like 365% for the year, 482% for the year. And this year I'm up 170% so far. I love to help people who've not traded much and want to learn, and folks who want to improve their trading results. So it's for beginners and intermediates of both types. Many people call me and say they are digging themselves into a hole. How can I help? And I love to work with those people. You'll see at the bottom of the screen, there's my phone number, 760-908-3070. That's my cell phone. So if you want to text me or call me, either one, I'm there. I answer the phone myself. I don't have an assistant answer it. And I don't have a salesman. So give me a call. My website is moneymentor.com. It's also at the bottom of the screen. I've taught thousands of people to trade, and I've taught students all over the world. I've written 8 books about trading, and lots of people have learned through them. I do live Zooms to teach you too. The disclaimer is past performance is not a predictor of future results. So just because I made 482% once doesn't mean I can ever do it again. All investing includes risk of loss, and individual investments may vary. The examples provided herein may not be representative of typical results. Your capital is at risk when you invest. You can lose some or all of your money, and a lot of people do that. So this one is the most important. Never risk more than you can afford to lose, because 90% of people who try to trade lose their money. If you go to moneymentor.com, you can see our full disclosure and the details. And this talk is for educational purposes only. And there's the full disclaimer. Many people have started their trading and investing portfolios by picking stocks or using options. Not all people know how to pick the right stocks, so we're going to talk about that a little bit. I'm going to use some of my proprietary indicators, metastock indicators, for this talk. And I'll teach you how I use Sunny Bands to trade futures, stocks, and crypto for my own account in all kinds of markets. I am a professional trader. I've been doing it for over 45 years. I've traded municipal bonds, government bonds, diamonds, gold, S&P, stocks, options, and real estate. Now I trade futures and stocks and crypto. But I don't trade options. I don't have a clue how to trade options. When you trade options, though, you can get huge percentages because you buy something for $5 and sell it for $50. That's a lot of percentage. I'm going to tell you a little bit about myself. But first, I'm going to show you how I trade. Here's this week. We've been going up, up, up. Today, we're above 50,000. We're at, I don't know. I don't have that screen up. So we're above 50,000 somewhere. This is Sunny Bands. You'll see there's a purple and gold line running through the middle of this channel. The purple and gold lines are my dynamic moving average. I call it dynamic because it recalculates its inputs with every tick of the market. So that's the gold and purple, dynamic moving average. The outer band, this is upper outer band up here, it's green. Upper inner band is blue. Lower inner band is blue, and the lower outer band is green. And I'll show you how I trade those. Down below, we have a colorful histogram. That's my dynamic moving average histogram. And below that is my slope indicator. And it tells you whether it's bullish or bearish. That's a Metastock special. I have quips and quotes on my website. Here's one from Aaron. You can use Sunny Bands for options on QQQ. When it goes purple, I go. It's a sure bet. Price crosses above the lower outer band sometimes. Wait for a couple bars within the lower outer band. Catch it on Friday on options expiration. This guy does 0 DTA. On options expiration, sell puts, and it's a sure thing. I did it on Tesla too. This guy says, nice bands. This morning I did a couple of quick MES buys and sells. Then I bought into an upward moving ES signaled by the DMA histogram. Followed it onto the top, Sunny Band. Closed. Sold short at the top, Sunny Band. Followed it to the bottom. a $4,000 account that he had moved into his futures account returned about $2,000. And he said it doesn't get any better than that. This is Aaron again. He made $5,772 on the first day of his free trial of Sunny Bands. It told me exactly where the turns were, even with the high volatility today. You are one of the very few people that allows test drives. It's nothing short of amazing. And I have hundreds of these on my website if you just click on Quips. So I've been a professional trader since 1981. Through the 41% crash of 87, the 38% crash of 2000, the 52% crash of 2007 to 2008, as well as the 38% COVID crash. So I've been through, what is that, 4 of them? 1, 2, 3, 4. And whatever is next, because there will always be another crash. What I trade is the S&P 500 futures contract. That's the ES. I use 5-minute and 15-minute charts. And I've been doing this for my lifetime, just about 45 years. I do have long-term stock holdings. I have $5,000 profit today in Dell. So I hold them for a week or more, and that to me is long-term. And I trade a little bit of cryptocurrencies. So today I'm going to show you how I trade on short and long-term charts using Sunny Bands and my dynamic moving averages. And I trade very systematically. I follow the rules. Oh yeah, so I was named #1 trader twice with 365.5%, and the next year 178% profit using Sunny Bands and my dynamic moving average. In 2006, in the live trading room, I've made 179% so far. 2005, I made 132%, and 2024, 482%. So join my live trading room. It's a lot of fun. And there's the sheet that shows I was right at the top of that. That's when I was a CTA. I grew up dirt poor in Appalachia, in the mountains, in a farmhouse. And then I got 3 degrees in mathematics and 1 in photography. I've been programming for 56 years. I've been trading for 45. I started out right out of college as a systems programmer for Lockheed, not Martin. I was up in Sunnyvale at the Lockheed Missiles and Spacecraft. I founded then a little company with 3 other guys. It's called ISCO, Integrated Software Systems Corporation, and we became the world's leader in computer graphics software. One of the products was Harvard Graphics. I retired when I was 30. I sold my shares in the company and retired, and I didn't know anything about the markets, so I did what I thought was smart. I gave my money to money managers. But they lost $75,000 in 3 weeks, and I thought, well, I can do that poorly on my own. So I taught myself to trade. I read 117 related books, and now I've read 746 books on trading. I didn't enter a single trade for the first year of watching the market. Oh, and I published a magazine for 8 years called Trader's Catalog and Resource Guide, TCRG. And there's my bookshelf. So you can see I have a few trading books. There's no novels in there, only trading books. And in the ensuing years of TAWS, which is, oh, I already told you this. This is my live trading room, Trade Along with Sunny, TAWS. And you can watch me trade live every morning at 7:30 a.m. Pacific time for 1 hour. So all you have to do is join. I'll let you in for free for a week. Or you can text me TAWS and I'll send you the link. There's my phone number again. It's my cell phone. I'm going to show you the books that I've written, Trading 101, Trading 102, Electronic Day Trading 101, Getting Started in Trading, and that's the one you should buy if you want to get started in this business. It's a amalgamation of Trading 101 and 102. And then I wrote TradeStation Made Easy and Easy Language 9.x with Murray Ruggiero, who's no longer with us. And then I published the 2-volume set, The Definitive Guide to TradeStation's Easy Language and OOL Programming with Samuel K. Tinnis, who's also no longer with us. I've written articles for all the major magazines. I'll just run by these. Most of these aren't in business any longer either. And here are my books. I'll just show you the covers real quick. Oh, and I wrote a book called Going Vegan with my friend, the actress Linda Blair. That was an aside. And there's the latest right there. Now we're going to see how to make a 6-figure income. And this is probably the most important slide in the whole deck. How to make a 6-figure income. That's what everybody wants. So if you make $120,000 a year, that's 6 figures, right? If you divide that by 12 months, because to make your goal, you have to divide it into replicable steps. So 120 divided by 12 is 10,000 a month. Now that still seems like a really big goal. And how could you possibly achieve that? If you divide it by 20 days, you'll find that that's only $500 a day. Now it seems more achievable. It's really just 5 trades at $100 each. That's all you have to do. Now it seems easy. There's usually between $1,000 and $3,500 a day potential in the S&P, going both long and short, just one contract. Now, are you a trader or an investor? An investor buys and holds for the long term, and a trader gets in and out, goes long and short, hoping to get short-term profits. I'm both of those in 2 different portfolios. I have one for stocks and one for futures. So I'm going to break it all down and show you exactly how I trade. The next picture looks kind of complex, but it's really not. I show you how color coding keys me into action. I like color coding. I'm always looking at the same color for the same thing. When you come to TAWS, my live trading room, trade along with Sunny, this is the screen we'll be watching. This is my trading monitor. Now you'll see that the yellow background is always a 5-minute chart. The green background is always a 15-minute chart. And then I have down here, I have 3 moving averages on the NASDAQ. And under here, on white, I have the Dow Jones. And this is called a matrix, and that's the way I trade, is with that matrix. I just push the button. Here's the dynamic moving average all by itself on a monitor with no sunny bands. So you can see it's gold and purple. When gold's on top, I'm generally long, looking for long trades. And when purple's on top, I'm generally looking for short trades. It's as easy as that. And again, we have the histogram at the bottom and slope to tell you whether it's bullish, bearish, or neutral. And I'll tell you about the histogram in a little bit. And there it is with the sunny bands. Same chart, I just put sunny bands back on. And we're going to look at buy and hold versus trading. This is where you would buy if you're a buy and holder, and that's where you would sell. So you get to sit through all kinds of up and down, up and down, up and down, and you even hold through this drop. But that's buy and sell. And you see this stair-step chart right here? This shows you, if you're a trader, the equity that you're accumulating along the way. And you'll see that comes out to $793,000. This is the ES yesterday. Oh, here's another color coding thing I do. You see these bars are kind of a bluish green and magenta, that means it's in the nighttime session. So I don't have to think and look at the bottom of my chart because I know when it starts blue and red, that's the open. So that's the open of today. And at the end of the day, it goes back to magenta and green. So that's another color coding thing that I do. I make my bars blue and red because Sunny Bands is green and it kind of interferes. You see, you can't read it as easily in the night session as you can in the day session because that's blue and red. And I have another indicator called PHW, which stands for Potential Hourly Wage. When I first started trading, I wanted to know, can I make more money trading than I can working an hourly wage job? So PHW, Potential Hourly Wage. Can you make more money by trading than by working for an hourly wage? And the dots are at the ideal turning points. And chances are you're not going to be perfect and catch all of those ideal turning points. It's very difficult to do. So I take 60% of the ideal as a goal because I figure I can leave 20% on the table getting in, 20% on the table getting out, and that's 60% left over. So here you see the yellow dots at all the ideal turning points. And then it writes out buy and hold is 9,000. The ideal is 116,000. The PHW is 69.9, so 70,000 with 31 trades in 2 years. So if you buy at the beginning of the chart and sell at the end, that's buy and hold. And it was 2,778 when I figured this out. But if you trade instead of buy and hold, you're trading the highs and lows with PHW, and you take 60% of the ideal on the same chart, that makes $80,000, 81. So it makes a lot more money trading than it does investing. And it's quite a difference. So how did you know in 1982 to buy Apple and hold for 44 years? That's how they make thousands of percent hold for 44 years. So I look at my Sunny Bands indicator and the histogram and my PHW indicator, and that's how I know, because I follow the system. Here's the same idea on Ethereum. Buy and hold is minus $1,500. So you can see there's the buy and there's the sell. So you can see the sell is lower than the buy. So we've lost $1,500 on Ethereum if you do the buy and hold thing. But if you trade, follow the stair-step function again, you'll see it's $906,000 trading Ethereum. Come on. Okay, so minus 1,500 buy and hold versus 906,000 trading on a daily chart. Imagine what you could do on an intraday chart. My Sunny Bands work on any symbol and any time frame. This is a daily chart of the SPY. This is a 10-minute chart of the SPY. And you see they both work with Sunny Bands. Doesn't matter the time frame, doesn't matter the symbol. Here it is, the SPY on a weekly chart. Same idea. And here's Apple on a 15-minute chart. So you can see Sunny Bands still doing the same thing. These gray bars are Metastock's way of showing us that we're flat. So see, congestion is gray. So they show us the congestion areas. Here's Apple on a weekly chart. Same idea. What I do is when the red bars are going down and hit the bottom band, lower outer band, I look for 2 green bars, or 2 blue in my case, 2 green bars going up above the band, and I go long. And then I hold long until I've got 2 red bars above or touching the upper outer band, and then I come down. Second rule is when the DMA is flat, the dynamic moving average is flat, we're in congestion. So I wait until we get another signal. So we've gone down on red, 2 green bars coming up, I go long. 2 red bars coming down, I go short. So in the same amount of time, at a starting value of 47 cents in 1981 and a current price of $2.99, Apple made 399% for an investor, and it made 635% for the trader. It's quite a difference. The day trader made 1,300%. And that's why I'm both a trader and an investor. I do both things. Is this possible? Well, yes and no. You can't catch all the moves. You just can't do it. According to my research, you can only capture about 60% of each move, and that's what's reflected in the PHW, potential hourly wage. The investor, however, has to sit through long periods of scary negative markets, and I don't like that very much. So when I'm investing in stocks, I hold them until I get a sell signal, and then I exit the trade and wait. And then when I get a buy signal, I go back in and buy. Trader can go short, but I don't short stocks. Come on. I look at the Dow Jones because it's something we're all familiar with, and it's reported daily on the news. And we all relate to the numbers. If they report that the Dow is down 300 points, we just have a feel for what that means. In the last few weeks, the Dow's recovered from its lows, up about 11%. And in the past week, it gained 1,100 points. Dow's now only down 1% from its highs. It's very nearly at all-time new highs. If you look at it in a weekly chart, we're seeing the same thing again. Down on red, touch the lower outer band, go long, touch the upper outer band, go short, and now we're working our way up to the upper outer band again. Here it is on a daily chart, same rules exactly, doesn't matter what the time frame is or what the symbol is. Here it is on a 5-minute chart, same idea. It's just very easy to read, and those only 3 rules. So like I say, is that all there is? 3 rules? Let's look more about the Dow. Let's look at the standard moving averages. They're quoted in Barron's, IBD, Investors Business Daily, and the Wall Street Journal. Standard moving averages, people use 20-day, 50-day, and 200-day. Now, I use something a little bit different than that. I use 21, 55, and 200. 21 is a Fibonacci number, 55 is a Fibonacci number, and they're very close to the standard 20, 50, and 200. But it puts me a little bit different from the crowd, so I like to not quite do the same thing everybody's doing. And there are my moving averages. The blue one is the 21, the gold one is the 55, and the dark red one's the 200. And you can see how the price comes back and touches those moving averages over and over and over again. And that's because everybody's watching them. Here's the simple moving average. The standard default inputs are usually 9 and 18. Come on. So you can see here we've got 9 and 18 on the chart. These are simple moving averages as they cross over back and forth, back and forth. So we've got a crossover here, a crossover here, crossover here, crossover here, and almost a crossover here. And that's why I don't like simple moving averages, because they cross over so much and give false signals. So I invented my DMA because I didn't like the false signals in the standard moving averages. And again, that's what the DMA looks like. We've got a crossover here, a crossover here, crossover here. You see how much it avoids the whipsaw? This is designed to avoid whipsaw. And a crossover back over here. And now if we look for the DMA on sunny bands, it calculates its own inputs. So that 9 and 18, the default inputs, my average calculates them dynamically. That is, it calculates its own inputs with every tick of the market, and that's to avoid the whipsaw. The sunny bands are average true ranges from the DMA. And therefore, sunny bands recalculates with every tick of the market. It doesn't go back and redraw, though. It leaves the past prices and calculations exactly like they are. But it recalculates with every tick of the market going forward. And there's sunny bands on the same chart. Does anybody have any questions about these charts or the sunny bands?
No questions yet.
Okay. A lot of times people ask me, are sunny bands like Bollinger Bands? Because yes, they're both bands, but in a word, no, they're not alike. Bollinger Bands is a simple moving average, SMA, with standard deviation bands. I use average true ranges. He uses standard deviation bands. Simple moving averages produce the worst whipsaw. So if you want to trade back and forth, back and forth, back and forth, then you can use Bollinger Bands. And the next chart shows Bollinger Bands. Come on. For some reason it's not working. So there's Bollinger Bands. And these are the red ones, so you can see his standard deviation, his moving average, and the lower standard deviation. I find that I don't really know how to trade Bollinger Bands because they go way out here, and then they go way out up there, which is what sunny bands doesn't do. So here they are both on one chart. And you can see Bollinger Bands makes a standard deviation way out here. Standard deviation is a statistical concept that tells you where price should go. My sunny bands are telling you where price is going, which is different. So personally, first thing I put on a chart is I call them attractors. I coined the term to describe all kinds of support and resistance, including moving averages, where price tends to revert to the mean. And then I put sunny bands on the chart. And that's based on my dynamic moving average, the gold and purple lines in the center of the bands. Come on. So there's 3 rules: sunny bands level 1, level 2, and level 3. And we're going to go through these. Okay, these are the, now this little presentation, it's 4 pages of material and 3 pages of disclaimer, but it's available on moneymentor.com. So you can just go there and download it under downloads. And these are the rules I use in my own trading, and they're for educational purposes only. I don't give advice. So level 1 says, and I just told you this on the chart, so I'm going to read it again. I enter long when red candles have been moving downward and touch the lower outer band and then turn blue and move back inside the lower outer band, if price confirms. Now by that I mean if I want the market to be going up, I want the next bar to go up to show me that it's confirmed. I enter short when blue candles have been moving up and touch the upper outer band and then turn red and move back inside the upper outer band, if price confirms. So I want the market to show me that it wants to go down. Level 2, this is an important one. If the DMA is flat, you see how this looks flat right here? It's just moving sideways. So if the angle is visually sideways, don't expect price to move very far beyond the midline. So the midline is this little black line in the center. So if this is sideways, you can see it comes up and hits it, comes down and hits the lower inner band, comes back up and hits the DMA again. And in fact, it often acts as a barrier to further movement. And then level 3 says, if you've got a trend, stay with it. So if gold is on top, I stay long. See, you've got gold on top here, and I stay long through all of this until it penetrates the DMA. So you can see here, I get in back here and hold until here. Now, I'm going to put this in the middle of the talk. I am very available, so please contact me. Sunny Harris, 760-908-3070, my cell phone. I work from 7 a.m. in the morning until 8 p.m. at night. And sunny@moneymentor.com. You can access me anytime. Here's how I choose stocks. Come on. I don't short stocks. I buy and hold. And I wait for the sell signal to take profits. The next chart tells me which ones are above the 21, the 55, and the 200, all three. So stock has to be above all three moving averages to be bullish to me. So that's how I know whether it's bullish or bearish and what the potential profit is. So here we have a chart with a bunch of stocks. The yellow column is the PHW, and I sorted by that. So you can see they're sorted from high profit to low profit. And over here, I have my DMA, and I can sort by that too. If it's gold, it's bullish. 2 slashes means it's moving up. Green is bearish. It means it was moving up, but now it's moving down. Red, bullish, means it was moving down. Now it's moving up. And the purple on the DMA shows me 2 backward slashes showing me that it's moving down, down. And that's how I read that. And I sort by those things. So let's look at the 3 moving averages here for a second. I'm looking for stocks that are above all 3. That is greater than 21-day, 55-day, and 200. And then when I screen for high performers, I'm looking to find stocks showing all green cells. These are still bullish. Here's a look at the scanner results for all those stocks over those 3 moving averages. And you can see over here, red is what? Bearish. Green is bullish. So it's got 3 green cells right here. So I know that's a bullish stock. Here, this one has 3 green cells. I know that one's bullish. This one has 3 red cells, so I know that's bearish. My current projection for the market is this trend line. This is a weekly chart. And this trend line that I've drawn here shows me my prediction coming in above 56,000. So that's where I'm expecting the Dow to go, above 56,000. And this is the trend line that came from this low, going under the lows, hit it again. And this is what I call an attractor, something that shows me the preponderance of price activity. So from here to here is where I drew the trend line. Then it goes over here and it hits the attractor, it goes down and back up. And over here it comes down and hits the attractor again. So that's why I call it an attractor. It attracts price to it. So I think the market will continue to 58,263, but it's going to stumble back and forth along the way. And it's going to take about a year to get there. And that's all there is to it. I look at the attractors. I studied the DMA histogram and the sunny bands. That's it. I trade the E-mini on a 5-minute and a 15-minute chart. And I trade 3 to 5 times a day. With equities, I buy and hold for weeks to months to years. It's much longer and it's the same sunny bands, the same rules, but it's on a longer term chart. I trade equities on a daily chart. I trade futures on 5 minutes and 15-minute charts. Help is on YouTube Education is not expensive. Lack of education is. And you can see here, I've got a real client learning to trade sunny bands. So if you want to see how I teach sunny bands again, it's on YouTube. There's a little video here that's 99 seconds of live trading in TAWS. This is introducing my latest book. Here's a live demo where I show you exactly how I trade sunny bands. Here's one called Learning Trade Station, gives you the first few steps. And this is a 2-minute video showing if you don't know how to enter the values in my questionnaires, my forms, then this will show you exactly what I expect. And there's more. You can see this. There's about 20 videos on there. MoneyMentor.com. I'm finishing early today. There it is. There's my new Money Mentor website. I had a programmer working on it, and we're not through with it yet, so please bear with me. As if you find errors, email me, sunny@moneymentor.com, and let me know where you find errors so we can fix them. All the products I have were programmed and developed for my own use in my trading. So I didn't develop them to sell to you, although I do make them available. That's not the purpose. Purpose was I needed something to help me with my own trading, so I developed it. And I do show you exactly how I use them, and I'll meet with you by Zoom. And if you want to go through exactly how we use them in the live market, I can show you that. I don't hold anything back like some gurus do. They'll tell you 80% of the rules and then keep the best 20% for themselves. But I don't hold anything back. And I'll train you to use them for free. We'll meet by Zoom. And I'm always available by phone or email. I prefer you don't text me anything unless you want a free trial, or if you want to join TAWS, you can text me that. But if I have it by email, I have a record of it, and I'm more likely to be able to answer you quickly. Oh, we do have bundled discounts available on Metastock and TradeStation, Multi-Charts, and NinjaTrader. The bundled discounts, the more you buy, the deeper the discount is. There's free stuff on Money Mentor. I did a 4-day strategy trading forum. Membership is free to Money Mentor. I did a 4-day technical analysis forum, so we go through all the technical analysis real quickly. 4 days, an hour each day, and that's free for members. Then I did a 5-day easy language forum. It costs a little bit, and they're all available on moneymentor.com. I offer education and consulting, easy language programming services, mentoring. I wish I could offer Metastock programming services, but I don't understand the programming language yet. So I can mentor you. I have a complete bookstore on Money Mentor, and I have a distance learning course and the indicators I use myself in my own trading. And of course, my daily live trading room. Also, I'm going to put this, and I have a free Substack that I do once a week, where I project what I think the Dow is going to do. We have a special offer. Bundle offers give you up to 30% off. And if you want a free 7-day trial, call me or email me, sunny@moneymentor.com or 760-908-3070. Better yet, if you want a free 7-day trial of Sunny Bands, text Sunny Bands to my cell phone and we'll start your free trial. And these slides will be posted on Money Mentor. You sign up for free membership, and that's under membership.html. And they're on the appearances page on my website. If you go to, I think it's if you go to About Sunny, you pull down, the second choice is appearances. So you go to moneymentor.com, click on membership, Now let's get the questions. Do we have any questions? Did I do
Where's
so
my
well that nobody has any questions?
Sonny, you did a great job.
Thank you.
Do have a question in terms of how applicable this would be to an Indian market or international markets in general.
I can't hear you, Jeff. Say that again.
How about now?
Yeah.
Oh, okay. We do have a question on how well this would work on international markets.
It works on any time frame, any symbol. So international markets, those are fine too. Forex, that's fine too. Any symbol, any time frame.
Cool. And that's the questions we've got. So I can talk a little bit about the add-on and how it works for Metastock.
Please.
For the 7-day trial, we can get that set up for you. We do need you to either call in or text in to get it. So from that perspective, we had to jump through some hoops in our database to get it working properly. But let me just talk a little bit about the add-on. Sonny, did you have anything else you wanted to kind of share with us?
I don't. I'm done. Would you like for me to unshare?
No, I can do it. I'll just share my screen. Let me go ahead and kind of just get things moved around for that.
That's great.
You should be able to see my screen. Thank you so much for coming in and spending some time with us today, Sonny.
Oh, thank you.
All right, let me go ahead and kind of just go back right here. I am going to also just eject you from the room. That just kind of prevents you from shutting the room down by accident. All right, I'm gonna do this. Oops. Okay. All right, and here on the screen you can see the Sonny bands implemented into Metastock. Sonny did a really good job of talking about this, but the reason I like them so much is they're designed to kind of hug the price action. And when Sonny initially started to talk about it, she talked about how they're used to dance with the market. We're not trying to anticipate what the market is doing. What we're trying to do is actually do that. George, actually, unfortunately, Sonny's just left. I don't know if it works on Thinkorswim. I don't think it does. But you can test her and ask her. Okay. Thank you for the question, George. All right. So it uses average true range. It's calculated dynamically. It does a great job of working seamlessly with the markets. And with it, you get your DMA purple, your DMA gold, and all of the bands that are part of it. So we talked about the DMA histogram. I'm not going to expulge too much on that. We do look at slope. As part of the Sonny Bands indicators, we do include the SOPLIC calculations. It makes it a more inclusive package than a lot of what you'd get somewhere else. So in terms of the indicators included, you get the DMA histogram, you get the dynamic moving average, you get the slope, and you get the Sonny Bands as well. It's all part of the package. Now for this one of the things I really like about this is not only when you sign up for it, not only do you get the program for free, you also get the ability to use it and to go to 2 free training classes with Sonny. So she'll sit down with you, help you work on it with the markets, help you get everything established, and she'll do that free of charge. So you get the package, you get an evaluation period of 7 days, and you get 2 sessions in the market to actually play with it with her. So it does offer scanning, so you can look for stocks that are congested. You look for entry signals. You can look for trade setups. Those are scans that are included. And of course, you're going to get the expert advisor with the Metastock version, which will give you those buy and sell alerts. It's going to give you the commentary. It's going to show you the congestion, the trend state. So in terms of the commentary, I did take a screenshot so I could show you what that looked like, or what that does look like. Here you get a really good outline of what's going on with the chart. You get your dashboard. You get to know what the trend looks like, the slope. When we asked Sonny to actually put together the commentary, she did a really good job of providing all of her trading rules, the signals, all of that kind of stuff. And it's just there. It's available as part of the commentary. So in terms of the calls that you get with Sonny Harris, the first call that you're going to get is an introduction to Sonny Bands and how to use them. Sonny will sit down with you and kind of walk you through how to use the Sunny Bands. The second one is in an application session. It's going to show you how to use the market during a real-time session. Both of those are included. And like I said, that both of those are done with you before you pay anything for them. So we did record a bootcamp session as well to kind of help you get started. That's available as an instant access. So the cost on the Sunny Bands toolkit is normally $5,713. But you can try it for free. You can try it, get it installed, play with it for 7 days, do the 2 calls with Sunny so that you can evaluate exactly what you're doing in the market. And then at that point, you can make a decision. Because it's a 7-day trial with no commitment and you don't have to buy it, we need you to contact us directly to do it. That way we can kind of jump through everything we need to with the database and kind of get it set up that way. So to get that set up, you can give us a call at 800-882-3040. And you can also go to metastock.com/saleschat. Now, George, I don't think it works on Thinkorswim just because they don't have an ability to kind of lock down the methodology there. But if you'd like to try it for Metastock, we'll actually also throw in a free 30-day trial to Metastock as part of your trial. So give us a call, 800-882-3040. You literally can't do this one online. You need to give us a call, or you can chat online with us at metastock.com/saleschat. So a big thank you to Sunny. Sunny has actually been a guest for us or with us on the Traders Forum as well. I'd encourage you to come in and be a part of the Traders Forum. If you go to www.thetradersforum.com, you can chat with traders, learn about the markets. It's a community of traders designed to help other traders. www.thetradersforum.com. So we do have we're running a little early today. All of the other offers, aside from the 7-day trial, so any of the other add-ons that are paid offers, you can find at metastock.com/conf promo. You can get that extended trial where you buy a month and get the second and third month for free. You can go to give us a call at 800-882-3040. Now, since we have a few extra minutes, and I don't really have too many jokes memorized, I think what I'll do is actually show you something in Metastock. So one of the things I can show you real quick to kind of help just with the not only just kind of by the time, but also help you with something that you might not know how to do is gaps. Steve Bigelow, a good friend of Metastock, the late Steve Bigelow, he talked about gaps as being a huge notice of investor, a huge change in the investor sentiment. He said a lot of people don't trade using gaps because they don't know if they're an exhaustion gap or a continuation gap or that kind of stuff. In fact, on the Traders Forum, he does a whole class on gaps that you can get as part of the premium membership. So, but what I want to do is I want to go in here and just talk to you a little bit about how you can use Metastock to find gaps. So we're just going to do a really quick scan. And what I'm going to do is I'm going to, this is a system inside Metastock. It's one of the several hundred that's included, but it's just called the gap identifier. So I'm going to go ahead and click on that. And let's see if we had any gaps overnight. What I'm going to do, instead of doing a huge list, which would take a minute or two to run through, I'm just going to go in and let's just run it on the S&P 500. Okay. So this is what I'm doing. I'm basically looking at the gap identifier scan. I'm going to load some records. I don't need to load 1250. Let's load minimum amount of records. I'm going to look for stocks that gapped overnight. So let's take a look. I'm going to go ahead and click on the Start Exploration button here. And let's see what happens. And while this runs for a second, I'm going to actually just send a note over to Adrian. I don't see him logged in yet. And just tell him to let's get him logged in. So. Okay. No problem. Okay. And during that time, we've basically had a little bit of a run here. We've gone through about 200 or so stocks. It's rejected about 92% of them. So that tells me about 8% had an opening gap today. Let's go ahead and cancel this because I can just show you with the stocks that we have already. So let me go ahead and cancel this exploration and just show you how to read it. So I'm going to go ahead and go back into the GoToWebinar thing here. Right here, out of the 216 or so stocks that we went through, about 16 of them had a gap. So right here, we've got a gap up column. Anything that has a 1 in this column, which is all of the stocks, had a gap up. Now, it'll also look for gap up that's confirmed by volume. But since we're like kind of partially through the day, like we're not very far into the day, well, we actually are, but we still have about 2 hours left. Not a lot of them are confirmed with volume. But what I want to do is let's just take a look at AMD here. I want to show the expert advisor that goes along with this. So I'm going to go ahead and open up the chart here. And here we go. I'm going to go ahead and actually apply, this is the Steve Bigelow's template. I'm going to apply the expert advisor that's called the gap identifier. So I can show you how the commentary works. I'm going to go ahead and click on attach right here. You can see right here we have had a gap up into a doji. So let's kind of look in here. Right here you had a gap. It's had an indecisive day since that gap, but you have a gap up. Here you had a gap up on volume. You can kind of see where it's identifying all the gaps. The gaps are pretty easy to see. It's a gap on the chart. You have an open that's above the whole candle body. So if I wanted to look a little bit more at this, of course, there's a commentary. I'll go ahead and open that up real quick. View expert commentary. We'll go to the commentary window, and it's going to give us our gap. We have a gap today. It's a gap up. It isn't confirmed by volume, and it just gives us a little bit of information. So that's how easily you can use Metastock to identify gaps in a marketplace. Now, I think that's something pretty easy to show you. Let me do this for a second. I still don't see Adrian locked in here. What I'm going to do is I'm just going to give myself a little bit more time as we get to the next speaker. So give me just a second here. And we're going to do a commercial.
Hi, my name is Kelly Clement.
Give me just a second.
I am the president here at Metastock. You know, one of the biggest questions I get asked is, what is Metastock and how can it help me in my trading? Well, if you give me about 3 minutes of your time, I can show you. Metastock is an award-winning software and data package that has been helping traders for over 40 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock works across all asset classes, including stocks, futures, forex, options, crypto, and more. Metastock is designed to help you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? What are the best options to trade? And of course, how do I know where prices will go next? At the core of Metastock are its power tools. The power tools are designed to give professional-grade analysis tools to private traders. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting. This allows you to see how your strategy would have performed over time. One of Metastock's most powerful tools is its charts. Metastock allows you to navigate through your charts through browser-like tabs, arrange them in ways that you see fit, or group them in layout windows that allow you to quickly access your groups of charts. And then with the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, well, you're going to love OptionScope. Option scope puts all the critical information.
All right, I'm back. Welcome back. We are ready to go. So just a little bit of a quick note. If you are interested in getting in the extended trial for Metastock, let us know. You can give us a call at 800-882-3040, metastock.com/cough promo, or metastock.com/sales-chat. Let's go ahead. Our next guest is Adrian Manz. Adrian is available and he's joining us. They had a little bit of a technical issue, but let's hope that we can hear you. Adrian, how you doing?
I'm good. Can you hear me?
Okay.
There
Yes.
we go.
Yeah.
Success.
Yes. Not a lot of technical issues, but sometimes we get some, right?
Yep.
Adrian is a great friend of mine. He's been using Metastock for a number of years. I love the visual patterns that he uses to kind of identify trades. I also like the fact that he chose baseball theming for most of them. So, Adrian, are you ready? I'm going to have you share your screen.
I'm ready. Hold on.
There you go. Oh, I can see it too.
There we go. For better or for worse, you can see me.
Oh, you look great. I think I would call it better.
All right. So now.
All right. I did make you the presenter, so it should have asked you if you want to just share your screen. And I can see it's coming through.
Perfect.
So I'm going to get out of the way. It's your turn.
All right. All right, you guys. So I am very interested in the psychology of all of this stuff, and of course the patterns. So we've done a ton of things with Metastock. We've done a ton of things with the New York Stock Exchange over the years. We're regular speakers in a lot of places, and we work with a lot of traders. And what we've noticed over time, definitely, as most of you are probably aware, is the psychology of this thing is really what makes it all go around. And this goes back to where we started. So when Julie and I were first trading, so Julie's my wife, and we met in graduate school, and we started trading together even before, well, I guess we were a couple already, but before we had any idea that this was ever going to be a business, we started trading. We were trading in our student loan funds, right? We didn't have any money. So we're trading with student loan money, which I found out later is not legal, but we didn't know that at the time. And, although we were using it as a research project. So the research that we did was with New York Stock Exchange and dealing with specialists, dealing with the specialist system down there, and sort of the personality. So the personality of every stock was different, because there was somebody different on the other side of every trade. So it's not like, it's still the case now with NYSE that you've got a designated market maker, a designated specialist on the other side of the trade, of the big trades, the guy who's really deciding where the market's going to be made in a stock. But back then, NASDAQ was the Wild West. There was no PDT rule, so we're going back to where we're about to go now. There's not going to be a PDT rule anymore, for better or for worse. And we're going to work with some people on overcoming that psychology as well, I'm sure. So that's going to be a big part of our educational business going forward, is teaching people with smaller accounts how to handle risk, how to handle the psychology of trading. But back then, what we put out there was, you can take the patterns that happen on price charts and you can attribute them to the psychology of the market participants. So whether it's fear of missing out, or whether it's pushing the envelope on momentum, or tracking the footprints of institutional money as it's going through the markets, everything has a psychology associated with it. And we built this giant model of how markets work around this. I've published just tons of stuff over the years on exactly what it is that is driving markets, what it is that fuels gaps and fuels gap reversions, and when it is that you can count on a gap to revert to the mean versus when you can look for a gap to be sort of a gap and go. And I've got, Round the Horn, which I'll show you in a second here. That right there, that was the book that we started the whole Megillah with. Around the Horn, a trader's guide to consistently scoring in the markets. Out of print as of today, back in print next week. So it'll be available again. You can find that on Amazon starting. Don't go on Amazon and pay $200 for that book right now, because there's people who took out of print and decided to turn that into a profit opportunity, bought all the existing copies and are selling them for a couple $100. But it'll be back on Amazon for about $60 next week. And it goes through and it looks at market cycles. And it was originally called a multivariate analysis of covariance in the United States equities markets. And George Stillwell, the publisher and very dear friend of mine, Stillwell and Company Publishing, he was just into this book until he saw the title. And then he says, how many copies of this thing do you think your mother's going to buy? Because nobody's buying that book, right? Nobody's buying this multivariate analysis. So we went through, we stripped back the statistics and focused on patterns and identifiable patterns and things that represent markets. So around the horn, right? Market cyclicality as the market moves around the horn, just like baseball. It's a very interesting analogy, and it wound up being the case that we could just sort of peg every pattern of the market as something in baseball. George wanted me to do football. I'm not a football fan. I love baseball. We're big Dodgers fans. And yeah, it really has been since 1997 when we first did that book. This has been the core of everything that we do. There'll be a new edition probably next year. I'm gonna say probably by December of this year, or maybe January of next year, that focuses more heavily on trader psychology, which is where I think a lot of this stuff needs to go. And all these other books, so Tricks of the Trade, that's out of print, but that was all trader psychology. Trade Secrets, that was a deep dive into individual patterns, into the fastball expansion of range and volume pattern. And it just showed you that you could build a business around looking for the things that happen very predictably in markets, and you can build that business based on sort of a template that you apply when the markets are in the correct rotation, so that when you're in that expansion of range and volume, does not mean the whole market has to be expanding. It can be sector by sector. So you just sort of follow through as money rotates out of, say, the AI play and into a biotech play, or out of biotech and into mortgages, whatever it is. You can follow the markets through and you can look for these patterns, and Metastock does a great job of scanning for these. So I'm going to show you a couple of different patterns today, and I want to talk about the difference in psychology. So one of them I'm going to pick apart and just say, all right, here's the same trade or the same instrument and the same profitability really, but very different psychology in how we handle the position. So it's a day trade, right? And it can be very intense, or it can be very, very structured. And different people like different things, right? Different parts of it. So if you're into the psychology of it, we had a show called Trader Nation that Julie and I did. It was up in Hollywood, and you guys, if you know us, you know that our house burned down in the Palisades fires. So we're now living in our vacation house while we rebuild up there in Newport Beach on Balboa Island. We're not driving up to do this show because it would be about a 4-hour round trip with traffic. But what we are doing is a daily live stream where we answer questions, and we're going to pump this out as a YouTube show in the interim, and just try to sort of get people interested in what the psychology is behind traders. So if you'd like to submit something, you can send it to Adrian at traderinsight.com. Any kind of question about the psychology of trade. Hey, I trade Apple, and every time I get in, I get out too early. I wind up taking early profits, and I wind up letting my losses get bigger than they should, or I let my losses run and I cut my profits short, right? Exactly the opposite of what I'm supposed to do. What do you think? And just send us a little video snippet of that. You can just do it on your iPhone, and I will be happy to answer those questions. We can talk to you on the phone and do a deep dive. It's a fun show, and it's a really great concept, and it's a way that people don't really look at trading usually. Usually everything is about stock picks and what's the next trade on deck, and we do that as well. So we do this live stream strategy session every day. I'll show you where you sign up for that later. That's free. There's nothing. It's just you get a text message that says, "Hey, Adrian's about to go live," and you can just click on it, and it just opens up the video, and you can see what we're focused on for the rest of the day. But so we do both things. But the psychology part of it, I mean, we both have PhDs in psychology. We are both, we're both also business, of course. So my MBA was international business and finance, so it's not lost on me. But this behavioral finance part of it was really, I think, the thing that wrote our ticket. And if you think about this, I think about everything in terms of what's the strategy that's going to make money, and then how do individual traders adapt to that strategy. So if you look, a lot of we do this income trading boot camp, and we do this once a year. It's for 20 students, and we cap it, and then a bunch of alumni. So the alumni come back as many times as they want, and it's a year long. It's really a 2-year long program where we're pretty much working one-on-one with these 20 people, so 1-on-20. And what's interesting here is all these guys learned the same trading methodology. So all of them, whether they're, in the top picture there's a guy in the dark blue shirt, gray hair, he's a rancher in Texas, and he's definitely got his style, his psychology is very, he's conservative, he's very much methodical, he's very driven by process, and he's sitting next to a guy who is more of a first hour trader, a gunslinger, a guy who just wants to be one and done on the trades. And he's sitting across from a guy who, Reese, who's been to every boot camp we've ever done. So he's been there since 2013. He's gone to every one. Reese was trading the most methodical portion of what we do, which is this around the horn trading plan, the NYSE program trades, because that's the kind of guy he is. So once you got to know him, we got to know him really well, right? His mind wraps around process control and around predictability of outcome, and he's not so much focused on, am I going to make money today, as he is, okay, well, what's this thing do overall? Move down, and the guy in the bright blue shirt there, when we met him, was a TSA agent. He says, what are you doing with all this electronic stuff? Where do you guys go? What do you guys work on? What do you guys do? He's just an interesting guy. And he says, okay, I'm going to this thing. I will see you there. And I said to Julie at the time, I was like, well, let's see. My bet would be, well, we're never going to see him. But he showed up. And what he focused on was an opening gap trade, because that's his attention span. That's his focus. Like he can focus all of his energy on the first half hour of the trading day. And the gap reversion trade that we do, this Baltimore chop trade, is right off the first 5 minutes of trading. So it happens after the first 5-minute bar, and then it relies on a 95% confidence interval of the mean to say you've got a very, very high probability of success, and that's what worked for him. And today he's flying his own plane. He's got a great he's got one of those I guess you call them kit planes, prop job, and that was his dream. And he said, I can make enough money just trading this gap strategy that we've learned together, or that I taught them. And he said, this is perfect for me. This is how I want to spend retirement. It's just trading the first half hour. And I could go around that room and just pick apart every one of those people and say, I can show you exactly what it is that Julie and I do in our trading business. We've got NYSE program trades, we've got NASDAQ program trades, we've got opening gap reversions, and we've got order flow trading. We do all of that. You probably would not do all of it because you're not us. You're not our psychology. The business developed around the psychology that was comfortable for us. And you have to be comfortable doing it. If you're not comfortable, you're going to wind up a passive psychological head case in this whole thing, because trading is challenging in terms of the math behind it or the strategy behind it, but it's double challenging when it comes to the psychology that it's going to take to get profitable. And it's like, I can teach anybody how to trade. I can teach anybody profitable trading strategies. Can I can I teach you how to do any one of our particular strategies and be profitable? That depends on your psychology. So we also have a whole psychological assessment. It's a 100-question test. It's free. The analysis is free. A phone call with us is free if you want one. I'll give you that link at the end. And it gives you a good insight into sort of where you are in your trading, who you are in your trading, how you would best interact with the markets. I've had people at the boot camps say to us, I took that test and it was exactly what I expected it to be. And we're very good friends with all the people who go to boot camp. And my friend Paul said after he took the test, he just looked at me and he says, I think I need a hug, right? And it's that kind of a thing. Like you may or may not be in touch with exactly where you are. And if you are in touch, then chances are, as long as you're working with your strategies in a way that keeps strategies in touch with who you are, you're probably doing pretty well. But if something's out of sync, if something makes you uncomfortable, then it's real easy for things to go off the rail, even if you know exactly what it is that you should be doing. So here's how we divide up our day, and then we're going to take a look at some of these strategies, and I'll show you how conducive something can be to success or how challenging it can make success. And it's the same trade, and it's just, imagined for two different people. But for us, the biggie is workflow. So we're on the West Coast, and that's why we do the boot camps in Miami Beach. We did the first two boot camps that we did were one was in Santa Monica and one was down here in Newport Beach. And I will tell you, people coming in from the East Coast said, I don't know how you guys do this at 6 o'clock in the morning. This is crazy. So we had people who were literally had to go get shaken out of bed by hotel staff to get them to even get down to the event. And they said, well, how do you stay sharp in the mornings? And we were like, well, back off a little bit here. We don't. So we do a lot of work the night before to get ready for the morning. We're not super big on trying to jump in and analyze the situation exactly as it appears right now and then put off 5 or 10 trades. We are very big on there's a process, there's a workflow, and if we can just line things up tonight for tomorrow, if we can mark up our charts, be ready for the trading day, then we've got a really high probability that we're going to do well in the morning. So you're looking at it here, and it's like in the pre-market, we're setting up what we're going to look at today is the ATH, the around the horn NYSE trades. And again, Metastock does a great job of scanning for these things. So if you guys, I assume a lot of you already have it because you're probably Metastock junkies. It's a great piece of software, and it's the only thing I know that really competently scans for things like this, where you can go and scan for just these super in-depth patterns, whether it's my stuff or Bollinger or whoever. I'm using Bollinger because he's a friend of mine, but if you're looking at these things and you're flipping charts to do it, and then you look at these things versus what Metastock generates for you at the end of the day, it's pretty dead on. So what's nice about that is you can close down at the end of the day, you run the scan, you come back an hour later, it takes about 45 minutes for the scans to run. It's a pretty big scan, it's intense. And then you just flip through the 20 results that are there, and I'm going to show you then what the refining of that looks like here in a few slides. But we have those trades ready to go. and they're running in the background, and they put up in the past, we've got the results on the site. So if you want to join us on the site, we can definitely arrange for you to have a trial there, and you can go back and look at the results all the way back to 2006. So every single trade that was planned is there. You can pull up all the original trading plans, all time stamped for when they were put up on the site. Plus, we've got people who have been on these plans for years and years will attest to the fact, oh yeah, those are the plans that went out the night before. And then you can look at the blotter and see, how did that trade play out? And it's all done with automation, because the around the horn trades are not something that Julie and I wanted to sit here and babysit all day long. We just want those to go off as program trades. So we load them into our trading software, then we automate them. At the opening bell, we do this Apple trade and we do a Tesla trade. So every day. So those are much more discretionary. So we're setting those up as we're going into the open, figuring out what it is that's going to define a legitimate setup versus a setup that's going to give us psychological stripe, right? Might still make money, but is it something that's going to be terribly uncomfortable to trade? If it is, we're not going to do it. But we have those two trades ready to go, and we're going to talk about both of those here in this session as well. And then you guys have probably seen me do this a million times. The 2SD opening gaps, the Baltimore chop trade, that one we're not going to talk about today. And then we also, after the first hour, we monitor the automated trades and we do this volatility band trading. So that's probably for the next time I'm here with Jeff and the gang here. I'm going to I'll focus on those two. So that can be like a part 2 to what we're doing. But let's take a look at these opening trades and talk about what it is that makes for a good, these are volatility based trades, so a good high volatility trade versus something that's going to be uncomfortable and difficult to pull off. So here's what I see when I'm dealing with, and we've trained a lot of people to trade, and you guys know I do a lot of public speaking about trading, so I've been in front of probably hundreds of thousands of people over the years, and got to talk to a lot of them. And what I see is that when it comes to discretionary trading, people's primary focus is on volatility. They're looking at momentum. Momentum can be a real trap. I mean, it can really, it's this fear of missing out, right? Everybody hears FOMO or whatever, but you really, you can measure it in the human brain when you this morning had a giant pop to the upside, and it goes, and then it's 20 cents, 50 cents, $1.50. It's moving, and you miss the entry. But now it's running so hard that you're just convinced you have to be on this train, because it's going to do what it's never done before, and it's just going to run forever, because that's what your brain's telling you, right? You're wired the way you're wired, and a lot of trading revolves around sort of trying to undo that wiring and be rational behind it. So what happens, right? The discretion looks fantastic, it pulls you in, but when there's no real plan behind the discretion, so I might have got in on that first bar when it slammed down into the support line this morning and popped higher. You might have got in $1 later, and then you wound up stopping out when it retraced. Didn't do anything wrong, just retraced to that initial pop. That's where you should have been getting in, but instead it's where you're getting out. So you got out for a loss. And that lack of pre-planning, sets you up, especially in the day trading space, sets you up for this just psychological catastrophe every day, where you didn't have it set up. Now you're blaming yourself. You if you're neurotic about it, you're really coming down. Hey, I didn't have a plan, and oh my God, I don't know what I'm doing, and I'm no good, and that's no way to go into your career or into the rest of the day even. So we're all about, you got to do some top-down analysis. You have to be very, very patient. You have to plan everything that you're going to do, and there's different ways to plan the same trade. So if you guys watch my live streams every day, I trade Tesla very frequently. So I could do anywhere from 3 to 6 trades in Tesla over the course of the day. That's actually a lot of trades for me. So I don't, we're not I'm not one of these guys who's trading 4 or 5. I've got guys from the boot camp, right? There's John, if you're watching Conforti, he likes taking a lot of trades, taking small gains, and trying to just sort of rake the gains off the table. He's got a very a gambler's mentality about how to approach trading, and that's not good or bad. It's hard to make money that way, but if you're good at analyzing the situation, then it's a way to make money. It's just not the way that I can do this. So for me, I need to set it up ahead of time, and I need to know where is this likely to go over the course of the first 5 minutes of the day. First 5 minutes of the day can be very profitable. You can do this in Tesla. You can do this in TSLL, right, which is the fractional Tesla. You can do it for $14 a share or whatever it is, $18. You can do this with NVIDIA. You can do this with the NVIDIA holder. You can do this with pretty much anything that moves is fair game for this kind of a setup. So the way that I do this is I'm looking at tonight's data before tomorrow's trading. And I'm simply going through and saying, where are the bodies buried here? Where are the footprints of money? Where was heavy order flow sitting? And I'll show you another tool that I use. I use Bookmap to go through and just sort of plot this thing live over the course of a trading session. But the very first step is this chart analysis. And in the chart analysis, I want to go through and I want to say, where was natural support and resistance? And what do those bars look like when they got to those support and resistance lines? They look like program trades, right? So when you're coming down, when you get up to that top line and you see that really narrow little bar there, or you get down to the bottom line, you see that narrow bar, that tells me if I go dig into the order flow, if I dig into the tape, what I'm going to see is there was an algo that was sitting there and it was just dribbling right there and it was supporting price because they're hunting for that order flow. Because if you're a market maker, if you're trading order flow, then for sure what you're trying to do is get to these big pockets of liquidity so that you can process those orders. Seems counterintuitive, but market makers we've trained a lot of market makers in upstairs trading, and the guys who have come to the boot camp, their biggest challenge is when you're making markets, you're very much non-directional. You're a non-directional trader. You're looking for order flow. And in this part of it, we're order flow traders as well, but there's a little bit of directionality. So you have to be right about the direction more than you would if you're making a market in a stock. But now we've got these threshold levels defined. And the next thing that we do is, the next morning, so I'll get up in the morning and I'll pull up the Bookmap. And I'm looking here, and so before the open, what you would see is, you can see that, price went down through there, it cracked that level, and then that level vanished. It moved down through this level, and that level vanished. So before the open, those would be solid lines of order flow, and those lines, what they're showing you is exactly how many orders are stacked up at each level. So you can see at the bottom level there, we have, the session volume is over on the right. That was about 50,000 shares over there. And if you look at the middle one, you had 2.7 million shares that went off as we got into trading. And if you look at the top one, it was almost 60,000 shares. So when I see those threshold levels before the opening bell, and I go back and I line them up with the levels that we had identified on the chart the night before, then what I see is, if they're going to look for order flow on the opening bell, then it's very likely the case that if I take so you've got the second bar of trading right there, breaks down through those levels and goes and pegs our profit objectives. And why does it do it? It's not because there's really any kind of heavy selling in the pre-market. You can see there, if you look back at those pre-market bars, it's just sort of regular order flow. A little bit of downside pressure in that last bar, the one with the red arrow under it. But then when the market opens, immediately it sells off and it sells right through the levels that we expected. And that constraint in the zone that we drew, that gives me a psychological edge. So I'm very comfortable taking that trade, that particular trade. Julie is not. So for Julie, this is a nightmare trade because the volatility on the open is very unstructured. It's very, you can get, so what I do on these is I set up a 2x2 bracket order. So effectively I'm doing a $2 profit versus a $2 stop. And that usually gives me enough wiggle room that I'm not going to get hammered out of the trade just because the market's moving. But once the market opens, I'm dragging that bottom line is going down to that bottom profit objective, and the top line, the stop loss, is coming down as price starts moving. You have to actively manage it. You have to be comfortable with this. And if this kind of a thing, I've had people tell me, that when they just look at the setup, when they just look at something like this, they're already uncomfortable. Like, holy cow, that's a nightmarish scenario for me because, I don't want to be on the edge of my seat watching this momentum unfold. And that's okay, because there's other ways to do the same trade that are very different psychologically. So this is, now you're based on data once again from the day before, and you're just going in. So now on MetaStack, so I prefer to work in bars, bar charts. Julie likes candles. I know a lot of you guys like candles, so I get a lot of candles in these explanations or these examples today. But so I'll just set them up on a bar chart because I think it's real easy to define support and resistance here. And I'm not trying to figure out what a candle did. I'm just looking at where are all the touches. And you can see that in Tesla, we had this move that just cranked lower through these levels, and that when price went back up through those levels at the end of the day, it really stopped just about where it started to move lower during the session. That tells me order flow dominated on the way through there, and order flow is very likely to reassert itself the next day. So now what I do is I set this one up totally differently. This is set up as a trading plan. So this is set up with all the levels defined ahead of time. And this is where on our workflow that I showed you earlier, you could see we have these things set up as program trades. And the programs are based on these levels. So I've got a Tesla, I've got an entry, 433.74. So 3 spot 74 is the first time that we would go short. 2 spot 04, $432.04 is the target. 432.04 is then your next threshold for a continuation. 430.54 is your next target. And 428.77 is the final target. That was the lowest line on that plan. This sets you up totally differently. This puts you in a mindset of, I can sort of set it and forget it. I don't have to sit there watching this trade. I don't have to babysit this trade. And I'm not going to be tempted to insert myself into the trade. I'm not going to go and try to, like John, rake 50 cents off when the reality is the first target is $1.70. I'm not going to tamper with my stops. I'm not gonna do anything because I've got everything set up ahead of time, and I'm just gonna let it do what it's gonna do. And in this case, you can see, it opened and it traded right down through the lines. So I don't think I don't have an arrow on here or anything, but it opens up and it comes in. Hopefully you can see that. I don't know if you guys can see this on the PowerPoint, right? I've got the pointer on there. So stock opens and it starts trading down, comes through these levels. And again, what I'm doing to figure out whether this is going to be a level that it stops at. So we're structuring these orders, so we're taking off a piece of this at every one of these profit objectives. But let's say you're just doing one lot, and you're getting short here, and then do I get out here or do I wait for this? This is where something like that bookmap data comes in handy, right? Where you can look at the aggregate data from all the exchange resources out there, and you can see exactly how many shares are sitting there. Like, well, you know what? It's got pools of liquidity here and here, and after that, maybe it's got 1 million shares sitting down here to buy. So I'm going to take this target. I'm going to take this target. Then it comes back up and it cranks down through this stuff again. So you have a second chance. Doesn't quite hit this target, but you're out here. So at the middle line. So now you've got this completely structured way of approaching what looks like a completely chaotic trade. It's like baseball. Baseball looks like it doesn't make a whole lot of sense sometimes, but if you really dig into what's going on behind the scenes, baseball is all about statistics. Baseball is all about probabilities. Opening trade. We do this every day. We've got a delta hedge that we're looking for on Apple. So Apple's one of those stocks, has a lot of options activity around it. And, you know, we go through, we look for pre-market support and resistance, and we look for, you know, how much overnight buying is going on at a certain level. And then we know that market makers, options market makers, are, you know, effectively they're bookies, right? So they're looking to stay neutral. Like they're not directional. They want their whole purpose is to collect premium. And what's going to happen if you get a little bit of a sell-off into a support level, that support level holds, and then we see that it's a repeat performance of a previous place that price bounced? What's the market maker likely going to do if stock starts moving higher in order to control their delta? How are they going to hedge this thing? They're going to buy stock, right? So they collect premium, but now they're short delta, right? So they lose money if the stock goes higher. So they have to hedge that risk. How do they hedge? If they're short delta, they're going to buy. So they buy stock, and this is what gets us into the position. So, you know, a long stock position is going to have, for you guys who are options traders, going to be what, a +1 delta, right? And a short call is going to have negative delta. So when you buy, you neutralize, you get rid of the negative delta. So counterintuitive as that sounds, it's very, very logical. And what we do then is, so for Apple every night on my trading plans and the plans the guys get and you know, that we all work from, we've got this volatility band hierarchy. So we've got a deep drill into where are all these likely delta plateaus, right? Where market makers going to hedge. So we have all those levels identified ahead of time. And then we just look at all these levels. We keep marked up on our charts when the market opens, so that even if there's a less than perfect inflection at what we think is going to be the delta hedge, we can still get in front of them that opportunity. So here is a chart of Apple, and you know, here you're looking at right there, that red arrow moves down into a level that we've identified as a likely a pop, right? This is where price is very likely going to move higher. You can see if you go back to the left on the chart, well, you know, right from just about there, price tends to rebound a couple dollars. And that's all you really need, right? Is a couple dollars on an opening trade like this for, you know, your day to really be off to a good start. And we're just looking for this over and over and over again. And when we get the bounce, then, you know, we go back to that sheet. So you go back to the liquidity matrix there that I had posted a minute ago, and you can just do this, right? You don't need me. You can go and mark up your charts every day, find out where the pockets of liquidity were, find out where the volatility originates, keep yourself a nice record of that in a spreadsheet. And then you know where to draw your targets. You know where to say, well, if price moves higher through, you know, the first sort of overhead, which is right here. Boy, I hope these are showing up on your stuff. You know, if it moves up through this first overhead resistance at about, you know, 301.70, then I've got a good chance of getting up into 303. And as long as you have it all put together ahead of time, no stress, no. You know, there's no worry. It's either it's going to work out or it's not going to work out. Julie used to tell people all the time, you know, it wasn't very popular at the big shows and things that we spoke at. She said, you know, I'll take the mystery out of this for you. You're going to lose money. It's not, you're not always going to make money no matter what strategy you're on. Anybody who tells you otherwise is pulling your leg a little bit. This is a high probability trade, and if you put yourself in front of it every day, then what you see over time is, over time, the trade plays out. So I encourage you to simulate this. I encourage you to go dig back in your in your metastock charts and just look at some pre-market data, look at a bunch of data, and say, okay, well, how often, if we get this inflection of what's a likely delta hedging level, do we get this kind of a bounce in the morning? And boy, you know, if I can pull $1 or $2 out of Apple every single morning in my life, right? What's that do for me? Like, what's your why? Right? What do you want to do with trading? Everybody says they want to make money, but the reality is, yeah, you don't want to lose money. You definitely want to make money. But my guess is most of you, if you're here, you also want to just get good at something. You want to you've been good at other things in life, and now you want to be good at this. You want to understand how markets work. You want to see that you can get an edge. This is a way to get an edge. So that NYSE trades that we do. So now here's a whole nother, right? So now we're moving into the next box. We do these automated order flow trades. And these are based on the pattern. So you go, you know, you run a pattern scan in Metastock, or you go and you're flipping through the charts and you're looking for the patterns. However you're doing it, you're finding a group of patterns that look like these. So we've got, you know, fastball, infield fly, line drive, 3-2 pitch, backdoor slider, switch hitter, double hitter, and sinker. So those are my interpretations of how the market moves through cycles and what the cyclicality of the market is. And you can find these spreadsheets on Trader Insight. They go all the way back to 2006. You can see every single month of every single year. You can see all the years. You can see how everything played out. And the thing you want to look at is the pattern distribution and the triggered pattern distribution. What those tell you is, I think anybody should do this in their trading, by the way. Like if you're putting together a trading plan, you ought to keep a record of, all right, well, how often did I see something? And how often did the thing that I saw actually play out? So what I see here is fastball and infield fly, or that's an expansion of range and volume and an extension reversal. Those represent the lion's share of what I found. If that's the lion's share of what I found, then how often do those things actually trigger, and how much of the profitability comes from those things? Because what that tells you then is whether or not you're introducing selection bias into your trading, whether or not you're finding patterns because you like a certain thing versus you're finding patterns because it's what the market's actually doing. And the same thing for the long to short history. Look at the shorts this year. Market's making new highs. I've been really short a lot, even for us. Usually we're 50-50, and we are 93 shorts and 32 longs in this particular trading plan. But look at the results. The plan's done $62 per share traded over the course of the year. That equates to like a 67. If you had a $100,000 account and you were 4-to-1 in the account, you did a 67% return. You're working. It's not an investment. You're not handing your money to somebody and saying, okay, go, you know, invest this in the market. Let me know how I did. You're definitely working the machine to do these numbers, but with this analytical framework behind it, which is just an intuitive way of looking at markets, you can tell yourself not to let your psychology get ahead of you, right? You're not getting out over your skis. You're looking at this thing and you're being objective about how things played out over time, and you can be objective about how you plan your trades going forward. Here's where psychology comes into it in a big way. Is now you look at this. This is for the month of I can't see, my eyes are great today. So this is through May, or through the beginning of May here, actually. And this shows you sort of how frequently things trigger, what the wins to losses look like, how many times things break even. And if you go back and you look month over month over month, the thing you should get a feel for is, would I be comfortable with trades that trigger with this kind of frequency? Would I be comfortable not being in the market on certain days when I look at it with the benefit of hindsight and I say, holy smokes, you know, the market was on a tear and I missed it, right? So are you in this position of your psychology beating you up for not being more proactive during the day? You know, in which case you mix in the volatility trades too. Now you add the 2 SD gaps, you add the volatility band trading, you add the Tesla trade. You know, people can add all these things in as long as they fit what they're doing, as long as they're well suited to their psychology. I've known people who this is all they do, right? So that guy Reese, who's been to every boot camp for forever, this is all he traded. He did the around the horn trades, and he was happy with it. He liked the structure. He liked that, you know, you're putting together this blotter is out there every night and tells you exactly this is what we're going to do. This is how we're going to do it. Entry, stop, 50% to target and target. So you get in at the entry, you get out if you get stopped out. 50% of the distance to the profit objective, you move the stop to break even, 10 cents to the target, you move the stop to the 50%, and at the target, you're out, right? So you're done. And it's completely structured. It's just an easy trade to put on as a program. And here you see it, right? Each one of these then has a deep dive page that goes with it. So you've got the gouge sheet, and then you've got the actual setup for each one of the trades. And you can see there that we identify things like, okay, well, where are the floor trader pivot lines going to be? Where are the where's the confluence between natural support and resistance and those floor trader pivots? So we put things together there so that, you know, to further confuse the issue for you, those are there so that guys like me or guys like you know, Paul or Jason or any of them can get in there and find other levels to take trades inside the bigger trade. But for us right now, let's just look at that Philip Morris trade and how this one then is set up. This is what Metastock is scanning for. So in this case, the bar on the far right of the chart here is that right there is a line drive. It's also a fastball. So I think on the trading plan, we said line drive. That's because it gapped. It also satisfies the criterion of being expansion of range of volume, being a fastball setup. I like it when they double up like that, right? So I like it when I get multiple confirmations of a trade. That's my psychology. I like lots of data saying this is going to be okay. So I look at this and I say, you know what? It opened in the bottom of the range. It closed in the top of the range. It looks really good. Looks solid. Got up above prior support and resistance. It has a resistance stack up above it, but there's plenty of room for a move up into that. So if we get up into that shelf, I know what to expect. The next thing that I'm looking for is, well, where am I going to put my stop loss? So now I drill from that daily chart down to a 5-minute chart. And really for me, this is pretty simple. I'm just saying that line right there represents where I think if tomorrow morning this winds up reversing, if it gets down through that red line, I think it's going to wind up down in here, or I think it's going to wind up, even worse down in here somewhere, because I think that an institution drove this price higher over the course of the session. And that institution is compensated for the purchases that they made relative to the volume weighted average price for the day. If they finished what they were doing, then tomorrow morning we're going to find out, because this is going to stop, and when the buying pressure is gone, it's going to fall through that line and it's going to keep falling. If, on the other hand, tomorrow morning price ticks a little bit higher, then before this thing gets away from them again, they're just going to go and try to finish up what they were doing. And the logical place for price to go is up into daily overhead resistance. It doesn't always happen that way, but very frequently, if we go and pop into this threshold level up here, if we hit this shelf, price will stop dead in its tracks, because all of this institutional liquidity that was there before is still going to be there, and that's just the best place then to put a profit objective. So now we got our target there, and it doesn't matter if it goes higher, if it goes up, most likely thing is it's going to retest this up here, but we're not even looking at the chart. We're not looking at this during the day. All we're doing is setting this up ahead of time. We've got a complete plan. We've got the entry, the stop, the target. Told you what our money management rules are in between. So we know exactly where we think things are going to happen along the way. We've got the automation in place to go and clip us back out of the trade for a number of reasons. If money management rule gets us out, or if the target gets us out, or if a stop loss gets us out. And then, as I said, we also have these algo inflections that we think are likely to tamper with price as it's moving, right? So we're likely to get bounces at these levels over here. And then we've got this confluence level at 179.12 that overlaps with the central pivot. So we think a lot of things that programs key off of are very likely going to happen sort of along the way. And then when we look at what actually happened over the course of the session, right, it's, price opened above our entry, so no entry. So the very first bar of the day is up 50% of the distance to the target. When it comes back down again and loops back up through, right? So down here, your program should say, if price is less than this threshold level, and we use we go back far enough, we were trading in eighths and quarters, so we're talking about if it gets back down through here by 12 cents, then the order goes live and it says then buy, stop, limit. This line is the stop. The limit's usually about 10 cents away from the line. And then as it moves up, it's just taking advantage of these levels. This dashed line here is 50% of the distance to the target. At that point, this stop loss just goes up and becomes the entry line. So now the trade's risk-free. When we get 10 cents to this blue line, the stop gets moved up to the 50% to target level. When it hits the blue line, we're out. And then what we don't do is regret not having caught the move up to 190. It went $4, right? And I don't care. There is no coulda, woulda, shoulda. It's a program trade. It's out there. It's doing what it's going to do. And what we're counting on is just the psychological stability of being able to say, look, this trade is this trade. This is the way it sets up. And I'm not going to go and step on it afterwards because I didn't get the maximum favorable excursion. A lot of people book those maximum favorable excursions when they're showing you, how their trading software works or their trading programs. If you look at that spreadsheet that I showed you a minute ago, what you'll see is in at the entry and out at the target or out at the stop loss. There's never how far could it have gone. It's always how far did it go based on the rules. So this is very, very rule-based. I like a rule-based trade in my psychological comfort zone. And, as it's moving up through these levels, it's doing it with the attention of, my very expensive computer hardware, not me saying, oh, geez, I'm going to sweat every tick here. I'm going to monitor every tick in the trade to see how I could make this better. I tell my son all the time, you've got to, it's the courage of your convictions. You've got to know why you're going to do something. You have to be able to go out there and do it and be comfortable doing it. And if it makes you uncomfortable, you're just doing the wrong thing. You just have to go find a different way to do the same thing. So if you want to take the inventory, as I said, it costs you nothing. We do not associate your data with you. We do take your data in, and we're data people, so we take the data in and we're looking at just building a huge model of what it is that's going on for people in the market. So we've tested this on lots and lots of traders. So this is a valid instrument. It's been completely validated. It measures your emotional intelligence. So how well do you regulate your emotions while you're trading? It affects how you can stay disciplined when the situation is stressful. What is your review process like? Your psychology, right? So when you're going in and you're trying to logically work back through what happened in your trading day, your week, your month, your last trade, whatever it is, how tied is that cognitive reflection then to just a deliberate way of thinking? We also look at your risk profile, which we try to figure out is, are you trying to pound a square peg into a round hole, or is your risk profile in line with what it is that you're trying to accomplish? We look at impulsivity. Do you fire off trades? How often do you get into positions that maybe later on you think didn't make a whole lot of sense? Do you wind up over trading because of that? Do you think you're missing the train, so you try to jump on while it's leaving the station? It just goes through it. It tries to figure out what's the role of impulsivity in your trading outcome. And then the final one is neuroticism or emotional stability. And that's how resilient are you? How much do you tend to blame yourself? A lot of people play the blame game. That's not healthy. So there's enough instances in life where people want to tell you why something's your fault, and if for example you're very, very impulsive and you're also high on neuroticism, then what happens is you spend a lot of time sabotaging your own trading because you're constantly feeling like, oh my God, why did I do that? I screwed up, I did this thing wrong, or it's totally my fault, I messed everything up. We just try to get a picture here in this whole thing of who's out there trading and what's going on, and then especially, as I said, with the PDT rule going away on June 4th here, we think a lot of people are going to flood into the markets, and we're just trying to understand sort of where everybody's head's at. So looking to just build a big database of what's going on for everybody. So you can use that, traderinsight.com/MTRI, or you can scan the little QR code thing there. And then also, if you want to be part of those live streams, I do them. I did not do them this week. It was my birthday week, hence the Disneyland shirt. And we're going to Mammoth. We're going skiing. You guys believe that? Going skiing one more time. Headed up there. It's going to be 60. It's like 90 degrees here. It's going to be like 60 degrees up in the mountains, but there's still 15 feet of snow. And Gibby and the guys at Metastock didn't say come ski Utah this year because they know they didn't have any snow. So we have been Mammoth intensive. But we're going to have some fun up there. So traderinsight.com/live-stream. That signs you up. You just get a text message every day that says Adrian's going live. And if you click on the thing, it'll bring up a little video and you can see what our strategy is for the rest of the day. All right. And I think I'm done with a couple of minutes to spare. So if anybody has any questions, let's go. And if not, it's been great.
I can't believe you have 15 feet of snow this year.
Is that nuts? Yeah.
You stole ours.
It's yeah, and it's we also had Epic this year. We had Epic and Icon, and I managed to get them to, they weren't even open at Christmas in Utah, so we just rolled it over to next year. But we're avid skiers, so we're gonna go up and do some spring skiing.
Well, hopefully we'll have some snow for you next year, and if you're in the area, you can
do me lunch. So.
Yeah. I know a place.
All right.
Well, I don't have a lot of questions coming out of YouTube or GoToWebinar, but one of the questions we get a lot is how applicable is this to international markets?
The patterns are the patterns. So if you're trading, I'm German, so I've got a lot of and speak German, so I've got a lot of people in Germany who trade the German markets. I've got people who trade. It's not super great for markets that don't have a cash. So if you can define a cash session for it, then it's real easy because you can do the scans, right? The scans are looking at market data that has an open and a close. The only thing that I know that people haven't had luck with is like Forex. So
okay.
Yeah.
Cool. I've got the tradersinsight.com link posted in the chat. Go ahead and take a look at it. Take a chat at it. Adrian, have a good holiday weekend. Thanks for joining us.
You too, Jeff. Thanks. Always nice seeing you. Say hi to everybody there.
Will do.
All
Thanks.
Right.
Bye. Okay. Let me go ahead and get over here on my screen. I do want to talk a bit, of course, just a bit more though. I've talked a lot this week. I do want to talk about around the horn pattern scans. It's an add-on that we developed quite some time ago for Adrian, based on his visual patterns, based on everything he's just talked about, and based on the work that his book around the horn. So just to kind of, where is my pointer? Here it is. In terms of the setups and the patterns that this will identify, it's going to do the fastball, the line drive, the slider, the hitter, the infill fly, the 3-2 pitch, and the switch hitter. These are all methodologies that are basically, if you apply them to a chart, they're going to label and identify and show everything to you. So that means they have the scans. That means they have the ability to go in and see exactly what it is. If you open up the Expert Advisor, it's going to give you a description of what that pattern is and what you should do with it. does a really, really good job of putting all of that work into a place where it's useful and can be used by you. So what I'd like to do is let you know that it's $2.99. That's a one-time cost. You pay for it, you own it, it's yours forever. If you buy it at the conference today, it's going to be $2.49. We'll give you a Metastock trial if you need it. We'll give you a money-back guarantee. Of course, all of the products we have are backed with a money-back guarantee, so you can try them, and they're going to be helpful for you. Give us a call, 800-882-3040 to get that, metastock.com/saleschat, or metastock.com/conf promo. All of those will get you there. So as we wrap up and move into our final speaker of the week, I do want to encourage you, if you haven't yet, I just put up a new event. We're going to do a podcast with Anwari in just a couple of weeks where we kind of talk markets. We talk about what she sees as important. She did a session with us a couple of days ago, and one of the things that was the comment is we should plug her into AI. She's really, really good, but we do events like that all the time. We're going to talk about the markets. We're going to talk about what's going on in the markets. We're going to talk about stocks that we liked or industry sectors. It depends on who we're talking to, but it's a great session, and I love the actual ticker talks that we do on the tradersforum.com. In addition to that, your tradersforum.com membership is free. You'll be able to chat with other traders. We'll learn about the markets. You've got tons of resources up there. It's a community of traders designed to help other traders. So join at thetradersforum.com. As I mentioned before, all of the specials that we've got or we've talked about this week for Metastock can be found at metastock.com/conf-promo. Give us a call at 800-882-3040 and go to metastock.com/saleschat. So before we move on to our next speaker, there's two prizes we're going to give away. So since it's the very end of the day, we're going to give away two prizes. The first of which, Rob offered to buy a book for you off of Amazon while he was talking. And we're going to go ahead and kind of pick the winner on that one. If you are watching live right now and want to participate, this is your chance. What I want you to do to win that book, and I think it was called The Tao of Trading or something like that. I'm a big fan of the Tao, the TAO, not the Dow Jones. But what I want you to do is we're going to have you pick a random number between 1 and 100. And actually, let's go from 0 to 100. Pick a number between actually 1 and 100. Put it in the chat right now. And if you get close to the number that Google generates in just a few minutes, you'll be the winner of that. That's for one of the prizes. So I'm going to give you some minutes to type that out, chat that into us, give me a number, okay? 1 to 100. I'm waiting for you guys. I'm going to give you a few minutes to do that. Our next speaker is actually Eric. Eric, I'm going to ask Eric to come online with us now, and I'm going to have him help me give away the other prize. So the other prize, we're going to give away a 3-month subscription to Metastock Real Time. We've talked about Metastock all week long. It's the #1 software in its price category. It's won 32 years in a row the best software in its price category. We're going to give you 3 months of access to the Metastock Zenith News Service, which is an institutional quality data platform. It normally retails at about $265 a month. We're going to give you access to Learn Metastock for 3 months, and also Magic Trader for 3 months. So, Eric, can you hear me?
Yes, I can.
All right. Now, you might want to know what I need from you to help me give away this prize.
Don't make it complicated.
I just need you to make up a number. So, and I want you to make it as random as possible. So let me come over here to my spreadsheet real quick. And I need a number between 1 and 5,459.
1,247.
Okay. And the winner of that prize is John R. John, you have a MindSpring account. I doubt there's many John R's in here with a mindspring.com email address. So if that sounds like you, congratulations, you just won. If you are here and watching live, you don't have to be to win that prize, But if you are watching live, let us know because we love to celebrate your winning. All right. Now, let me jump in here. And let me just look at the chat real quick. Make sure we've got numbers. We do. Okay. All right, let me open up a Google tab right here. We're going to say, give me a random number between 1 and 100. The number that it came up with was 36. Okay. Let me look at the chat. I'm going to do my best to not miss the closest answer like I did last time. 33 is the closest number I'm seeing right now. Let me just check to make sure we don't have a closer one on YouTube. $79. Nope. Okay. So our winner for that particular prize is, let's back and go to webinar. It's Bradley G. So Brad, I'm going to send your information over to our friends at robbooker.com. Going to have them actually get in touch with you by email to get you that prize. For the person, John R., the MetaStock prize, I'm going to email you after we get the next session started. I need to get a little bit of information from you, make sure that we've got a current information if I start providing market data to you. So I'm going to drop you a little bit of an email. And if you answer me, I'll set you up for MetaStock for 3 months. All right. With that, Eric, I want to say thank you for the assist. That was awesome. Eric.
Yeah, that was random for sure.
Eric, I want to say you're going to talk about something that's nobody else has talked about. I really like the technology that you work with when it comes to trading and automating option strategies. And I'm going to go ahead and get you started here. Let me go ahead and make you the presenter here. Okay. And I should have asked you just if you wanted to share your screen or not.
Yeah, let me see if I can figure that out.
I'm here to help you if you need. It looks like you don't need any help. You must work in software.
Yeah, right.
All right. Very cool. I can see you. I can hear you well. You're our last speaker of the day, so take us home. It's all yours.
Do I need my camera? Can you see me? Let's see.
Do you want your camera on? I can. You can absolutely turn on your camera. I'll even send you a request to turn on your camera.
Let's see here. Share my camera. Let's see if that works. You know, this happened to me the other day, and it wasn't. How's that?
That's you kind of just you teleported right to where you're at.
Yeah, that did look like a teleportation, didn't it?
Yeah. All right.
Okay.
Well, we can see you, and we can see your screen, and we can hear you. And I'm going to get out of the way. Take us home.
All right, great. We'll get started with the video on, and then maybe I'll shut that off in a little bit. Get more room on the screen. Okay, so we're going to look at some technology here that helps us trade using automations, trading any market condition in the stock market, even non-directional strategies. So automation with risk and profit. And we're not going to be doing a lot of chart watching, and we're not going to do any guessing. We're going to use, I guess you say, a little bit of algorithmic help along the way. And we have a unique approach to trade alerts. They're one-touch responsive trade alerts. So we'll do a little demo of that. And what we're going to show you are hedge fund style of option strategies, institutional style of trading, professional style, whatever you'd like to call it. And beyond all the automation, we're real people. So you do have access to us and not just chat bots along the way. So do look at the risk disclosure. It is important that you're aware of. There's always risk of loss when trading and speculating. You should be using risk capital, and that past performance is never a guarantee of future results. You can take a screenshot of that if you'd like to read every word at your leisure. And a little bit about who we are at AltaVest. We're founded in 1997 as a registered IB. Introducing brokerage, we developed our proprietary options technology along the way, and we've traded millions of futures and options contracts over the years. And we're registered with the CFTC and we're a member of the NFA, and we're located in California. A little bit about myself. I am Eric Gebhard. I have a BS in Business Administration from the University of Southern California, and I'm co-founder of AltaVest. I've had various securities and investment licenses over the years with the Series 6 and 63 and insurance, and currently have my Series 3, that's for commodity futures, and the Series 65, which is, I think the formal name is the Investment Advisor Law Exam, which is essentially what you need to become a investment advisor, work for a registered investment advisor, or RIA. So, and maybe you've seen a bit about us over the years on various presentations, including Metastock. These are always a lot of fun. I always like to listen in to what I can during the course of the week. And here's the live presentation from last year in Miami. That was a lot of fun. I think there was about 1,000 people there. And we often get quoted in the financial press. Market Watch likes to chat with us about our opinion on various things. They were asking about gold, and of course that's been in the news since the beginning of the year in particular, although not as much lately. Interesting how that works. When something moves higher, it's always in the news, but not necessarily when it declines a bit. But we're here talking to Market Watch, my business partner here, Mike Armbruster, talking to them about the higher for longer energy prices being a big headwind for economic growth in the months ahead. And actually, we're going to talk a little bit about that later in the presentation, just a little bit about that. And yeah, talking about GDP slowing in basically the Q2 or even in the second half of this year. But anyway, so we're glad you're here. And if you've not heard of us before, that's okay. I think you're going to like what we're going to show you. And these 3 trading barriers are really based on feedback from all the thousands of clients over the years. And I think I can relate to them. And if I can, you can, because, we're all people. We all have the same struggles with fighting, our humanness at times. But these are the 3 top trading barriers. One would be information overload. There's a lot of noise and conflicting price targets, opinions, narratives, clickbaits, headlines, right? And then how about this? How about all the headlines every day and all the tweets and so forth, from President Trump and from whomever, really. So you get all of this noise, and it's difficult to process that information overload. We don't want to end up looking like this poor guy here with his head in his hands, groaning there as he stares at his screen. The trouble is that overload of information is just because there's too many sources of information, a plethora of information, complexity of the information can be overwhelming as well. And how about the lack of filters? How do you really know? How do you identify what's truly important and what isn't? So what does that do to you? Well, you end up with analysis paralysis sometimes. That overwhelming amount of data actually causes you to sometimes I think we just shut down and just kind of give up, really. And then we lose focus on what's really key. And then it makes us actually feel a lot of stress and fatigue along the way. So you don't want to end up like this guy here, kind of looks a little halfway brain dead there with too much info. So we're going to try to avoid that. And we're going to use some technology to help us. How about the second barrier is time? We often run out of time for various reasons. Maybe we're not well prepared. We don't have a plan in place. We don't have a process. We've got kids running around the house. We've got jobs to do, whatever it might be. It takes time and discipline. And we're going to show you how we do things, and we don't need to screen watch all day. So this is not what we're going to be doing. And then I think the third barrier really impacts all of us, even if you've been doing it for decades. It's still something that sits on your shoulder and whispers in your ear at times, and that's emotion, human emotion of fear and greed. You ride that emotional roller coaster. So you're doing well, you start to feel like a genius, and you get euphoric and you're thrilled about your success. Things turn around, you're not doing so well and you might start to panic, wave a white flag, a surrender, capitulate. Might even become despondent or worse, maybe depressed. But nonetheless, sometimes you'll see you get back a little bit of optimism and then you start that cycle again. But we want to stay off of that roller coaster. We want to learn to control our emotions. So can we use professional option strategies to help us jump those barriers? And I think the answer is absolutely. And before we jump into the presentation with the software and so forth, just a brief review, not really getting into the weeds on options, but just kind of providing a little bit of a theme here and some context to keep in mind, things important for us to keep in mind. When you're trading options, the buyer pays the premium and the seller collects the premium. So if you pay the premium, you're the buyer and you're said to be long, and that's whether it's a put or a call. But of course, you pay the premium and someone or something else collects it, and that's the seller, and they're said to be short the option. Again, it could be a put or a call. And here are just some real basic, simple approaches to long option strategies, or maybe even a debit spread. It could be just an outright long strategy or a debit spread, but the market's moving higher. Maybe you have a target up here and the market's moving higher, so maybe you buy some calls or you buy some call spreads up here. And the same thing with the bear market here. You think maybe it's going to keep dropping and you might buy some out of the money puts or a put spread. Real simple bullish outlook, bearish outlook here with some simple strategies there. But those are, in this example here, long option strategies. Basically, you pay the premium and you buy some options. And then these are short option strategies where you end up selling the premium to the option to someone else and collecting that premium. You have a bull market, think the market's moving higher. Maybe you think you sell some out of the money puts is a good strategy. Or if you think the market's going to drop, you might sell out of the money calls or close to the money even, or some combination of a spread. But there's also non-directional strategies oftentimes with these short premium collection strategies where you look for the market to stay in a range, like in this example between these blue horizontal lines. And we're going to look at that here as well. So what options markets are we going to talk about? Well, we're going to look at stock index futures options markets. That's kind of a mouthful, but they're also equity index futures and options is really, you can call them stock index or equity index. But the reason why is they're very flexible. You can use them for hedging your portfolio, of course, outright speculation, and these are highly liquid markets. And these are the major benchmarks that we're all familiar with, right? The Russell 2000 is the small cap stocks. The NASDAQ 100, obviously we know about that, all mostly large cap tech. And S&P 500 is the 500 largest, obviously, in the country. So we're familiar with that. So this is where we're going to focus our time. And a little brief review on two Greek letters and how they apply to options. Delta. First of all, delta helps us determine probabilities when we're trading options. So you have a delta here, and the definition formally is how much does the option value change with a change in the underlying index. And that'll make sense when I show you. For example, options traders look at it as the approximate probability of expiring in the money. And here's an example that should clarify things. So if an option delta is 0.2, that means at the moment, there's a 20% chance that option would expire in the money, which means conversely, there's an 80% chance that option is going to expire worthless. And of course, delta is always moving with the price of the underlying asset as well as time. And it is not the probability of a winning position or a winning trade. So you don't want to look at delta and conflate it as the probability of profit or a winning trade. And theta. So we talk about time. When it comes to options, you might use the word theta. So remember, options all have a limited life. They all expire at some point, and they're called a decaying or a wasting asset. So time is referred to as theta, a negative number. It equals 1 day of time decay. So here's what it might look like on a graph. You've got 120 days and you start moving closer to time zero on the calendar, and then you see the option value here starts to drop and drop and drop as you get to zero, because eventually the amount of time remaining on that option, or the amount of theta, is going to end up at zero. And you'll notice, especially in the last 30 days, the amount of theta starts to more rapidly decline, a little bit exponentially compared to prior. So how do we use delta and theta when we're trading options? Well, here's a simple, I don't know, I guess you could call it a little table of various strategies, but we're going to look at it the way the large institutions and professionals look at trading options. And we're going to look at selling options, and maybe there's a reason why a lot of these big traders are using option selling as a strategy. Here's an article here that I thought made some good points. When you're selling options, you're able to manage risk like a professional, distinguishing option sellers from novice speculators. And it's a strategy often preferred by long-term investors who value consistency over high-risk speculation. And I asked AI about option selling. So here are the advantages. You have that time decay advantage. We talked about that, the theta decay. Selling options allows traders to profit from the erosion of the option's value over time. Then you have that higher probability of profit. Again, with selling options, the seller receives the premium up front. And then you have the idea that perhaps if you're selling options, you could refer to that as income generation. I don't think that's really always an accurate description, but nonetheless, it's mentioned here. Market neutrality. And that's one thing we're going to look at too, how when a market might be moving sideways in a range, you still have option strategies that you can use rather than getting chopped up trying to pick tops and bottoms and just trading outright long and short positions. And then you have market inefficiencies as well that can be exploited with options. So in summary, it says these advantages make selling options a preferred strategy for many professionals. So here's what it might look like on a graph, just a real simple credit spread with call options, where the red line is the call that you would sell and collect premium, and the blue line represents the call that you would buy as a hedge to cover that position. So these are not naked strategies. So this would be selling an out of the money bearish call spread and collecting the premium. And here's what that might look like. You see, you sell this call spread, and let me just go back. You sell this spread, and on a net basis, you collect premium. So you sell the red line, you collect some money, but you have to use some of that money to buy a higher strike price call to help hedge or protect that position. Again, we're not uncovered or naked with these options. So you can see here the market starts trading, chopping around, going up and down, starts to drop and whatnot. And then you see at this arrow here, you close out the trade on this date based on where I've got this arrow pointing, this blue box. That's called the RTI indicator, the risk thermal indicator. So that's a color-coded indicator for risk and profit. And we're going to dig into that. But essentially, the way this works is you sell the spread, you collect the money, and as time goes by and theta decay goes by, and if the market doesn't make a dramatic move against you, and in this case that would be higher, then eventually you buy the spread back for less money versus what you sold it for. So you sell high and you buy low in the future. That's the whole goal. And then there's non-directional strategies here. So this is something called an iron condor, where you sell an out of the money call spread and simultaneously you sell an out of the money put spread. And you have this wide margin of error for the market to fluctuate and move around. And again, you can see here on this date right here, you get a blue RTI indicator, and that says get out, take your profits. And a big key to this is we can automate this so that when it turns blue, your orders are automatically placed on your behalf. So that's part of the automation we're going to talk about. And you can see here the expiration date, by the way, on this particular spread, this vertical line. So These are strategies that you're almost always going to exit before expiration. We're not planning to hold things till expiration. Here's another variation on the Condor. It's another premium collection strategy, or non-directional. And it's a strategy we came up with years ago. We call it the Dragonfly. And it's a little more complicated, but again, we can automate this and take a lot of all of the workload off of your shoulders. So the red line here is the call that you sell, and you sell 4 of them, and you buy 3 further out of the money calls, and then 1 closer to the money call here. And then you have the same structure with the puts. You sell 4 puts with the red line, you buy 3 further closer to the money here, and then you buy 1 further out of the money as protection. And the same general idea, but the idea is this call that you buy and this put that you buy is insurance. It's an additional insurance, I guess you could say, on the strategy. So it costs you money and you pay the premium, but it provides for an oftentimes more robust strategy versus the iron condor. Because again, if you own this call, the market starts moving higher and higher, then it's going to act as a little bit of additional protection or hedge against the short calls above it. And the same with the puts. And I'll show you in more detail in the demo here in just a few minutes. So again, market's trading sideways, chopping around, and then you can see right here on this date, you get a blue RTI. So you sell it here, collect the premium, prices chop around for a month or so, and with 26 days remaining till expiration, you get a signal to close it out and you buy it back. And there are other strategies too, something we call a bull hedge. It's really a combination, and it's a bullish position you might use to speculate, or maybe you could hedge versus a stock market rally. And there's something called a bear hedge, and I'll show you that. And then of course there's all the typical strategies as well, like butterflies and just a simple vertical or that type of thing. But here's an example of a bear hedge where you sell an out of the money call spread, but you simultaneously buy an out of the money put spread. So you take in money here, you collect money by selling this out of the money call spread, and you use that money to buy an out of the money put spread. And you can often do this for a credit. So placing the trade doesn't cost you any money, usually even money or a credit. You can often do that. You can see if the market drops, like in this case, then yeah, you end up with a nice profitable trade. And if it were to run against you and go higher, then you have to cover your short call position, probably for a loss. And we'll show you how that works as well. And then here's the thing that I want to point out. Rookies tend to do the same thing over and over. And as she points out here, I'll show you what she's talking about. The popular trading strategy is actually risky. And you're talking about the majority of small-time traders are buying the most basic call and put options, and they have a much lower probability of profit versus advanced strategies like option spreads. And they even quote John Foley, CEO of Options AI. Everybody in the business knows that if you're only buying out of the money calls, then you're likely going to lose money over time. So the idea is you don't want to rely on only buying calls and only buying puts. And that's why we're trading spreads, and that's why we're using technology to help us along the way. We're going to use these professional strategies here. Theta Trader is the technology that we developed, and these are pre-built option strategies. Our algo creates them. It's called Theta Trades every day. These are a couple of guys that used to fill our orders, by the way, in the trading pit, the S&P 500 options pit. They filled millions and millions of options trades for us over the years. But of course, the options pit does no longer exist. It's all electronic. But anyway, so one-touch responsive trade alerts. That's a really unique approach to really making this happen and making what would otherwise be complicated much more simplified. And you have bull, bear, flat market conditions, strategies for any market condition. You've got the automation with the risk and profit tracking. That's called the RTI. And so what we're going to do here is I'll go ahead and shut down my camera for the moment, and then we're going to jump into the demo of the software. If I can successfully switch screens. Give me just a second, folks. Okay, I think I have done so. All right, so here we go. All right, this is Theta Trader. This is the dashboard. You can see all the menu items up here. It's a little different because this is a demo account for webinars and presentations. So yours would look almost identical, but a few things wouldn't be the same up top. And we'll get to all this, but here's a trade alert. Here are the theta trades for today. Here are your open short option spreads, your open positions. You'll see all the color coding here, and I'll explain that. These are your open bought or long positions here. And then here is your account information here. This is all integrated with your trading account. And what we'll do, we'll just start with looking at some theta trades for the day. There are bullish strategies that are pre-populated. These are already pre-built for us. Bearish strategies and neutral or non-directional. And you'll notice the three markets here, the E-mini S&P 500, mini NASDAQ 100, and the mini Russell 2000. So these are the three markets involved with Theta Trader. And really the primary reason, and I'll show you a little more detail, but primarily the reason for that is liquidity and volume and depth and execution is very favorable in these markets versus other markets. All right, so why don't we start by looking at a couple non-directional strategies, and we'll look at an iron condor. That was what we looked at briefly 10 minutes ago. You can see it's pre-selected for us. So it happens to be right now there's only one theta trade available for an iron condor on the S&P 500 mini. Sometimes there might be 5, or maybe today, like for example, here's one. So the strike prices are pre-selected. This is your potential profit at expiration and your targeted annualized return. That's really to compare one trade to another. You can see, well, here's an example, by the way. There's only one condor for today, but look, there are, I don't know, what is that, 9 dragonflies available. You can see the targeted annualized return is here, allowing you to compare one trade to another. That's the value in that metric. But we'll go ahead and drill down on the condor. This is for the July end of month expiration. It has 71 days till expiration. And we'll go ahead and show you kind of the details on this trade, then how easy it would be to actually place the trade and then manage the trade. First thing I do is look at a graph. So here's where the current market is trading, and then this is the out of the money call and out of the money put that's being sold. The vertical line here is the expiration date. So this is good for context. It gives you an idea of where the market is in relation to the strikes that you're trading. You can look at just the calls, you can look at just the puts here on this table, and then here's the full trade right here. So you have all the details on the trade with the days till expiration, expiration date, put risk, call risk, commission, cash required, maximum profit potential, targeted return on cash. And these are all explained, by the way, in the glossary. You don't need to memorize all this. But one thing I want to do is point out the strikes are pre-selected for you, and the quantity already defaults to a 1 down here. So that's how it starts out, as a 1. And you're selling the 66.20 puts, and the delta is 9.8. Now remember, delta would suggest then that the probability of this option expiring out of the money is over 90%. And the delta on this call, 6.37, that suggests the probability of this call that you're selling to someone else expiring out of the money is over 93%. So that's what you might call a higher probability outcome if you choose to be the seller of these puts and calls right here. And this is the put and the call that you would then buy as a hedge or protection against the market moving against you too rapidly. And you'll notice the cash required is just over $900, your profit potential 86 some dollars. And then people sometimes, it can be different. It just depends on market conditions. Sometimes this can be quite a bit higher. And then this would make your cash required a little bit lower. But the question we often get when you trade an iron condor is, if I'm going to risk $900 here, and my maximum is, not even $90, that seems like an odd thing to do. And on the surface, yes, but keep in mind, you're looking at the deltas here of 9.8 and 6.3, and selling these options according to the delta and according to the math suggests that you have, a higher probability of these options, a much higher probability of these options expiring out of the money. So that is the key here, folks. Now, if you want to change the quantity, you just go here and it changes your cash required. We'll go ahead and do 5 of these, and we'll try to collect just over 2 points here. You could change the amount here if you wanted, and we'll go ahead and place that order, and it just shows up right here. Assumes you're filled because it's a demo account. Okay, and now what we'll do here is we'll look at an example of a dragonfly. So give it just a second here. And be sure to ask questions along the way, folks. I'm sure I'll be able to get to them at some point. And then we'll show you how the actual trade alerts work too. Those are really cool. All right, so here are the dragonflies, anywhere from 32 to 71 days till expiration. And we'll go ahead and click on this one here, past 71 days. And that's the July end of month expiration. And this is, again, the E-mini S&P 500. You can see your maximum profit potential on this trade is just over $400 and your targeted annualized return. So here's what it looks like on a graph. So you're selling 4 of the red line, you're buying 3 further out of the money calls above it, and then 1 closer to the money call below it. And then you have the same structure with the puts, the 4, 3, 1. And then you'll notice the cash required is over $4,500, almost $4,600 compared to the Condor, and that's because you're selling in increments of 4. You're selling 4 puts and 4 calls, and that's how you end up with the higher margin requirement because your risk is completely covered. And you'll notice the delta, 9.95 on the puts that are being sold and 6.37 on the calls that are being sold. So again, you've got these higher probability outcomes here where the algorithm says it likes the chances on this trade, in part because of the delta and in part because of volatility and other magic behind the curtain as well. But nonetheless, you have $4,600 cash required, which is your maximum risk, and your maximum profit potential here if you were to hold it till expiration. And these are just there really as a metric to give you some idea and understanding and some perspective on this particular trade and how to compare it to others, because the realistic outlook is you're not going to hold it till expiration. You're going to be out of this trade at some point, whether it's for a win or a loss before expiration. And that's, again, using the automation, and I'll show you how to set that up. But maybe we'll do 3 of these here, maybe how about 4 of them? Here's your cash required, your profit potential, and you're trying to collect just under 10 points, and we'll go ahead and place that order. So there, that's how it works, folks, just that simple. And what I'll do now is I want to show you, there's a great feature, it's a trade simulator up here, and I've even loaded a few here just to save time. Let me squeeze this down. And this will allow us to go backwards in time, and I think it'll help illustrate some of the distinction, and I guess you could say the differences between the Condor and the Dragonfly. So here you can go back in time and you can pick any date, and then you can kind of run a simulation. You can go all the way to the end in one jump, or you can just, step by step, or you can start over again and use the play button. So you can see here, starting on March 5, you had 37 days till expiration. And here was a iron condor for the week to April expiration on the E-mini S&P 500. And again, you're looking for this market to kind of just chop around within this range between the red lines, basically. Generally speaking, that's kind of what you're hoping for. And you can see the green RTI here. That means all systems go, do nothing. And you can see the P&L on the trade is just kind of going nowhere, which is normal because you need theta decay to work. Time has to tick away. You kind of like, at times, it's kind of like watching paint dry if the market's just going sideways, but that's good for these kind of trades. Now you see yellow, slightly elevated risk, but still do nothing. And we're dropping and dropping and dropping and dropping, and yet theta decay is still working to our favor. So if this were a directional trade and you were bullish, then of course you wouldn't be doing very well at all because you're dropped quite a bit. But because you're in a iron condor where you've actually sold this put spread and this call spread with kind of a wide berth here between the two strikes, you have a lot of room for that market to move around. And so here we are. I kind of forget exactly what happens here, but there we go. You get a blue RTI, and that means take profits. And when you get a blue RTI, you can automate this so that an order is automatically submitted on your behalf to close out this position. You do not have to screen watch and monitor your position. The algorithm will do that for you. So here's an example of a condor. And now let's compare it here to this is a recent condor. Here's a recent dragonfly. So again, the different structure, you sell 4, you buy 3 up here, and then you buy 1 closer to the money, and the same structure with the puts. So this is the same exact market movement. You just, instead of a condor, you happen to place a dragonfly. And then you end up with a profit-taking order, I think 1 day earlier. So actually, I'll show you that in more detail, but a big part of the dragonfly and the benefit of the dragonfly is it can be more robust, and it may end up being profitable when a condor is not, or it can allow you to close out the position earlier than a condor. Okay, so here's another example, and we'll go ahead and check out this condor. And again, this non-directional strategy, you're looking for it to stay between the red lines, generally speaking, but you see right out of the gate, it really falls apart and it starts going back up, and now we're higher than where we started. So it's all over the map, but you get a profit-taking order with 9 days remaining. And this is, again, where an order would be submitted on your behalf when you get this signal. So remember, on October 30, you were able to place an order and close that out. So here's a dragonfly. So instead of a condor, the week 1 November expiration, same expiration, same day. Instead of a condor, you did a dragonfly. So here's a profit-taking signal with 15 days till expiration, and you compare that to the condor. You had to hang in there until there were 9 days till expiration. So 6 days, almost a week earlier, you were able to close out this trade on the dragonfly versus the condor. And part of it is because you own this call, and the market's moving higher and higher, and it actually has a higher delta, so it's gaining in value, but you own it, so it makes the whole trade more valuable to you and allows you to close it out at a more, or when I say more valuable to you, it's more valuable in the sense that it's actually losing value more rapidly, so it allows you to buy it back for less than what you received for it in the beginning. So here's another one. Let's look at another condor versus a dragon. and it turns yellow and then it gets orange, and that just means elevated risk, but still do nothing. But look, you're getting real close to that red. It's probably going to turn. There you go. So there's your signal to turn red. Too much risk. Take your loss and move on. So you end up with a losing trade on this one. And that's the September end of month May condor. So here's the September end of month May dragonfly. So again, that same movement going higher and higher. And it's turning orange, elevated risk. And then remember before, this is where you had an exit signal to take your loss. But here it's only orange. It says not yet. And now the market actually becomes favorable to the position. It takes some pressure off. And then here you go. You get an exit, profit-taking exit signal here. So I wanted to point out that the condor has a higher potential annualized return, but there's going to be more losing trades. And the dragonfly here, you give up some of that profit potential, but at the same time, you might have fewer losing trades. It can be more robust at times, like in this example. The condor here was the losing trade, but the dragonfly was not. So we like the dragonfly quite a bit. Now I want to go back and see, why is this still? This always happens during webinars, but that's okay. I want to go back and I want to show you. You'll notice here there are bullish strategies and bearish strategies, and I even put a couple in the simulator here. So here's a bull hedge. In other words, a combination where you buy an out of the money call spread and you sell an out of the money put spread to pay for it. So yeah, here's an example where this one obviously works well. You know, big bullish move. So this spread does very well. The call spread you bought makes some good money. The put spread you sold probably going to end up expiring to someone else, worthless. So that's a combination spread. Good example of one that works. You know, you could also just do something simple like a put spread, and you've actually this is the long put spread where you buy this strike and sell this one. And just want to point out, like, say you place this trade, well, look what happened. Nothing. The market did not move in your favor, so you end up losing money on this trade. So I just want to point out, you know, we're not just kind of showing you every possible winning trade. Obviously, you can certainly have losing trades, but if we go back, let me do this here. There's this trade alert here. I'm going to show you that here. In fact, why don't I show you that in just a minute, but I want to show you the help file. So this is the glossary of terms for Theta Trader, all the detail on the color coding. So it's all here within Theta Trader. Just want to show you that's available. There's a great setup here for tutorials on navigating Theta Trader, how to place trades. These are all little 1 and 2 minute videos. And there's also an education section here. There's about 6 or 7 chapters on really what you need to know. We kind of call it our master class in futures and options, because we put this together for what we think you need to know. You don't have to spend 16 hours of training or anything. These are each probably 10 minutes, so you can get through this very quickly. And that's a really great value added part of the Theta Trader platform. And I wanted to show you how to make the automation happen. You go under the My Account, you go under Settings, and then you activate your risk manager by checking that box. And then here's what you can do, folks. Let me see if I can, there, make it a little easier to read. So the default risk manager has a 0.50 setting, but you could change it to 0.38, or you could customize it anywhere from 0.5 down to 0.25. So it's really up to you and, you know, what is suitable for your sensibilities. But if you change it to 0.25 or say 0.38, what this will do, it will trigger more losses, more frequent losing trades, but the magnitude of each loss will be smaller compared to the default level. So it's really what you find you're comfortable with. I just leave it for default, but you can change that. Then I activate the profit directive here, and that will, again, if it turns blue, place an order for you, and then you save those settings here and here. So that's how you automate it. It's that simple. And once you set it, that's it. You don't need to do anything else. Data Trader scans that account every day and places those orders for you when it reaches a blue or a red target. And then there's also, under this area here, there's something called Trade Scope, which is additional research here. And got a nice meta stock chart. So we like looking at RSI in combination with the Bollinger Bands. We try to keep it simple sometimes. And also a few other things. We look at some options related things like gamma. Don't worry about it if you're not familiar with it. But we do follow flow, option flow, and that's a big part of the market right now. And this is just a 1 or 2 page document we do every day, and it gives you a nice insight into what we're looking at. And people really like this a lot because you don't have to spend 40 minutes looking at something. Okay, now what I want to show you as well, we'll go back to home here. I just want to make sure I cover all the bases. So you'll see this active trade alert on their dashboard. You'll also see it in email and on a text alert, and I'll demo that in just a second. But if you want to go ahead and you click view, so here is a trade alert that was sent today. It's for the Dragonfly spread on the July week 3 expiration. This is the E-mini S&P 500. Has 57 days till expiration. So you're trying to collect premium on the calls and premium on these puts that you're buying and selling. And you see the vertical line there. That's your expiration date. Now, this is real key too. The quantity is pre-selected for you and your account. So anytime you get an alert, it's going to be customized and tailored to you and your account in terms of not only the quantity, but the actual alert itself. You won't receive this alert if you already have the same position or a similar position, right? So if you want to change the alert, you can. You can lower the quantity, but you cannot increase the risk. So if you get an alert for 10 of these dragonflies, then you can leave it at 10, but you cannot go higher. You could only go lower. So we'll go ahead and just say we'll do 8 of these. You can see everything you need to know: the entry price, the premium being collected, and the cash required to do that trade. Or if maybe you want to do, 1 of them or 2 of them, that's fine too. But again, these are all sized what's appropriate for you and your account in terms of the cash balance in your account and the available cash and the level of concentration risk on any one position or expiration or strike prices. So we'll go ahead. Why not? We'll just do what's preset there, and there it is. You've placed those 10 dragonfly by accepting that alert. Okay, folks, so that is a brief review of the Data Trader dashboard, and I want to show you what I think is really the best feature of all. Let's see if I can make this happen. Okay, so here's the best feature. One-touch trade alerts on your phone. So the trade alerts come to your dashboard like you saw, but they also come to your phone. And all you have to do is touch accept on your screen. Again, these alerts are integrated with your account. So our technology integrates everything for you, and you just touch accept or reject. So here's what it would look like on your phone. You'll get a text message, which is a hyperlink. You touch that link, and it takes you to an alert page. Should look very familiar to you. This happens to be for another dragonfly with 60 days till expiration. So it has the graph explaining everything. This happens to be a quantity of 5. And again, you can change that. You can go lower if you'd like, but not higher. and then everything you need to know about the entry price, how much you're collecting, how much cash is required. And this is all net of commissions and fees, everything in Theta Trader, by the way. And that's it. You touch accept, and that's all you have to do. So those alerts are really a godsend for the people that we have on board with us and the clients, and you're going to love using those alerts. So here's how to get started with Theta Trader. The software and everything that you saw today. So the theta trades, which are the pre-generated option trades, the risk thermal indicator, so that color coding with the automated risk and profit. Then you have the trade simulation. You saw me using that as well. Valued at over $3,500 on all of that together, but that also includes your one-touch integrated trade alert technology. And I can't tell you how many people actually just kind of are with Theta Trader because of just the trade alerts. That's how much they like using those alerts. And again, these are live, integrated with your account. You touch accept or reject, and that's all you have to do. And then from there, the RTI will automatically manage that position for you. So to summarize everything with Theta Trader, the alerts valued at over $8,000. But keep in mind too, we're real people. We are here on the phone talking, and we're not sending you to an AI chatbot, although I guess those can be good at times too. But we're real people, we're experienced. We'll share our screen with you and review any material that you would like. We're licensed as well. And I asked AI and looked up the cost for training, or actually, no, this was an article in Forbes, yeah, for trade coaching. Comprehensive packages are $5,000 to $15,000 for 6 to 12 months of time. Well, what we're saying is you work with us and use Theta Trader, and that's all included. And I think that's worth at least $10,000. That private coaching will be your co-pilot. We're all licensed and experienced. You'll develop a relationship with us, and we'll help you review your history, look at your goals, discuss your upcoming strategies, whatever they may be. So just to summarize and kind of put it all together, all of the trading technology with Theta Trader plus the private coaching, $18,000 value. And I don't want us to forget the trade scope, proprietary research that we do, and that futures and options class I referred to as well. Those videos are very useful, and you'll want to make sure to look at those once you become a member. So valued at over almost $2,000 with just the tutorials there. But combined, you have that yearly value of almost $3,000. So let's wrap it up, folks, and get it all together, and then we'll have a little bit of time. I want to show you one other thing, though, when we're done here with the Theta Trader membership. So you get all of this, folks, the Theta Trader, the alerts, the coaching, the research and education, valued at over $21,000. And that's the total package. Of course, that's not what we're offering that as, but we did used to offer this in person for $4,000 at live events in person with a sign-up table in the back. And this is our retail rate on the website. We're going to do much better. One-time payment. This is a lifetime Metastock discount. Thanks to Metastock for having me. But this is a lifetime membership. You pay one time, only $597. And that's the link there, cf.altivest.com/meta. Should have put like MS maybe for Metastock. But anyway, and there's our QR code. But take a screenshot of that, folks, and you've got my contact info if you have any comments or questions. But really, you don't have an excuse, because you can get, I'll point out why in just a second, but people love the idea of getting a free membership. So you have $100,000 or more, you get 100% rebate. You have a $25,000 or more, you get a 50% rebate. So take us up on that offer. And you have no excuse, is what I was going to say, because there's a 30-day guarantee. Try it. I think you're going to love it, and sign up. We'll get you the login credentials. You can start using it right away in demo mode, start receiving trade alerts, look at all the research, get familiar with the, all the rhythm and the flow of things. You have a 30-day guarantee. You sign up. If for some reason you change your mind, we'll just rebate that, refund you, and no questions asked. It's really a risk-free endeavor in terms of that membership fee. Okay, a few FAQs. How about advantages of the E-mini options? I asked AI, so lower cost, capital efficiency, defined risk on these spreads that we talked about, reduced volatility exposure, improved probability of profit. So we talked about that with collecting premium, cost-effective directional and range strategies. Again, you got those range-bound strategies, better time management, capturing theta decay, the flexibility of the payoff. So you can customize these strategies in many different ways. How about this? Easier execution and liquidity on the E-minis. Absolutely. And how about this? Multi-leg combinations and use the exchange multi-leg executions. And so what they're talking about there is this. If you're doing a dragonfly with a security on an individual stock, you have to break it up into 2 different orders. But with us, you can do it all as one order, as you saw. So this gets done at one price as one order, 6 different legs, 6 different strike prices, and that's all done at one price at one order. You don't have to leg in and leg out. It's kind of a nightmare to try to do that. And here's another advantage. You're not looking at 6,000 different securities. We're just looking at the what we feel are the best markets, these 3 indexes, to do these types of strategies with. And then you have that wide margin of error we talked about. Look at the wide margin of error here between the short puts and the short calls. And then here's how it looks on the Metastock chart. So you've really wide margin of error. Here's the current market and selling puts here and selling calls here. And this happens to be a theta trade, I think, from yesterday. So again, these are covered spreads, no unlimited risk, no margin calls. So you don't want to end up like this guy here. This girl thinks the margin call is some other woman calling him. And tax efficiency, futures and options are tax efficient. So you have the idea here with the IRS treating your gains differently versus than they do with other markets. 60% of the gains are taxed at the capital gains rate versus the 40% then taxed at your personal rate. So you get a big advantage there, favorable tax treatment. No more itemizing. You get a 1099 with your profit for the year, and that's all you need to do your taxes. But always consult your attorney or advisor. And Jeff, if you need me to cut it, I can in a few minutes. I just need a couple more minutes. Sorry, it looks like I'm going over a little.
You're fine. You got a lot of questions too. So.
Oh, okay. Okay, good.
Time for that.
Cool. Keep in mind you've got self-directed IRAs and tax advantage accounts to work with as well. We work through Equity Trust, and they'll say the setup fee will be waived if you're with Altivest. So make sure you tell them that. And this is what I wanted to kind of just touch on briefly. So as a reminder, we trade any market. I just happened to show you Theta Trader trading the E-minis and the option strategies, which is a really bread and butter for a lot of what we do. But we also trade any other commodity and futures options market. So all of the things that we're familiar with, I think this gentleman here, Stephen Hanke, distinguished professor and economist, and not to rely on just one person, but he says we're entering a commodity super cycle. You need to basically buy everything, and he's not the only one. And what is the best performing asset in the last 20 years? Well, it happens to be, here's a hint, folks, it's a commodity. It's gold. S&P not too far behind, well, actually quite a bit behind, in silver and the Russell 2000. This was, I think, as of yesterday. But if you weren't aware of that, kind of interesting to look at the perspective there. And why is that? Well, world central banks are pouring into gold and selling treasuries. Here, the light blue line is gold, and this top line are treasuries. So they are divesting from U.S. treasuries and investing in gold. And here, gold overtakes U.S. treasuries as the world's largest foreign reserve asset. And this was interesting here, largest asset in the world. I just pulled this morning here, gold. Gold is the largest asset in the world by far. NVIDIA is 5.3 trillion and gold is 31 trillion. So keep that in mind, folks, when you're thinking of commodities, and look at energy prices, obviously in the news. This commodity expert here, I listen to him often. We're going to be out of oil into the summer. So I don't know if the market's asleep or what, but we're paying attention. It says demand is above supply. We're drawing inventories, borrowing oil until we hit the bottom of the tank. We're going to be out of oil in the summer. Then we're missing 1.6 billion barrels of oil. The economic implications cannot be understated. And even looking at grains, who's paying attention to wheat? The wheat planting is the lowest level since 1919. And then here is just a little extra perspective. Here are some of the commodity cycles, from the 70s, lasting about 9 years, or what is that? Well, yeah, I guess almost 8 or 9 years. And then after the dot-com bust, commodities rallied again as China kind of began its push. And now we're starting the same thing over again. So looks like there's going to be a commodities super cycle. And one thing we're looking at is really an index of commodities, the Bloomberg Commodity Index. So it's 24 markets in one index. Here's what it looks like. Here's that graph. And it's a leading benchmark providing broad-based exposure to commodities. So this is what it looks like. You have energy 29%, grains 21%, industrial metals 16%, precious metals 19%, softs and livestock. So very interesting market, and the margin at the moment is only $800 per contract. So meanwhile, the value of the contract is about $14,000. So that's a lot of efficiency for margin efficiency. What is that? I can't quite do, like 12 to 1, 13 to 1 margin efficiency or something like that. So just wanted to point that out, folks. If you have an account with us, you can do Theta Trader, but you can do anything else, all of what I mentioned, or even other things that I didn't. So we like the idea of having alternatives in your portfolio, may improve diversification, lower portfolio risk. Even Bank of America saying commodities could dominate the rest of the decade, and they're moving away from the 60-40 portfolio. They're rotating into gold, copper, uranium, energy. And they're talking about Morgan Stanley suggesting now asset allocation into gold, Bank of America as well, so on and so forth. So again, this shift out of that 60-40 traditional portfolio and then moving into gold seems to be happening. And then here's a graph of the 60-40 portfolio back about 6-7 years ago, 6 years. These red areas are when that actual portfolio produced losses. So it's not really as protective or hedged as you might think. And we think diversifying makes a lot of sense, whether it's option strategies or even in just generally speaking in commodities. Kind of a summary of the benefits of the Theta Trader approach that I looked at. Basically, it's flexible is really the bottom line, and it's automated, so you don't have to screen watch, and you have that tax efficiency. And we're completely covered with our trading, no margin calls. And that's a lot of information. There's probably a lot of questions, so I'll leave this up. And that's the end of the presentation. And let's see if I can find out where those questions are, Jeff.
I'll just give them to you.
Oh, okay.
Don wants to know, will this work as an IRA account?
Yes, the answer is yes. We work with Equity Trust. They've got about 70 billion under management, and that's who we work with. So self-directed IRA, absolutely.
Brad wants to know, as a Canadian, what is the recommendation of a good broker to place these trades with?
Well, that's a good question. The answer is we are the brokerage firm, and you're in Canada, and I hate to say it, but you may not be able to work with us depending where you are. So please contact me, Eric, E-R-I-K, @altivest.com. And I only say that because of regulators are, they're not always the easiest to work with, and we'd love to have you, but sometimes we are not allowed to, just being in the US and Canada is, I guess, protecting the money there. They don't want to see it moving out, and other countries do the same thing.
Don said, what is the P&L record for the alerts on the last year or so?
Well, that's a very good question. And the way to handle that is to use our simulator. And you can go back in time and look at that. But we're not managing money for people formally. So we don't have any traditional formal track record of any kind, because people sometimes take the alerts and modify them or do things differently Some accept every, miss an alert here and there. So there's really no formal track record to speak of, but we would encourage you to get your credentials, get logged in. You can use the trade simulator and go back and look at the results for any trade you wanted.
Brad said he's in Ontario. Does that help?
I'll make a note of that. But if you want to contact me, I don't know offhand which provinces are, thumbs up or not.
Let's see. Oh, and just another comment. Don says, wow, options on steroids. So that's the end of the questions.
Well, that should be the title of my next presentation.
Well, there you go. Don wants a little bit of a licensing fee if you use it going forward, though.
Right. Understood. Yeah. Well, I mean, I think that I like the phrase, but it's also almost the opposite, because this is not fast-moving, high-velocity trading typically, like zero DTE stuff. So it can be boring at times, which is okay with us.
I prefer my investing to be boring.
Right.
Anyway, in any case,
yes.
cf.altavesta.com/meta is the best place to get that. It's linked in the chat.
Yep.
You can go get there, and that's it, Eric. That's the end of the questions.
Great. Well, thanks for having me.
You bet. Thank you. I'm gonna go ahead and we'll wrap this up right now. I want to say thank you. Let me go ahead and share my screen real quick. Share. Okay. There's a lot of options. Like I should spotlight me and all kinds of stuff that I haven't played with. I do want to. Don says thanks for the responses. I had to come back and watch the video because he had to leave for a minute. All right. I want to say thank you to our sponsors, Stocks and Commodities Magazine. I've talked about them incessantly. It seems like all week. So you can find out about them at traders.com. You can come join the Traders Forum at thetradersforum.com. And as a pinned comment, I've actually put in the chat now, any of the specials that we've talked about over the course of the week, you can find at metastock.com/conf promo, metastock.com/sales chat. If you have questions, give us a call too, 800-882-3040. We'll be happy to answer any Metastock related questions for you. I do want to thank the sponsors, all of the speakers that contributed to the week-long event that we did. Had some great discussions. I don't know. I wonder if you have your favorite. I know some of them really did a good job today and over the course of the week. So without further ado, let me go and just make a little bit of changes. We're going to wrap things up today. I want to say thank you for coming and being part of it. I hope this was helpful for you. I hope you learned a few things this week, and I hope you have a good Memorial Day weekend as well. So with that being said, let me go ahead and do this. Thanks for being here, everybody.
And I am the president here at Metastock. One of the biggest questions I get asked is, what is Metastock and how can it help me in my trading? Well, if you give me about 3 minutes of your time, I can show you. Metastock is an award-winning software and data package that has been helping traders for over 40 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock works across all asset classes, including stocks, futures, forex, options, crypto, and more. Metastock is designed to help you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategies should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? What are the best options to trade? And of course, how do I know where prices will go next? At the core of Metastock are its power tools. The power tools are designed to give professional grade analysis tools to private traders. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting. This allows you to see how your strategy would have performed over time. One of Metastock's most powerful tools is its charts. Metastock allows you to navigate through your charts through browser-like tabs, arrange them in ways that you see fit, or group them in layout windows that allow you to quickly access your groups of charts. And then with the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, well, you're going to love OptionScope. OptionScope puts all the critical information at your fingertips, displaying sortable, customizable, color-coded options data, even including the Greeks. You can then take this data and analyze your options with the built-in strategies with risk-reward graphs. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you'll appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has systems based off of popular strategies, things like MACD, Bollinger Bands, turtle trading, candle patterns, and many more. Metastock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. As you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to create, build, and test their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package powered by LSEG, a world leader in market data. Zenith is a comprehensive and flexible system with an extremely powerful search tool, which includes fundamental and economic data. Add on our world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 35 consecutive years. To find out more about Metastock and how it can help you in your trading, visit metastock.com or contact a product professional via phone, email, or chat.